of MetaFight. Please welcome them on stage.
Can you guys hear me? Oh, looks pretty good. Good morning, everyone. Hopefully everyone's had an opportunity to listen into some of the keynotes, a lot of insight and certainly a lot more to unpack. Welcome to today's panel discussion on the tokenization of securities, the future of investing in Web3. So RWA tokenization is the process that involves representing physical and traditional financial assets as digital tokens on a blockchain. These categories include commodities, fine art, real estate, intellectual property, and financial instruments such as stocks and bonds. It is increasingly believed that the tokenization of real-world assets will form the backbone of the next bull run and unlock transfers of trillions of dollars of value into crypto. Now, we're seeing traditional financial institutions and FinTech startups alike make significant inroads into tokenizing various assets. And on the other hand, we're seeing governments globally, and especially in Hong Kong, doing the same with introducing regulatory frameworks. In fact, that was actually one of the highlights from Christopher Hui, the Secretary of Financial Services and the Treasury of Hong Kong. The first question is then for each of you. Can each of you briefly describe how your organization is currently involved in real-world asset tokenization and the role you see it playing in the future of finance? Mimi?
Hi. Hi, everyone. My name is Mimi. I'm the co-founder and CEO for MetaFight. So our company is a technology platform that we are a STO launchpad. So basically that we're helping companies to raise funds using our platforms to digitize their assets and then launch it. So we work with a licensed crypto exchange, to make sure that they can actually raise capitals in a Web3 space.
Hello, everyone. I'm Jeff. I'm from Standard Chartered Bank. As a employee at a kind of large, globally regulated bank, tokenization, for us, I believe, is one of the biggest opportunities, as well as potentially one of the very biggest threats that could potentially disintermediate banks. And so our approach towards tokenization is really twofold. Firstly, what can we do with the technology to help us really make ourselves a lot more efficient? The end customer doesn't necessarily need to know what's going on in the background, but for us, it can be a huge source of efficiency within the bank without even touching any regulations or getting into any difficult situations with various global jurisdictions. The other opportunity, of course, is in terms of how can tokenization fundamentally change the intermediation process and distribution. One of the really kind of powerful things about large established banks is that we have tremendous distribution networks. How can the technology turbocharge that, and how can the technology potentially threaten that? And that's something that we've really been doing a lot of work on. So to give you a couple of examples of some of the work we've been doing in this space, we have a very large trade finance business. We have a big presence in emerging markets, and trade finance is something that we have done for a very long time. And there is a huge funding gap, holistically, many trillions of dollars with respect to trade finance. And the process today is a very kind of cumbersome process, very manual, very paper-oriented. We've actually done a proof of concept that we've called Project Guardian, with various parties with the support of the Singapore Monetary Authority to tokenize real-world trade assets, which has actually gone very well. Now, there's still a long way to go before a lot of these experiments kind of reach critical mass scale. But change is an interesting thing. It can feel like nothing's really happening, and then suddenly you can tip over a inflection point where suddenly things seem to proceed very fast. And I personally am really excited about what the next few years can bring, because I think that with all of the innovation and all of the energy that really has been let's be honest, not really led by the banking industry to date, and really led by crypto-native firms, startups, companies like Animoca. Its persistence means that we are now really seeing a critical mass of regulators, large asset managers, and traditional finance clients that we are key partners for, really start to come to market with some really interesting proof of concepts that I personally feel have a real opportunity to scale. And I think that if banks don't step into this space, our clients will find partners to do this with, and they won't be banks. So I think it's on us as banks to rise to the opportunity and hopefully enable this technology to transform many of the things that we kind of take for granted today.
Thank you. Josh?
Yeah, hey guys, I'm Josh from Animoca Brands. We're one of the largest Web3 companies in the world, probably, with a portfolio of over 400 investments, 20 or so subsidiaries, including well-known names like Sandbox. So the way we look at tokenizations is a little bit different from traditional finance firms, and we look at tokenization beyond simply real-world financial assets. What we're really trying to tokenize as part of our mandate is experiences, consumer-facing sort of experiences and brandings and games and content. And when we talk about tokenization, that is essentially putting those kind of content on the blockchain, creating asset out of it, and that's the part of tokenization, right? So happy to kind of share and elaborate more about this throughout today.
Thank you. Mimi, a question for you. From the perspective of an STO launchpad, what do you believe are the most significant advantages of tokenizing real-world assets, and what kinds of assets do you believe are most suitable for this?
Like today, that in the FinTech week, we hear a lot of things about like the bonds or equities. But I think that one of the biggest missing pieces is really for small and medium-sized or enterprise to raise capitals. We're talking about 99% of the economy is driven by this SME, but usually that in the last 2 years with the COVID, then it's very difficult for them to raise funds with the VC, let alone with traditional banks. So there's a big gap that we see that over 40% of them, they're not able to raise funds, and less than 5% actually know how to navigate with the VC scene. So we actually want to see that how can we actually provide the service for the small and medium-sized enterprises, but also that imagines that when Facebook first launched, that if you are the first 100,000 colleagues in Harvard or Stanford with Mark, and then instead of contributing to this 800 billion companies, you can actually invest it in that companies in the beginning. And then I think that the tokenizations is able to democratize on the capital fundraisings for enterprises. Yeah.
Thank you. Jeff, you talked about a lot about Standard Chartered, embracing tokenization of securities, right? I was going to ask you around just challenges, but actually one specific question for you is, do you believe in the tokenization for securities for traditional financial institutions? Would that live on the public blockchain? Would that need to live on a permissioned private blockchain?
Sure. Look, I think there have been lots of experiments to date on both public and private blockchains. Where are banks going to go? To be honest, that's going to be driven by two things. Where do our customers want us to be? And where will our regulators allow us to play? Right? I mean, we are very, very regulated. And so, I'm not going to make any presumption about where the end state is going to be. I personally, purely as a personal opinion, feel that the power of public blockchains and the scale of distribution that they allow is incredibly powerful. But that in and of itself is not enough. I think we're going to have to see that be married with other innovations, for example, digital identity, et cetera, which will allow us to obviously maintain the security of the global financial system. And we obviously, as a licensed regulated bank, have a very important duty and role to maintain the integrity of that financial system. But stepping back from that and talking about tokenization a bit more generically, I think there are kind of two two issues that I see with tokenization today and the approach. The first is, how big is the problem that we're trying to solve with tokenization? Right? I mean, we have extremely large, extremely deep and liquid traditional securities markets today. So where is the benefit, really, of tokenizing? Shaving a basis point off the cost of the transaction chain, could be very meaningful in certain markets, but in a lot of our markets really isn't, right? And I think that's where tokenization of non-traditional securities becomes very interesting, because of transaction costs. I mean, I've bought and sold property in my life, and that is a very painful and very expensive experience. That's something, for example, that I could see technology being really transformative. The other aspect of tokenization that I think is a little bit problematic in terms of the way people talk about it is, I think, this conflation of tokenization with liquidity, right? Just because you tokenize something does not equal necessarily more demand in and of itself, right? And this is where, for example, the tokenization of loans and distribution of loans direct to consumer, I think, is a very appealing narrative, but I think one that runs into a lot of problems very quickly. Forget blockchain for a second, right? There have been already many platforms for direct lending in the past. Many of them, pretty much all of them, have failed to scale, and the few that have subsequently gone bust, right? So there is still clearly value, number one, in having trusted institutions, I believe. And number two, most direct consumers don't really want to spend their time being credit analysts. I certainly don't, as a direct consumer, and I work in finance. So I think there's I personally feel as though that there are going to be new asset classes out there which have the potential to really scale and be very transformative. As a bank, we try to play a big role in sustainability, and we are trying to play a pivotal role in growing and developing the market for carbon credits, for example. I personally feel that one of the areas where tokenization could really take off is in a completely new asset class. So rather than taking a very established asset class where there's a very established market structure already, maybe where the growth is really going to come is in something which is completely new, but which will also have kind of global financial market applicability.
Thank you for that. Josh, Animoca Brands has been at the forefront of digital assets and gaming. How do you see the convergence of gaming, NFTs, and real-world assets, tokenizations shaping the future of digital economies?
Yeah, thanks. So I completely agree with what Jeff said in terms of liquidity, right? So at the very top level, why do we need to tokenize? Is it to seek for more liquidity? Is it to seek for more capital raising? For most traditional assets, as Jeff mentioned, bond market, equity market, FX market, extremely liquid. Even the Hong Kong property market is very liquid. So what is the point of actually tokenizing it, breaking it down to smaller chunks? You're not going to get more liquidity. You're not going to get more trading versus what's already exists in the traditional market structure. So from Animoca perspective, we don't approach it from that lens, right? When we're looking at it, again, like what Jeff mentioned, we're trying to create new market structures, new asset classes. And we're trying to, as I mentioned before, tokenize consumer experiences, consumer content. So I'll give a couple examples. We have a company called TinyTap. It's basically a Coursera for kids. It's a platform where educators and teachers go on the website, create a course for kids. Kids and their parents and teachers log on and pay a subscription to access the course content. Since acquiring the company, which is a Web2 company, we have essentially made it into a Web3 layer via a platform called Open Campus, where we essentially have tokenized the content of the educators. So the educators will go on to the platform, they'll create a course, right? And we have converted the course into NFTs, right? Essentially tokenizing content. The NFTs are listed on the blockchain with the price, with the value, with trading, with liquidity, right? So this is the way for us to, one, help the educators unlock and monetize the content, and two, to Jeff's point, creating a new asset class with new market structures. So this is one example. It's already pretty mature. I mean, people can kind of check it out if you want to buy a educator, NFT. Another example that we're currently working on is this thing called Mochaverse, which is another NFT project that Animoca is pushing out. And in this example, I mean, we haven't publicly announced all the details yet, but essentially the thing we're tokenizing here is digital identity, right? If people who are really into Web3, they see the recent craze FinTech, where they're essentially tokenizing people's credibility, people's social standing. So these are all things that you can tokenize and create an asset class and create a market structure around it. Now, obviously, we're still at the very beginning stage of all that tokenization, especially with regulations and how that KYC is going to work, and are there any sort of liquidity and flow that you don't want. So very early stage, but we can already see that there's actual applications and use cases for the power of tokenization.
That makes sense. Thank you. You guys mentioned that tokenization of securities will, and among other things, will represent eventually a new asset class, right? And obviously, it sounds like you guys have done a number of things already with that. What do you see, especially in Hong Kong, what are the main regulatory challenges you see in tokenizing real-world assets? Maybe for you first.
For us, that because we work with different licensed crypto exchange, so we see that the development in Switzerland, Dubai, and also Singapore already got a legal framework. And then so I think that this morning that we hear from the government's authority talking about that they will issue the legal framework for Hong Kong in 2024, and I think that's very promising. And we look forward to seeing that how can we actually work with the license exchange in Hong Kong as well as the government to see that facilitate this process. So.
Okay, so the regulation question, I think, we need to kind of contextualize what is regulation there for, right? I mean, regulation, I believe, is there to stop the worst human instincts from taking over, broadly speaking, right? And in an incredibly kind of globalized, connected economy, where you have literally everybody, around the world being able to interact with each other, increasingly in relatively anonymous ways. What are the ways in which this could go wrong? I mean, we don't even have to think about financial markets, right? We can think about, the growth of social media. And obviously, it's taken, 10, 15 years for us to understand what are the real kind of left tail behaviors that we need to try and prevent. I think the regulators, we would love, I'd love to, I'm sure I and many of our peers, can very easily sit up here and say, we'd love to see the regulators move faster and do more. I think also that we need to be realistic, right? The financial market regulation itself is still a moving target and has been the product of hundreds of years of observation and refinement. I think we need to be realistic about the pace of how regulation is going to develop in this space, because I think there are many things that we don't know about how behaviors are going to change as a function of the scaling up of this technology. We can make some educated guesses, right? But you've got to remember that once you put a regulation in, it's quite hard to unwind it, right? So you've kind of got to walk that tightrope. And so therefore, from my perspective, I think it is incumbent upon us as a bank, and and I would hope my peers and partners here, as well as people who are trying to be at the forefront of this space, to really be driving that dialogue with the regulators about what works and what doesn't. Traditionally banks have had, certainly since the financial crisis anyway, sometimes quite an antagonistic relationship with regulators. And for good reason, right? Banks, I think, for the most part, are trusted institutions, but not all banks have always done a great job in maintaining that. So I think there is a kind of change in behavior required there to ensure that we iterate towards the right place so that we can adopt this technology responsibly going forward.
Thank you. I
think in terms of regulation, again, to echo Jeff's point, what is the point of regulation? I think the point is to agree on certain rules to reach certain targets. Now, it's very clear in Hong Kong and a lot of different regions that the government, the industries are realizing the power of Web3, power of crypto, and they do want to move towards a world where blockchain technology is a major part of it. Now, the challenge of regulated technology is always that technology is very fast moving. And hence, from a rulemaking perspective, it's very difficult to kind of be on top of everything in real time. Therefore, regulation is just a process of trial and error over time to figure out, okay, this works 99% of the time. There's still 1% of the time it doesn't work, right? So I think over the course of the past, say 5 years or so, you do have regulations that has come and have regulation has gone by. And it's all a process of trying to triangulate what is the best rulemaking, what is the right regime to allow this industry to flourish, right? And Hong Kong has done a couple of these things, right? Hong Kong was pretty adamant on, and restrictive in terms of crypto many years ago, and several players did leave, the city, which was actually a very positive outcome for Hong Kong. And now Hong Kong, after having done a lot more work, understanding the market structure a lot more, now is welcoming Web3 and trying to encourage players to come back in. And again, I think it's the right move, right? So regulation, I think, is always going to be a little bit, going by the volatility and the growth of this industry. And of course, we all know that crypto industry, Web3 industry is very, very volatile. And hence, I expect that regulation will continue to be a moving target and be, continue to be a trial and error. And like Jeff mentioned, as part of us over here today, we have to work with regulators to ensure that, the bad actors are out, the good actors are in, and then we're all here dedicated and building for the future of technology.
That makes sense. Where do you see the real world assets tokenization going in the next 5 years? Globally and in Hong Kong, and what emerging trends do you believe that's here to stay?
Wow, that's a crystal
So a bit of a
ball
prediction
question.
here.
I think that this year I see that a lot more promising, and also it's a lot more progress as well. I think that for us to seeing that really mass adoptions, actually I think that having a stronger legal framework and compliance actually is better. Because it's actually the other way around, that in a couple of years ago with the ICO, then you see a lot of wild west. But in order to build the trust, and I find that we've seen that the government is moving with more perspective and also framework, and also more educations. And so I see that in the 5 years, then with some studies that they say that it's about 20% growth every year. But I would assume that this is actually able to create different opportunities for people, not just in Hong Kong, but globally.
So I think over the next 5 years, I think probably the most tangible, foreseeable step that we're going to take as an industry is really around the tokenization or perhaps digital issuance of traditional money, probably. I think if we look at what's going on in Europe, what's going on in the UK, what's going on around various countries in the Middle East and Asia, we are probably going to have a mixture of not only CBDCs, but also essentially tokenized commercial money of some sort. And that's probably, that in and of itself is kind of academically interesting. But where I think we're going to really start seeing the benefits is this kind of long-held goal of kind of cross-border payments and bringing efficiency to that. I know on some level it's kind of super boring, but it's actually kind of really impactful. Whether it be the cross-border payments that foreign domestic workers have to make in terms of remittances, whether that be liquidity and treasury management for large corporates or institutional investors. I think that's going to have a really, really kind of big impact in terms of how we think about the velocity of money in and of itself. Now, what it then drives in terms of other activity beyond that, I don't know. What I am reasonably clear on, however, is that certainly from my position, working from within the confines of a bank anyway, is that, look, we're not going to be at the bleeding edge of this innovation, right? I don't think our regulators want us to be, and I don't think the vast majority of our clients want us to be there either. So we're going to be very much looking on to people like Mimi and to people like Josh, to show us the way in terms of where the technology can take us, and where we think there's going to be scale. We're going to step in and provide hopefully good infrastructure and act as a kind of trusted custodian and partner in that ecosystem in the future.
Thank you. Josh?
Yeah, so in the future, I think tokenization will blur the lines between traditional financial assets and new assets that tokenization has a power to create. And some of the new assets I already gave examples before. And the fact of using tokenization and putting these sort of new assets on the blockchain essentially is giving them liquidity. And when an asset has liquidity, then it becomes fungible with any other assets, right? So I think what's going to happen with tokenization is that the line between a financial asset, traditional financial assets right now is very liquid, versus some asset that's not very liquid. That line is going to be blurred to the point where it doesn't exist, and that liquidity will flow between financial assets and non-financial assets, and that's what tokenization may do to improve, right? So I'll give an example. I don't know if you guys play a lot of games, but there's a very famous game, CS:GO, and the skins for that game, like the gun skin, like cosmetic items, purely cosmetic items, this market is extremely liquid. People buy and sell these gaming items on the regular, and people actually make a lot of money trading these things. Another example, Pokemon cards, right? This is an asset. Is it a financial asset? I don't know, but it's definitely an asset. There's value to it. People trade it a lot. Now, what you can do with tokenization is essentially put those assets on the blockchain, right? And once it's on the blockchain, it is connected to the rest of the financial assets on the blockchain, including perhaps in the future CBDCs, like Jeff mentioned, and other sort of stable coins. Hong Kong is rolling out $100 stable coins as well. So once you create that connectivity via liquidity on the blockchain, then there isn't a difference between tokenized asset and real world assets. And if we kind of take that one step further, then there is limitless in terms of possibilities of what becomes an asset, because anything could be tokenized, right? Like I could tokenize this talk right now. Like afterwards, we can record it, tokenize it, sell it as an NFT. So I think the possibilities are endless, but what this will really do is to improve liquidity over the entire asset space for tokenization.
Thank you for that. And with that wraps up our session for today. Thank you for the panel speakers, and hopefully it's been a fruitful conversation for everyone. Thank you.
Thank you.
Thank you very much to our speakers, moderator Tom. Thank you for leading so great conversations. And we're going to continue on digital assets. How do traditional service providers grab a seat at the table? And for this one, to lead the conversation, I would like to introduce first our moderator, Adrien Clevernon. He's an associate director at PwC. He will be talking to Scott Lucas, managing director and head of markets at JP Morgan & Co., together with Roger Baston. He is the executive vice president and head of digital assets at Franklin Templeton. We also have Alex Manson. He is the head of SC Ventures at Standard Chartered. And last but not least, we also have John O'Neill, managing director and also head of digital assets, global banking and markets at HSBC. So please welcome them on stage.
Thank you. Good morning, everybody. So this panel is about how financial institutions, aka TradFi, are now engaging in the digital asset space. And over the last few years, you have seen them initially experimenting and working with digital assets in the lab. But they have now matured to the point where these proofs of concept have now been integrated into large organizations. And so this brings along a host of operational, regulatory, and technical challenges, as well as fascinating innovations our speaker will have a first-hand account of. So I'm happy to have with me today leaders in the field who actually have their sleeves rolled up doing this stuff. And on this note, I will leave them each introduce themselves. John?
Hi, Adrian. Hi, everybody. Thanks for making the session. I'm John O'Neill, HSBC. I'm the head of digital asset strategy at HSBC.
Hi, good day, everyone. My name is Scott Lucas. I'm at JP Morgan, and I sit in our markets business and lead how we are building out products to trade on blockchain.
Hi, I'm Roger Baston. I'm head of digital assets at Franklin Templeton. That's kind of like saying you're head of the internet department 25 years ago. So lots of really interesting things to move forward with in digital assets. We're glad to be here.
And I'm Alex Manson, SC Ventures, which we set up 5 years ago and still here.
Thank you very much. So this is not a table, but we definitely are seated here. And I think we can all claim our seat to the table. So John, HSBC has created the digital asset platform, Orion. And what are the lessons that you have learned when creating such a platform? And how do they tell us about the positioning of banks in that space?
Yeah, thanks, Adrian. So very happy to share the lessons of our offer, and I'm sure the other panelists will speak for their offers as well. But I think maybe I could just start off by saying, in thinking about the title of this panel, how do we claim our seat at the table? I think, speaking from a HSBC perspective and probably everyone's perspective, there's a very clear reason why we want to be at this table and we are at this table today. And I think that's simply the same reasons we're at the table for conventional markets. So it's about bringing liquidity, connecting customers, and associated with that connectivity. It's about bringing and forming markets. And certainly in creating our platform, HSBC Orion, which you referred to, Adrian, is, I would say, there's three principal lessons in order to get a digital assets market going and to get participants onboarded onto the platform. I think the first one, and this is really obvious, but bears repeating, is you need a really clear approach towards law and regulation. The trick with getting a digital asset platform is not so much the technology. So the technology is important, of course, but it's really about marrying the technology and the law and regulation together. And specifically, I think what it's about is marrying token transfer to title transfer. When market participants are on platforms, they're not there to buy tokens. They're there to buy bonds or funds or other assets. So I think bringing those two things together is important. I think the other lesson that we learned, and I know the other firms will have views on this, is having the right approach towards digital money. Because clearly when you buy digital assets, you're paying, like other assets, for it with money. All of these are DVP transactions, delivery versus payment transactions. And so you have to have the right approach towards different forms of digital money, and we can talk about that. And then I think the third one that's always top of mind for us is the approach towards public and private networks. And people get very passionate about one or the other. Should we be using public networks or private networks? Some people will say private networks are the only ones that are safe today. Others will say this subject isn't worthwhile if you're not on public networks. We have a more nuanced approach. We think private networks are really appropriate for 2023, but the way we've built our platform is that it has both private and public connectivity. And Adrian, I think we're seeing a real maturing of the debate on the use of public networks. There'll be more regulation and control on those so they can be used safely, and that would be the third theme that I would bring out. The last thing I'll say, and I'm probably going a bit over my time, but I think to be really attractive, you need to issue native digital assets. You need to create assets on a blockchain and move them in a manner where token and title transfer are aligned. But there's also a place for tokenizing real-world assets where people don't want native assets, they want physical assets. And we've just announced overnight that we have a new offer in to complement Orion, where we're tokenizing physical gold. So for us, the theme is creating natively digital assets, connecting customers, but also having an eye towards new markets and tokenizing physical markets.
Thanks for that, John. So, Scott, so 15 years ago, almost to the day, the Bitcoin white paper was published. And it was all about peer-to-peer electronic transfers, trustless. So here we are now at this stage. And I think what Satoshi was a thing at that time was decentralization at a max. What JP has done in the space is different. And I want to have your view of how what you're doing actually has its role to play in digital assets. And it's not decentralized as the purists wanted it to be, but it may be a more pragmatic approach to how things can be done in traditional finance.
Sure, thanks. Yeah, and I think you're right. Like the financial markets aren't going to leap from one structure to another one. There'll be an evolution of that over time. And I find the word trustless interesting because trust is a very human thing. Technology can't necessarily provide trust. It can provide a framework in which you eventually trust it, but you don't just generate trust out of a technology platform. So I think when you look at that and you apply that to people, clients of ours in the sort of general market, it's about taking risk. And if you're comfortable taking that risk, you're going to take that risk on a bunch of different metrics. Some of them are about the type of company that you're investing in, some of the size of your investment, some of them about how that's maintained in custody, to how liquidity is available on that, what the market risk is associated with it. But it's all about taking a risk approach to trading and liquidity. And that doesn't just mean that I've now got a new technology. It means I have to understand the legal structure that technology aligns itself to. I have to understand the protection of those assets and the reporting of those assets and the fact that they're associated tax payments and transferability or all this, and that takes time to build that capability within a scalable market. So we're not going to leap from a structure we've got today to a whole new decentralized structure. Things will evolve over time, and there's opportunity for that. I think the way that we're looking at it is similar to other participants. It's like, look, let's start with what we know and what we get people to take risk on today. Let's see how we can make that, like we do with capital markets globally and have always done with capital markets globally. Let's evolve that to be more efficient, more liquid, reach a wider market, and be able to be traded in a more effective way and bring the pricing compression down so we're offering a better service. Let's do that, and then let's figure out, and the market will realize which bits of the value chain are less valuable in that new structure. So what bits we can take out and which bits could be maybe distributed more effectively. It's very much an evolutionary approach. So do something, get it moving, market will respond, then we'll do the next thing. And that's certainly, with the Onyx platform that we've built internally, with the trading products we've put on that, with the partnership that we've tried to work with other participants on, the investments we've made in companies like HQLX and Onera. That's really about saying, let's start where we are now, build a sort of the next phase of how things can trade in the market, and then evolve it from there. And the good news is, we'll do that, others will do something else, and that sort of federated market approach of trying different things and doing things in a different way will start to get real progress, because the market will have different opportunities to take risk in different ways.
Thank you for that. So Roger, we had a really insightful conversation on macro, on the macro trends of higher interest rates, and how that actually explains why pure stablecoins, which are more native to crypto, may have a lesser role to play in nowadays high interest rate environments, and how Franklin may actually is providing more yield to its customers. Can you tell us more about that?
Yeah, thanks for that question. Franklin Templeton's journey was just paying attention to words. Distributed ledger technologies, ledger, financial services, asset management is full of ledgers, right? And so we wanted to make sure that we were, integrating newer technologies into the customer experience. And the place where we started on that was specifically in something a pure, plain vanilla, fairly conservative money fund construct. We figured if we could integrate blockchain technologies into delivering that customer experience for a money fund, a US government money fund, that kind of tokenization platform would be able to be applied to our broader 1.5 trillion assets that we have as an asset manager. But what we have seen really in these early stages of blockchain adoption, if there is a killer app of any kind, it has been stablecoins themselves. Until there is a proliferation of central bank digital currencies all over the planet, stablecoins have proven to be the on and off ramps to get into digital assets. And when looking at that, those have high utility, but one thing that they lack is actually providing some sort of economic benefit. Money funds, there's literally trillions of dollars all over the planet Earth in money fund constructs. They're segregated, collateralized, highly regulated investment vehicles, and as such, we have developed a product, Benji, which is a tokenized money fund that we think can sit side by side, complementary, and then sometimes as a substitute for the stablecoin construct, which does not offer that income. And clearly in the past several years, the global macroeconomic environment has changed. Monetary policies have been tightened. Short-term rates are higher. And we're just hoping to provide in this new ecosystem that we're talking about developing going forward, just a utility, a money fund construct where investors who use that particular tokenized asset can benefit from the income earned. We are also aware that money funds have been used in the transactional economy for a long period of time. Check writing, debit card capabilities have existed for literally decades on money funds. And so we do see the possibilities that exchange of value using a yield-bearing instrument, a money fund, woven into the overall transaction and payments ecosystem is real possibilities with this distributed ledger blockchain environment that we're all building.
And maybe a couple words on KYC. This is also, I think, very important to understand how all of you actually are playing in a field of pure KYC, institutional grade compliance.
For 75 years, Franklin Templeton has built a business operating, collaborating, cooperating with regulators. Everything we do is in a securities-related transaction, and as such, we need to know who all the customers are, whether we do that individually as the customers come to us, or we use great business partners like these gentlemen represent with their firms to be able to do that. So yes, it's a regulatory construct bringing what is pretty plain vanilla strategy, but into the new Web 3.0 world for application for businesses and individuals alike.
I can just add to those comments on KYC. I think KYC is obviously about identity. And as Scott has said, in current markets, and as we start creating assets in digital markets and trading those assets, it's natural that we would use trusted approaches to KYC and identity. And certainly the way we've done that is via custody connectivity, not just through HSBC custody, but other banks' custody platforms as well. So that works for today. But I think we're all very aware that there's no reason that the current set of market participants have to be the set of market participants for the future, right? We're open to new entrants, new actors, bringing liquidity to markets, and therefore new approaches to identity, as long as those are secure and safe, are really welcome. And I think that's a significant area of research and development as well.
Thanks for that. So Alex, I think you may have a slightly different angle here at this table. There is so Standard Chartered has two products. One is in digital assets. More? Maybe more, but at least two big. One is Zodia Custody. Yeah. The other is Zodia Markets. Zodia Markets, it has been built with OSL, and Custody with Northern Trust. So OSL is a native crypto player, right? Uh-huh. In a way, not you, but your Standard Chartered has brought in native crypto to the table. So in a way, I'd like to have your view on two things. How partnerships with digital asset players work, and second, how you are building an institutional grade infrastructure with custody, and that's with Zodia Custody.
Great, thank you. Great question. First, thank you. Products coming. It felt a little lonely for a while, so couldn't be more thrilled that institutional grade products are coming. And do I have a really different perspective? Maybe not, because we're all on this panel and all at the table. I'll answer your question with a table analogy, which is I can think of a lot of a noisy table with lots of kids at the table, but you know, this is the table where the children table, the one where they only serve orange juice. And perhaps they did other things, and some of this went horribly wrong. And so there's probably another table, which is a table where I care about conduct of business, I care about suitability, I care about technological resilience, I care about a whole bunch of things, including my relationships with regulators and, very importantly, customers and society at large. That is an adult table. And we've been sitting there all along. And I expect that we will be joined by some of the children as they're well-behaved and importantly grow up, and that we end up with an institutional grade offering of digital assets, which will be one on the same table and provide a robust and vibrant market for a new asset class. The second point I make is an element of conviction that the asset class is here to stay. Provocatively, I would say, historically banks, if you had a holding statement 5 years ago around cryptocurrencies, the holding statement would say something like, we will monitor the development of this market and work very closely with absolutely everyone to understand what's going on, meaning I will not do anything, trust me. And understandably, because lack of clarity around a lot of things, and so I get that. But the reality is the largest asset class within digital assets today is cryptocurrencies. I predict it will not be in 5 years. I predict other asset classes will be more important. Hence the importance of what we're talking about in tokenization, specifically of funds or securities or other things. But for the time being, it's cryptocurrencies. I'm a financial institution, I'm in the service business. If my client care, then I should care. Mm-hmm. And so going back to the client and serving people the way they want to be served, there is an element of what are we doing to deliver cryptocurrencies, however, in a safe and robust environment. And that's where we may have deferred, building ventures versus established financial institutions, which is started thinking about this, looked around us, okay, maybe we should trade the asset class for a start. So if I trade it, I need to be long. If I'm long, then I need to put it somewhere. If I put it, where do I put it? And then we looked around and we found a bunch of startups, very great people, some of them very well funded, but all of which, 100%, and I would argue that's still the case to a very large extent, were amalgamating custody with settlement, with brokerage and exchange, with wallets, with everything. Unacceptable. That is a setup which lends itself to what we've witnessed recently. And so we parked the idea of trading, which we have dusted off in the meantime, and started building an institutional grade infrastructure, beginning with custody. That is Zodiac Custody you just referred to. By the way, we just announced the entry of Zodiac Custody in the Hong Kong market this week. And then we went on and built Zodiac Markets, which is a brokerage and exchange platform, again at institutional grade. And yes, there's a number of other things, including tokenization of everything in our pipeline. And I expect that one piece of infrastructure at a time, we're building a robust setup for an asset class which clients want to have and is here to stay.
Any of you want to react?
I would like to react because I think
I can feel that some
I think what we're speaking about is, look across this table, the type of global organizations that have literally decades, if not centuries, of brands of trust and operating in the financial markets and the capital markets, super important utility. And we're all talking about integrating these network opportunities, whether they're private networks or whether they're public networks. But the idea that we're integrating them and beginning to proliferate really points to one of the convictions that Franklin Templeton has is, we talk about digital assets, there's a number of things that represents, whether it's central bank digital currencies or tokenized already funds, vehicles. But the fact that these networks are growing, proliferating, and to the extent that networks have tokenomics that represent value, we believe that's a legitimate asset class. And as a pure play asset manager, we are now offering advice about diversified portfolios of these crypto assets, these cryptocurrencies, again, with a filter of research that the assets are real, there's real capital growth opportunities, there's real proliferation, and so that has been a key part of what we've been doing besides building infrastructure. It's building advice so great people like attendees here can get diversified portfolios of cryptocurrencies.
Yeah, I completely agree with Roger, and I think for me, certainly it goes back to what I said at the beginning. So it's about liquidity and why do markets exist and what the utility of different products. We've started with fixed income. Digital bonds exist for the same reason conventional bonds exist, right? To raise funding, to pay coupons, to have duration, all the things we know about bonds. I mentioned gold. Scott mentioned the different products you've done on Onyx, money market funds, etc. Those are all current products. In this digital world, they exist for the same reasons that they exist. They're just done, we believe, in a better way. I think the exciting thing, and it's really important to be open-minded, like, as per Alex's comments and Roger's comments, is the exciting thing here is as we transform existing markets, we make them more efficient. That's good in terms of processing, but the really exciting thing is that market structure can change, right? New actors can come in. We can fundamentally trade potentially in more radical ways. But also, we can add new products into markets which aren't financialized at the moment. So products which just don't trade in a market environment. This technology can bring them into this world. And we've touched on central bank digital currencies, crypto. If we think of those different money types, and certainly we're very engaged on central bank digital currencies, we're open towards tokenized deposits, we're doing work there as well as our other institutions here today. But what we're really talking about is what is the utility of those different money types, and we probably don't have enough time to debate that in the next few minutes, but that's the interesting thing, I think.
It's a very important point. What's the use case? What's the utility? And I wanted to echo your point around advisory and making that curation sort of available to the public at large. Early days of custody, a lot of institutional even customers would tell us, why I don't really need another custodian with a few coins. I have 55 coins on XYZ exchange I won't name, and they'll do the custodies too. And our answer was, triple leverage on 55 dodgy coins isn't exactly my idea of sophistication. However, one legitimate coin at a time, which will onboard properly, and with the right mindset of suitability, curation of the right products, absolutely it should be an asset class, and it should be a legitimate portion of anyone's portfolio, beginning with cryptocurrencies and everything else too. And so there is an element of making it available, but making it available the right way, and then ultimately building the infrastructure so indeed we can trade it and we can settle it, and it becomes seamless for everyone involved in the industry.
Can I just pick up on the making it available point? I think that's part of the problem of this space at the moment is, and it came up at breakfast this morning, I was talking to someone about, there's a lot of product supply, but the demand curve is limited, and that's for good reason. It goes back to the point before, and if I create a whole bunch of products, but they're on a small island, and actually there'll be some utility there, and there'll be some utility on another platform, and there'll be some utility on another platform. I think the market has got some work to do to figure out how we broaden that sort of availability of those assets, because if you're going to generate supply, then the demand side has to be there. The demand side is going to be driven off the fact that it's an adequate, preferably better, but certainly cheaper or more economically reasonable product to invest in the one that exists today. So some of those will be new assets. I don't typically work in the crypto space, but I appreciate that there's some new assets on that side. Some of them will be better ways, more economic, ways, more liquid ways of trading existing types of assets. Some of them are just a replacement of the settlement mechanism. We've put nearly $1 trillion through our repo platform over the last couple of years. So there's ways that this can happen, but it's very much a case of there's a lot of push. We've got a problem to solve in connectivity, the ability to access that, and realize the economics on the demand side in order for this to happen, because we're kind of at the table. And so we now need to then realize the value of that.
But shout out to Hong Kong, because Hong Kong has some foresight about these things. Super foundational things like custody and allowing the banks to pursue custody of digital assets is hugely important, foundational for the adoption, for the institutional demand that needs to come. They need those services to happen. So shout out here to Hong Kong for being able to create an environment that allows these opportunities to begin to proliferate.
Great. Thank you, Hong Kong. Glad to be here.
I'd definitely shout out to Hong Kong, but I think maybe a really great point to end on is what Scott was referring to there, which is, we have 3 banks on this platform, we have 1 customer. We're all competing for your business, but we're also cooperating as we compete, and it's about creating interoperability, it's about creating more liquidity in markets, and all our platforms, we're already talking about the ways we can connect. That's what's going to be really important to bring the liquidity and serve customers, I think.
Sure.
Well, I had many more questions, but I won't be able to ask them, I'm sorry. But thank you very much for being at the table today, and hopefully you enjoyed this panel. Thank you.
Thank you, Adrian. Thanks.
Thank you. Merci beaucoup, Adrian, and all our wonderful panelists. Thank you for being here. And from digital assets, we're going to go to trade. How do we revolutionize trade and create innovation in the global markets? Salut. Well, our next speakers are going to share their insights in this very special moment. I would like to introduce our moderator, Adam Harper. He is the founding and managing director of Ashbury Communications. He will be speaking in conversation with Shane Aykroyd, president of Digital Assets, Hector Lau, managing director of Hong Kong Exchanges and Clearing Limited, Caroline Chan, she's the head of Hong Kong and CEO of Citi Trust at Citibank Securities Services, and Wiki Liu, strategy director at Swift. So please welcome them on stage.
All right, well, good afternoon, everybody. Thank you very much for being here. I'm Adam Harper. I'm the founder and managing director of Ashbury, as the MC said. And I wanted to welcome all of you to our panel this afternoon. We are going to be talking about revolutionizing trade or trading and navigating accelerated settlements and innovation in global markets. And we've got a great panel of expert speakers to provide their opinions on this. And I'm going to ask them to introduce themselves, starting with Hector.
Sure. Thank you, Adam. Thank you. Thanks for having us. My name is Hector Lau from Hong Kong Exchange, Managing Director responsible for the clearing operations business.
Hi, everyone. Thanks for joining us today. My name's Caroline Chan, and I'm Head of Security Services for Citi Hong Kong.
Hi, Shane Aykroyd, President of Digital Asset. We're a technology firm helping our customers build applications on blockchain, and earlier this year we introduced our own chain, Canton.
I'm Wiki Liu. I work in Swift, and my job is to collaborating with the industry to define our capital market strategies.
All right, thank you all very much. We don't have a lot of time for this panel, so we're going to be quite fast and furious today and get straight into it. Hector, Hong Kong is really establishing a leadership position in terms of accelerating settlement times with the work you've been doing with Synapse. But could you take a step back, just briefly introduce us to Northbound Stock Connect, the challenge presented by T+0 settlement for mainland stocks. What is Synapse and how is it helping to meet that challenge?
Sure, most happy to. I think if you think about the Stock Connect program, many of you would have known that has been a great success. And it's been around for 9 years now. Actually, next year will be its 10 years anniversary. While the business itself actually has been an opportunity that has been in the market, has been very much welcome and a great success story. But at the end of the day, you are also connecting two very different market infrastructure into the same program. Meaning, if you think about the China market being a T0 market, as well as being what we call the ID market, as opposed to the international market, the Hong Kong market that's been most of our clients are used to is an omnibus market, whereby it has this T2 environment. So to actually marry up the two situations, one of the things that you actually presented was the fact that you have international clients trading on an omnibus level, being able to actually cope with the T0 environment. So this was actually something that we thought about over the years, and then a few years ago, we had the opportunity to work with our technology partner, Digital Asset in this case, to actually come up with what are the things that we could do from an exchange, from a clearing perspective, to actually help our clients to actually overcome some of these challenges. Now, one of the things that we recognize that at the end of the day, if you really want to think about like solving every single problem, you obviously want to go to the root cause. You go to as far up as you can go to actually try to resolve the problem. One of the things that we recognize and realize that by using DAMO, a smart contract, by allowing the transparency for those people who actually can have access to the trade information, that will in itself would actually help in terms of redesigning some of the workflow that we have. And that's what Synapse is all about. So it's been something that's recently launched, and it's an optional service because one of the things that we also need to be mindful of is this might not be something that is needed for each and every single investor or participant in the market. So again, we want to actually start off by actually offering this service as an optional service, and then hoping that, and it will actually address some of the operational challenges in the market today.
Thank you, Hector. Caroline, I want to come on to you and a bank's or a custodian's perspective on those operational challenges that Hector mentioned. How did you find, or how do you find settling with Northbound Stock Connect? How are you supporting your clients? How are you working with HKEX Synapse? What kind of technology are you using?
Okay, a lot of ground to cover, so thank you. Look, the custodian's role is really to safekeep our customers' assets, but it is to facilitate the post-trade settlement of their investments. And when we talk about, delivering that in a client excellent way, you're really pushing for operational efficiency. You're trying to ensure that you're minimizing any trade exceptions, worse yet, trade failures, and you're trying to do so in a cost-effective way. But those systems were all built on the basis of a T+2 basis, right, on a cycle of T+2. So when we start talking about Stock Connect and Northbound, the pressure that was putting on under T+0 just increased. And to be clear for those that don't sort of live and eat it every day, T+0 in Stock Connect terms is a 4-hour window, okay? It's 4 hours. And that 4 hours can feel like a long time for certain people and in modern times. But if you look at the traditional model of settlements, of trades, under more traditional markets, it was really sequential processing. And that's really just a fancy way of saying it was a relay race. For those athletes in the audience, where you have a runner, he's running, he passes the baton to the next one runs, and so on and so on. That was the exact same case for traditional trade settlement. You have the fund manager on the buy side who's sending an instruction to global custodian, who sends it to local custodian, who sends it back to the CCAS exchange. On the flip side, you have the broker, he's sending to clearing participant, who sends it on, and so on and so on. So, again, to use the analogy of a relay race, the most dangerous part is the passing of that baton. That's where things can go wrong. But it's not simply passing on instructions. There's also the issues around you've got to actually do tasks in between each layer. You've got to approve or reject those trades. You've got to do your sanction screenings, credit, FX, etc. Again, adding to the complexity. So you think about that model and try and squeeze it into a 4-hour time frame. You can see it starts to put a bit of pressure on the pipes. We've also got to remember that the whole point about Stock Connect Northbound, it is to facilitate global investment into China via Hong Kong. So this 4-hour window that we're talking about is Hong Kong time 4-hour window. So that means for investors in the US, it's in the middle of the night for them. When we're talking about in Europe, it's early day, early morning for them. So this 4-hour window, that seems fairly reasonable, to start off with. You can see it starts to get a bit tighter. So we were very excited when the exchange said they were working with digital asset and that they were going to create the centralized platform. And that the centralized platform was not only going to be a method to extract and sort of return trade status information and provide wider transparency around the cycle. But more importantly, it was disrupting the relay race. It was going to have the ability to generate, to all the market participants in the settlement chain at the same time directly those instructions. So the relay race is, minimized, reduced somewhat. So we were very excited, and we were certainly on board, and hence we're one of the pilot participants. From a technology point of view, we really wanted to be able to maximize the benefits of Synapse and return those benefits to our customers. So we really followed a two-prong approach. The first was connectivity. That was key. We decided to go down the API route. That gives us the ability, real-time access that Synapse offers. It gives us the ability of greater functionality around reporting. And also, it can create an extra layer of data security and, in the long term, cost reward and benefits back to our clients. So we, very excited about that. We then also looked at our internal systems, our proprietary systems, and then also enhanced those so that we could take those benefits and feed it through our network and our global custodian and out to our clients. So if we look at, the T+0 scenario and the role of the custodian in facilitating this for the investors, we're very excited to have been part of this project with the exchange and also with digital assets.
Thank you, Caroline. I thought it was a great analogy to say that we're essentially moving from a relay race to everybody running together at the same time.
One team, one dream, Adam, right?
Exactly.
That's what it's about.
So Shane, moving on to you as the technology provider here and a technology provider in a wide range of situations, how are you scaling these types of solutions and what are the necessary steps for this kind of technology to be more broadly adopted? What have you learned from what you've done in the past?
Right. Well, if you look at a lot of the major deals we've worked on, including Hong Kong Exchange Synapse, have been where we've worked with large existing network providers, either looking to put all of their networks onto a chain or part of the process or a single asset class on to reap the benefits of a distributed ledger. And those benefits, we've sort of touched on some of those, really addressing sequential processing, addressing the shortened settlement times or just simply wanting shorter settlement times, giving customers a real-time view of the transactions, and also decreasing the need for reconciliation. So those are really the things that our customers are looking for and the projects that we're working on are addressing. Most of those projects have a single sponsor that identifies a need or a problem, specs out the project, works with us to figure out what KPIs are important, and then ultimately pays for it. And I think that notion of having a single sponsor for a transaction certainly makes it a lot easier to take those things from POC into production. So I think that's been a key part of success. And the other part is, as relates to their customers, is having these things as being non-disruptive, right? And I think, as Caroline's alluded to, working with the exchange in this instance, having the network provider provide API specs to their customers basically will speed up adoption. And in many instances, the customers are using existing Rails or existing UIs to access the technology. So that kind of, that's making it easy for everybody. And all, the Hong Kong Exchange is a perfect example of where that's happened with Synapse. I think in terms of these solutions, they've worked. I'll give you another example. Late last year, September last year, Deutsche Börse, as you know, went live with an initiative D7, which is their digital new issuance platform. There, all of those things happened. Since then, they've issued over 1,000 digital securities on that platform, non-disrupted to their customers using existing Rails. So this thing does work. A key point as well is respecting privacy, which is, again, one other thing that comes up with some of these solutions. So that is a prerequisite for all regulated financial entities. And again, demonstrating those benefits to customers, including a shorter settlement time. So that's kind of where we are right now. I think in terms of really a next level of adoption, we are going to have to see more customers native on chain. And I think that's going to become especially evident when we have cash on ledger and we've got the possibility of settling atomically. So I'm sure we'll be hearing a lot about that over the next few days. So that's kind of looking forward. And I think, there, what we're thinking about is not just our customers, but their customers and their customers, right? So there's this kind of network beyond the network and then a network beyond that. So in the case of Hong Kong Exchange Synapse, We've got the banks, the security services firms like Citi that are really the customers there. So that has to be addressed and considered. And then, of course, we've got their customers, the fund managers, right? So there's these levels of complexity that we're going to need to address. And Caroline, we were talking about this recently. There's a significant amount of education that's required first off, right? And that will be explaining these solutions, explaining the features, explaining the technology, just to, talking about what we're doing, and also the benefits, making some of these KPIs evident, measuring the return on any investment, which we were talking about this morning, that I think is going to be absolutely key. A lot of blocking and tackling as well. This is going to be a sales effort, which is obviously very important for us as a technology provider. Acknowledging the fact that with our customers, there are different levels of, different degrees of sophistication. There are different amounts of bandwidth to enter into these projects, and money. At the end of the day, people are going to have to pay for this, and that's going to happen at different times, different time frames with different customers. And I think any successful project is going to have to be with respect to that. These things are going to happen gradually. The changes are going to have to happen incrementally. And this is not a, all at once type situation. We're going to have to be patient.
Not everything, everywhere, all at once. Wiki, turning to you. So in Hong Kong, we have a specific situation where mainland China's T0 settlement cycle meets Hong Kong's T+2. But we actually see a broader trend towards shorter settlement cycles globally. We know that T+1 is coming in North America in May next year.
Yep.
Could you talk to us a little bit about the trend that you see here for settlement cycles globally and what that's going to mean for financial institutions and markets?
Sure. It's very interesting that here Caroline already mentioned T+2 and T+0. And Shane already mentioned autonomy settlement, but no one mentioned T+1. So maybe it's my turn to mention T+1. So why T+1? I think T+1 get a lot of attraction this year, and because US, Canada, Mexico already decide to move to T+1 next year. And in Europe, UK and EU already established their working group to evaluate whether they want to make the move after US moving to T+1. So that's why the whole industry is looking at what happens if they move into T+1. And so for now, for T+1, when we look into our data in terms of cross-border security settlement, it's only around 10% of security settlement in equity market is done via T+1. So after US moving to T+1, the ratio we are expecting will be increased from 10% to 30% of the total security settlement via SwiftNet. So it's a big increase. So what does that mean for Asia? I think the top priority will be for those market participants based in Asia, but they are investing in US, whether they are ready for US T+1. There are a couple of key challenges here, and one is of course, it will be the time zone issue. We are not in the same time zone, and then even for today, and for most of APAC customers, they are sending instruction to US to settle the US trade. The settlement instruction actually arrive there after T-Day. So you can imagine that would be a challenge for T+1 settlement. And also, if you ask a lot of managers here today, they still process their US settlement in a very manual way. And even further to that, and the most recent survey by Value Exchange and DTCC showed that the awareness of US changing to T+1 in Asia is still very low. And it means that maybe they are not even thinking about how they want to work out a solution to address the automation and also to reduce the manual process to fix the T+1 issue. So I think the urgency will be for those market participants to really evaluate that and prepare and to work out a solution for more STP. And another important angle I think we need to look at would be whether Asia CSD or Asian market will want to move to T+1, for example, Hong Kong, whether you have such plan. And for that one, and I think security market infrastructure such as Hong Kong Exchange for sure will play a very critical role. As just shared by other panelists, that Hong Kong Exchange Synapse is a very good innovation empowered by new technology, by digital asset, and also very close engagement by market participants such as Citibank, and to make sure and facilitate shorter settlement process and provide more visibilities. And from Swift side, we're also working with the whole industry to promote UTI adoption. And so with UTI adoption, we want the industry have the end-to-end visibility for the cross-border security settlements. And I think that we're all helping the industry to move to the shorter settlement cycle.
Yeah, thanks, Wiki. And Wiki mentioned the value exchange research, which I would thoroughly recommend. There's some very interesting findings in there. For example, if I understand correctly, Asian back offices will, on average, need to remove 1 day from their settlement processes to adapt to T+1.
Yep.
And Asia has the oldest fleet of back office technology in the world of any region. So it's going to be a big challenge. In the time that we have left, I wanted to come back to all of our panelists to look ahead as Wiki has been doing, and just give us a sense of the trends you see in the use of technology for post-trade coming up over the next year or two. And Hector, I'll come back to you.
Yeah, so I think coming back to this particular point, there's a lot of things that we already talk about. So if you think about the fact that Synapse itself, the principle, the design is actually to use the technology that is enabling us to actually thinking about if you have a trade ID that is unique and it become a standard, and then you think about a life cycle of a trade. Everything starts off with a buyer and a seller. So if everything is actually being recorded digitally and with a unique reference ID, even after a trade has been settled, that became a possession. And if you think about the post-trade infrastructure, if everything were to be uniform in such a way, and with the technology today that allow us to do that, that would actually be some of the things that obviously many of our industry participants are actually studying and looking into. And then again, going back to the point about Synapse, Synapse was actually designed for that very same reason, is for something that can be useful, not only to help out with whether it's 4 hours, whether it's 1 day, but at the end of the day also you already have something that can be built upon for the future, for post trades, and other asset servicing or other type of services that one post trade infrastructure can provide. So that's where I see that there's things that people in our industry should be more looking into.
Caroline, what do you see as the shape of things to come?
More work, Adam, basically, which is a good thing, not a bad thing. So look, the current trends that we're talking about, having an accelerated or shortened settlement cycle, makes sense. Makes sense from a market perspective because you've got credit risk, you've got market risk, you've got liquidity risk, more importantly. And by shortening the cycle, you're mitigating against those. Those are all positive things, and they're things necessary for a robust and efficient financial market. We understand. However, there is a knock-on effect by this shortened settlement cycle in that, inversely, it can potentially lead to increased operational risk, okay? And certainly from a custodian's perspective, from a custodian bank perspective, that is something that we then have to mitigate against and protect our clients from. So as it always is, and I'm sure the guys at Digital Assets like the sound of this, the best way to mitigate against operational risk is the use of technology. By being able to further automate our systems and our processes to make it more STP, less touch points, less areas for which it can fall down, the better for the market as a whole. So, we welcome the opportunity, but there is a bit of work to be done to make sure we do it successfully.
Yeah, thank you. Shane, it seems like there's sort of two parallel processes going on here. There's the use of DLT to make existing settlement processes quicker, cheaper, more efficient than they have been in the past. And then you touched earlier on the emergence of cash on ledger and the potential of of atomic settlement at some point in the future. How do you see those two things playing out in Asia?
Well, I mean, following on comments from Hector and Caroline, I really think about this in two different ways. One is this thing scaling, this technology scaling horizontally across asset classes, right? Because at the moment we're talking about either mandated shorter settlement windows or the desire for shorter settlement times from an economic perspective, right? And I think that is going to extend not just from equities, vanilla bonds, right through to private markets, loans, private equity, into things like property. So that horizontal scaling, or the technology really lends itself to that horizontal scaling efficiently across asset class. And then separately is that whole life cycle. We have the HKM issuing tokenized green bonds. We've got tokenized new issuance. We've got secondary markets, which obviously is Synapse is an important part of that. We're working with Equilend on sec lending. We're working with Broadridge on repo. So there's that end-to-end vertical scaling, which I think is going to be important. It's going to alleviate a lot of the challenges that Caroline was alluding to, but it's all going to be able to be realized on the same tech stack.
Thank you. Wiki, how are financial institutions in Asia going to rise to the challenge you described earlier?
Yeah, I think T+1 topic with most traction this year and maybe next year. But to the end, you can imagine the industry may hand into even further shorter settlement cycle, which is T+0 or atomic settlements and days. And I think the industry have the speed expectation, for example, tokenized asset, to change transform the industry totally. And so I believe to address today's challenge, I think the industry still need to work together and to enhance their system, to improve their efficiency and automation. And more importantly, I think the industry may need to accelerate the innovations and also experiments in such as tokenized asset or DLT solutions to make the speed even faster. And also AI, cloud, and all those new technology should be considered to be further adopted to helping the industry to go into the future, which should be instant and frictionless.
Thank you. That is a great point on which to end. I think a great forward-looking perspective. And we are just about out of time. I think it's clear from what everyone has been saying that for settlement, it's all about the need for speed at the moment. And as we were discussing earlier, technology is enabling this to not be a relay race, but just a sprint for everyone, and a sprint that is getting faster and faster, essentially. So I think it's watch this space in terms of technology, a lot of exciting things going on, and settlement is definitely accelerating. Thank you very much to my panelists. Thank you for being here.
Thank you. Thank you, Adam.
Thank you very much to our speakers, and Adam, thank you for leading that conversation. Well, from how to revolutionize trade to how to finance the future, empowering the financial services and financial institutions with the blockchain technology. Our moderator, Ronit Ghosh, he's the global head at Global Citi. At Citi, he will be leading the conversation on the future of finance, together with Ashutosh Goel, co-founder and CEO of XAlts, and Alfian Sharifuddin. He's also the head of technology and operations at DBS Bank, Hong Kong and China, and Peter Bruin, partner at PwC. Please welcome them on stage.
Hello and welcome. My name is Ronit, and it's my pleasure to host this panel. We're going to be talking about how blockchain is going to change the future of finance. Before we kick off and get into some of the expert comments from the panelists, just to set the scene, we've talked a lot about tokenization probably for a decade now. It feels like between consultants, banks, central banks. We've been talking about this for a while. So why now? Why is this relevant today? And obviously we have a vested interest in saying it's relevant today, but we genuinely believe that right now is a moment of transformation. We're at an inflection point, we're at a takeoff point for tokenization. And the reason is that the big institutions, and disruption doesn't necessarily come from big institutions normally, but money isn't like normal disruption. Money is different. And that's why when it comes to money, it's important that the larger institutions, starting at the apex with central banks, and also some of the commercial banks represented on this panel, get on the train, so to speak. Because without the central banks, without the commercial banks, when it comes to money, there's not going to be a new rail. And this is a new rail. Blockchain's a new rail. And that's what we're going to get into. This is a very large market, we believe, in the medium term. It's a relatively small market today, and we're going to be exploring in this panel how we're going to transition from pilots and proof of concepts to production and beyond. Let's kick off. We're going to start off by talking about some of the challenges of implementation. And Peter, if you can run us through some of the questions around, from your sort of role at PwC, why has it been so hard to date? What's been some of the challenges when it comes to cost and time?
So no, thank you very much, Ronit. So, I mean, certainly what I think the overwhelming issue has been the fact that the regulatory and legal system just hasn't quite caught up yet. I think that's one of the reasons why it's been on a 10-year journey, because regulations take time to change. They also need to change internationally, and there needs to be coordination of that as well. And often regulators will wait until there's some degree of coordination before then acting, and then they all have to act. So I think one of the reasons why I'm excited now is because now we're starting to see, I mean, everybody heard earlier on, Chris Hoy mentioned that Hong Kong is now pushing down the path of real-world asset tokenization and security tokenization. We've got other markets, so Dubai really pushing on that. You saw the HM Treasury in the UK putting out their paper earlier this week as well. So we're really starting to see the fruits of that kind of regulatory work coming too, and hopefully we'll get some more consistency, standardization of regulation that people can then work on. I think that's the first thing. Second thing is really around education and making sure that the workforce understands the new system, the new paradigm, training up people. It's very difficult. A lot of people just don't understand how these new rails work. It just takes time to kind of change organizations to kind of get them ready for that. And the final one is cost and the cost of technology. I mean, everybody working in this space is sort of building from scratch, and they're all trying to work out and learning the hard way by going down paths, making mistakes, having them reassess. It costs money, and that also just takes time, and it takes an investment. So I think those are the three things that are really like holding people back. I think there's definitely a desire. People see the opportunity, but you've got and then when you're dealing with money, you have to be so careful. It has to be done right. If it's not done right, then everybody's getting fired, and there's a lot of problems. So I think it has to move methodically as well. So.
Yeah. If you're not doing it right involving money, it's sometimes beyond just getting fired. But
yeah, exactly.
Ashutosh, from your perspective, obviously you've worked in some of the largest financial institutions in the world, including here in Hong Kong, and now you're running the startup. Tell us a little bit about what excites you the most about this evolution you're seeing on the blockchain infrastructure front?
So, I mean, as Peter was saying, right, like you got to think about the cost and implementation, and you got to just do it right. And currently, let's call it over the last 7-8 years, pretty much everyone, and I'm talking about large institutions, they've been custom building in-house, partly because there was not a lot of availability of what you can buy in terms of products from outside, right? And that's something changing today with infrastructure providers coming out. And there's a lot more focus on infrastructure around this space for large institutions. So things around that is something that takes it to the next stage. And that's something, less of in-house custom building and more of, modular libraries, modular products being available to you to just use it, test it out, and build out your use cases, and then see how it works out, brings your cost down materially. The other thing is user experience. So think about like a large bank, and maybe 10,000 people inside a bank are using it. Do they really need to care about the wallets? I mean, when we think about emails, there's an IT administrator which takes care of everything. We can keep forgetting our passwords, and that's all right? But if you forget your private keys of a wallet, then that's not going to work, right? So a lot of that abstraction in terms of user experience is now coming into the market, where these are, think of your wallet as an account management system, less of a wallet. Things like back-end infrastructure like indexers, which were much more narrowly focused today. And when you implement them for large organizations, a large organization would want some level of machine learning and analytics and things like that. So a lot of that is now available at scale and in a way that a large bank or a central bank can start plug and play and start using it. So that's exciting. That reduces cost and basically accelerates time to market for everyone.
Awesome, thank you. So we've heard about regulation, user experience. Let's talk about the tech side. You're responsible for the tech function of a very large bank in the region. Walk us through some of the challenges from the technology perspective. So first of all, I guess there's always a budget challenge. There's a budget that's spent on BAU, business as usual tech, right? How do you get these new technologies into that budget?
Yeah, right. Budgeting, management buy-in. So the interesting thing at DBS is, management buy-in has never been an issue, right? I think from the onset, we've sort of figured out that the blockchain will eventually play an integral part in many of the processes in a bank. For example, a lot of the back office settlement systems, the way it is set up, it requires a lot of different workflow processes to be sort of settled out, sometimes in sequence, sometimes in not sequence, before the final settlement is done. And actually, the blockchain is a perfect example of how those processes can use that technology. I think the challenge we face is that today there are many legacy existing systems that actually can do the same thing. Right? If you think about it, relational databases, for example, they can do the same thing as a blockchain. And for us, we have to figure out when is it suitable to use these new chains with the kind of like the smart contract capabilities, or when is it that we put it on our existing core banking platforms and RDBMSs. So what we've done is we've set up a whole platform for blockchain expertise to look at specific processes that can be put on the chain. And the perfect ones are around identity management, around trade finance, where you have to have a lot of different processes linked together before the final commit. So I think that's one challenge. I think the other challenge we have is exactly what Peter said. It's around talent, looking and finding the right talent. Because in the past, the space was very hot. So all the good talent was going to the hot startup crypto firms where millions of dollars could be made. It's a little bit easier now.
Yeah.
The system has cooled off a little bit. So you can actually find talent. Related to that is actually educating people what the whole technology is about, right? Because it's fairly new. If you think about it, databases have been around forever, core banking systems have been around forever, but blockchain technology is fairly new. So people don't understand it. Even educating people within the bank, within the industry, what it's about, how to use it, what are the maximum benefits from it, that took a lot of time. So I think that's one challenge we have. I think the third kind of like pressing challenge for a bank is interoperability. Right? There are assets that sit off the chain on a legacy piece of infrastructure. You've got to make it all work together. And there lies some of the challenges, how we bring in existing technology to work with our new technologies. And bringing all these pieces together sometimes can be quite a big challenge for a bank.
So you've raised a lot of interesting points, and the last ones I think are also crucial, interoperability or the off-chain world and the on-chain world. But can I maybe just go back to your first point about management buy-in? And you kind of made it almost sound like, well, obviously we got management buy-in, but that, I don't know what you're gonna, I'd love to bring in Ashutosh into this, is that's often the really hard bit. Like, how do you think DBS might be different in this aspect? Because most, if you talk to people doing similar roles in other banks, management buy-in is quite hard. I don't know, Ashutosh, do you think management buy-in is easy or hard?
It's when anytime you go ask for money in an organization, I think it's not an easy process.
It's no different in PwC either.
Yeah, it's just about asking for money. That's the challenge.
Exactly.
But there's also this challenge about asking for money from typically these decision makers were educated a generation or two ago, let's put it politely.
Right.
And you go there and say, this is just a slow database. What is this? Why do I need to, money is tight, budgets are tight. Why do I need to put some money into a slow database? How did you convince them, or how did your senior management
from DBS, kind of like to your point, right? We've got an easy time because, you know, we pride ourselves as being a transformative organization, right? It's our whole ethos is around transforming. It's around you know, not digital lipstick on a pig, but really getting to the guts. And actually, it starts from the top. So right from our group CEO and our country CEO, they understand the benefit of bringing in new technologies and experimenting. So we don't mind failing and failing fast, as long as, you know, we bring in new technologies and transform. So for example, in Hong Kong, we don't run mainframes anymore. We've gone completely open systems, core banking platform. It was a difficult project, many challenges. Of course, we trip, we fall, but it's okay. We pick ourselves up and we've changed. And, you know, we through the whole organization, we have this whole concept of re-educating ourselves, never sitting on our laurels, just making sure that we push ourselves and push the envelope. So, you know, if you ask me, it really starts from the top. It starts from everybody in, you know, the top management, and then you flow this whole concept of education and learning through the organization. So, yeah, we make it sound simple, but it's actually a cultural change within the whole organization.
Maybe I could bring Peter into the conversation just to sort of dig into that point a bit more. Talk about when it comes to at a project stage or a blockchain project, how do you go from, you know, the pilot phase, the POC phase to production? And then you're based here in Hong Kong. We were talking before we came on stage. How do you think Hong Kong as a jurisdiction or a center plays to that in terms of going to production? Is this a good place to do it? Or should we be doing it in Singapore, DBS's home, or Dubai, where I'm based?
Yeah. So, well, maybe do the first. I mean, I think with a lot of these blockchain-based projects, I think, you know, the ability to kind of take it from a pilot into something more like a proof of concept on it, I think really depends on what it is you're trying to do. So you have some which are, you know, I guess internal projects where you're dealing with like internal systems. Maybe that's a little bit easier, still not easy, but then, you know, others where you're dealing with sort of like markets where you need to build an ecosystem, you need multiple players in the market to all come onto the same infrastructure. And that, you know, clearly a consortium-led deal is just going to add, it adds complexity, it adds like more, you know, more kind of, you know, difficulty because you've got different stakeholders to manage, but ultimately, you know, the network effects can be a lot greater. And then you bring in the regulators as well and bring them into part of it. I think then, you know, it kind of can help because it allows the regulators to kind of understand what you're doing, but also it just adds another stakeholder. We're there already, so I guess bring them in. But where I see the, you know, we see sort of ones that really have been successful. I mean, you know, I think Singapore, you guys have been involved in Project Guardian and things like that. I think that's been a really exceptional example of that all coming together. Yeah. You know, I think in kind of when it comes to kind of like Hong Kong, I think, you know, we're really seeing a lot of like interest at the moment, and I think this actually this week there's been a number of things kind of announced, and where we're sort of, you know, we've sort of seen people kind of look at the kind of like you know, test cases. I think there's an HSBC example around tokenized gold. There's a sort of another one with some of the asset managers looking at like fund tokenization now, which are kind of being explored in Hong Kong. So I think it really is starting to move here, and I think what's really clear is I see that the Hong Kong government is really pushing hard to get the industry moving in a lot of these areas, and I do like, you know, with getting the exchange involved and bringing a whole of government approach to it in a way I've not seen Hong Kong do it. So I think that's really positive as well.
I do sometimes look at like the Middle East and say places like Dubai with a little bit of jealousy, right? Because
jealousy.
Sometimes I do, right? Because
you're not planning to move to Dubai, I hope.
I'm not because there's a downside. There's a downside
people.
to it as well. But it's just that the speed at which government can make decisions, and the fact that it does mean that you can move these things forward, potentially in Dubai, in places like that a lot quicker, but. At the same time, though, you don't have the existing capital markets. You don't have the
infrastructure of Hong Kong.
Exactly. And so I guess the question will be is like the Middle Eastern government's been very quick to put regimes in place. The regulators move very, very quickly. But let's see where the volume is, because I think actually Hong Kong has the advantage because we do have the deep capital markets, and things will move more slowly. But there's a very innovative community here as well, and I do think that there's a lot of innovation coming down the line, particularly with I guess technology resources from the mainland. We've got a huge store of kind of good technologists. We've got the financial center in Hong Kong. What's going on with the Greater Bay Area? I think there's some really interesting stuff going to come out of Hong Kong in the next few years.
And just to dig a little bit more into sort of the supportive government aspect of the administration in Hong Kong, could you, I know a lot of the folks here are based in Hong Kong, so know this, but folks like me who are not based here, could you flesh that out a little bit more as to what's happened in the last 12, 18 months that makes it more of a receptive place of blockchain technology than before?
I mean, I think there's a few. I mean, blockchain technology it runs the whole spectrum from the sort of like, let's call it the kind of what financial institutions are talking about, sort of private permission blockchains, which are great from a kind of an efficiency point of view for making as I say, slow databases, but slow databases with some additional bells and whistles, all the way through to kind of these public permissionless kind of blockchains. I think where I see Hong Kong as sort of really seen the light is really this move to say, well, we have this global international financial center, but we need to make sure that it stays at the cutting edge of global finance. And you look at all of the things coming down the line around tokenization, around these use cases, around bringing settlement times down, around new forms of payment, and I think what the HKMA has been doing around the CBDC side, around e-Hong Kong dollar, we're sort of world leading there. And I think they really sort of see that this is how Hong Kong is going to stay relevant in the future. And how we're going to ultimately keep our finance system, which is so important to our economy, absolutely top notch.
No, totally. Alfie, just picking up on what Peter said about the different types of chains, because there's obviously, in our industry, particularly in TradFi, there's always big debate about public versus private blockchains, and obviously that's shaped by the regulators in many jurisdictions. Where do you personally, or DBS as an institution, fall in this? Because there's obviously pros and cons to both that we know about, but where do you fall in? Maybe for the audience, just put into context.
Yeah, okay. So there's kind of like the private chain where you kind of control everything, you control the standards and etc. And then the public chain where you need to rely a bit on the network effect. And in DBS we have a bit of both. So in terms of the private chain, an example for us is we've launched a carbon exchange, right? And where people want to participate on it, they sign up to our token assets, and they can put their carbon credit products for sale onto our exchange. And that's fairly easy for us to control because the proof of work, proof of stake, the proof of commit elements are all with us. Another example we have is, say, a product we call Partio. That's a cross-border international money settlement rails, right? It's meant to rival the bigger networks. The challenge there, where we try to make it a little bit more public, is we've got to have a network effect. You've got to have a sufficient number of participants before it becomes a useful network. And therein is a much bigger problem, because then you have to sell that sort of chain to a lot more participants. And frankly, between the two, running a private chain with all its efficiencies is fairly simple because you control everything. Doing a public chain sell is a lot harder. I think the most successful ones are, of course, Bitcoin and Ethereum, right? They've taken years to build up that sort of network effect. And for us, we're starting that journey, trying to get our public chain out there, for a lot of participants to come into the space. So, I look at that as the two different kind of aspects of private versus public.
And maybe to sort of wrap up this conversation, I want to bring Ashutosh back into the flow. From an Exol's perspective, talk us through basically taking these new well, it's not new anymore, but newish technology to production for a large institution like a DBS or a Citi or an HSBC. Walk us through some of the issues around scaling, costs, resilience, and maybe anything else that you want to throw out there.
Okay, I mean, let's think of it from an example. 30, 35 years ago, give or take, when you wanted to build a website, you needed a huge amount of HTML programmers. There was nothing, as a modular stack which was available. Over a period of time, you had products from Adobe, you had and today you have things like Figma, which allow you to build, prototype, and scale fairly quickly, right? And that cuts down your cost massively. That also allows the same product provider to get its product tested across organizations, and over a period of time, that basically makes it a very resilient product. Now, that's kind of like what I believe is the next scale challenge, and what's happening today, which is you have started to see a lot of productization of pieces of what typically a bank would have taken a couple of years and a few $1 million to build themselves. Right? So now you actually don't need to build practically much of the tokenization stack, because providers like us have everything, and it's more about providing customization at scale. Because even if I give you a standardized product, every bank has a different process. Even the same asset you may want to tokenize in different banks or different jurisdictions may look different, may have 10 extra forms in DBS, may have 5 different processes in HSBC. So how do you modularize the whole thing at a product level, plug them together, and effectively create a very robust infrastructure, right? So these things are available now. Now, what Alfian was saying earlier, right? Like there's a lot of legacy, and I won't call it legacy, it's more a lot of off-chain infrastructure. So think about, let's say if you want to tokenize a bond, and I have been in bond markets for 15 years, right? Like, there's no way you can set up a bond without Bloomberg. So blockchain or no trader would actually want to set up a bond without a Bloomberg. So then if you have to tokenize a bond, you have to have an API stack which connects with the Bloomberg API to your on-chain tokenization platform. Similarly for trade finance, right? Like a huge amount of trade finance runs on things like Finastra. So how do you plug into these external services which then start to tokenize? So again, it's going to be the right balance. It's going to also not be 100% on-chain tomorrow. It may take 10, 15 years to be 100% on-chain and all of that, but you will still have very robust Web2, or what I would call the traditional infrastructure providers, which are doing great, and they have the network effects and deep insights into how that is done. And that needs to be connected in a very seamless user experience manner. So scale and security and all of those things are fine, but all of this will need to come together. And that's starting to come together with open API solutions, which are getting plugged in, open modular infrastructure, which is out there now. So yeah, I mean, I'm very excited about all of this.
Awesome. So to pull it all together, to put all the strands together, we believe that we are at its takeoff point for tokenization, that blockchain is no longer a proof of concept or a pilot stage, but there's still lots of challenges and lots of debates. We heard from one speaker where there's seemingly a lot of management buy-in. At other institutions, that is happening, maybe at slower paces, but it's happening. We've talked about regulatory. The regulatory is really important. I often talk to my friends who are in the public cryptocurrency world and say, guys, this is great what you're doing, but if there are no laws in place and you're doing something, you're going to end up in jail. And that's not a good place to be. So we need the regulations in place. This is about money. This is not software, this is not speech, it's about money. And that's the bit that technologists often miss that we bankers can't forget. And so regulations coming in place, but also education that Pete's talked about, and productization. Can I call it blockchain as a service? But we're giving you, or Xsource is giving you, a solution where you don't have to remember your passwords. Because I forget my password still constantly. not so much in my work system, more in my private systems. But this is all coming together, and it's going to be, we believe, a multi-trillion-dollar market. Maybe one last plug before we wrap up. It's in our City Insights report, so download it, Money, Tokens, and Games. I won't give you the hard copy. Go on Bloomberg or Google and download it. It's all in there. Thank you so much for coming, and thank you to my panelists.
Thank you.
Thank you very much to Ronit for that wonderful conversation. And indeed, all about regulations, right? But we also want to know how to innovate in AI. We're talking about machine learning, machine mind. And to run the conversation, our moderator, Harshika Patel, she is the CEO of Hong Kong and Asia Strategy at JP Morgan. We'll be conversing with our two speakers. Please welcome them here on stage, Hemant Taneja. He is also part of this panel, amazing panel. He is the CEO at General Catalyst. And also we have Mike Zhu. He is the co-chairman and CEO at Fosun Group. Please welcome them.
Well, hopefully not too many people have gone to grab lunch and that we keep the rest of them. Well, a warm welcome, Mike and Hemant. And as we just heard, we're going to have a very fascinating discussion over the next 25 minutes about a word that's probably talked about just as much as geopolitics and interest rates right now, and that is AI. I heard a very interesting quote from Sundar Pichai, the CEO of Google, back in April this year, which basically said that he saw AI as the most profound technology humanity is working on, more profound than electricity or fire or frankly anything else that humans are working on. Very interesting thought there. So I'm delighted to hear what you guys both think, but let me just do a quick introduction. So over here we have Mike Zhu, who started his career, I believe, as a software engineer at Microsoft, but is currently the CEO of Fosun Capital. He runs their global private equity investments in all things innovation and lots of expertise, whether it's in AI, big data, automation, and semiconductor. And because I always like to have a fun fact for my guests, Mike's fun fact was that up until last year, he was the most viewed investor in China on LinkedIn. And I say last year because there is no LinkedIn in China anymore.
I wish there were.
And then joining me to my left is Hemant Taneja, CEO of General Catalyst. Welcome. A VC pioneer, and I'm very jealous because he got in early with companies like Stripe and Grammarly. And he's also co-founder of Responsible Innovation Labs, which aims to align technology development with the long-term interests of society. Now, Hemant's fun fact is he actually has 5 degrees from MIT, and I think he's still only 35. So Hemant, I don't know how you've managed to fit that into your young years. So please join me in welcoming Mike and Hemant, and let's get started. So, gents, as I was preparing for today's session, I found another quote that was not Sundar Pichai, but was Elon Musk, and he predicted that the AI was going to overtake the human race by 2025. So I'm not going to ask if you've got the same prediction, but I will ask you a fact about your daily lives, that if there was one daily task in life that you would want AI to take over first, Mike, what would that be?
Well, of course, but first of all, let me thank everyone, all the audiences for staying with us throughout this session during the noontime. I think your company will be very valuable for us. And I think AI is a very challenging and a highly still controversial topic for us to discuss nowadays. And for me, because as you introduced, I'm from the engineering background and has doing some hands-on, actually intelligence-related, programming in person. So it's very exciting to witness the paradigm shift, given this new era. And for me, I think this most important thing is that AI will be able to become our everyday aid or like an everyday assistant to significantly increase our productivity. So I think everyone can be his or her own CEO, given the power of AI. Like I myself, not sure how many of you are actually using AI or AGI or AIGC related apps or applications on daily basis. Like I myself, on the top of my cell phone screen, the OpenAI ChatGPT is my everyday app, right? So it's like I have a virtual omnipotent executive assistant side of me. So no matter like I need to make any like PR exposure or marketing communications exposure, I always leverage the Chat GPT to literally save my time, energy to produce high quality content, both professionally and personally. So from that point of view, I think first of all, I think AI will be completely changing the personal existent landscape in every possible imaginable forms, like the mobile phone app, or maybe on desktop smart speaker, the laptop, co-pilot, all possible, forms, as you can imagine.
Well, I read one prediction the other day, which was we will soon be dating robots.
Yeah.
So I'm not sure I'd go that far.
So AI obviously
but,
will be the embedded technology inside your desktop robots. That's my firm belief, especially for China, because we do have the very competitive and powerful consumer technology gadget capability, right? Made in China, supplied in China. So I witnessed lots of startup companies leverage the power of hardware and software fusion, to embed the today's AI or AGI capabilities into the consumer goods. That will, of course, I think take pretty much long time, pretty much maybe even longer than how internet has changed our everyday productivity to make it truly omnipotent. But during the course of development, I think AI will sparkle and it's going to inspire lots of unimaginable futuristic applications that just make our daily work and life much more easier and much more convenient and supportive.
Sure.
Yeah.
Okay, so a slight twist on that question. Obviously, you've spoken a lot, Hemant, in the past around ethical AI. What's the one task that you would not trust AI to do in your daily life?
Yeah, I think as a framework, I think a lot about how can AI enhance my IQ so that I can focus on my EQ. So the task I wouldn't delegate to AI is my one-on-ones with my team, for example, which is where it really is all about the interpersonal relationships and how are you developing your talent. But what I'd love to do is for the AI to tell me who are the people I should be spending time with and why, right? Because I think that's where it's more efficiency oriented and sort of understanding context, and AI is great for that.
Okay. So staying with you, Hemant, obviously, I mean, AI's been around for a long time. And I think...
50s.
Exactly. I think the phrase was first coined back in 1956. And yet the world only seems to be talking about it all the time since the advent of ChatGPT. You spotted, some amazing early startups before when we spoke about them in your intro. What use cases are you most excited about as an early stage investor?
Yeah, so when we think about the AI stack where we're investing, there's obviously core infrastructure where you're trying to build language models and other models because LLMs are only one form of capability. But a lot of our focus is on, well, how do you really activate that in society, right? And if you think about the last 15 years, the focus which was on mobile, that was all about a distribution advantage in society. AI creates what I think is transformation advantage in society. How do you really rethink processes and experiences? So inevitably, most of the value is going to accrue at the application layer. What's going to happen is you'll go from this workflow orientation in how you create applications, which is how do you run email campaigns and how do you collaborate, to much more of a sort of a goals orientation. how do we serve our customers really well, and what is sort of the overall optimization. So I think what you'll see is software getting changed once it's infused with AI, and you've got the benefit of that intelligence and using almost AI as the pilot and humans as the co-pilot, where judgment is required, which is sort of an inverse of a lot of what the narrative is today. We think that's where a lot of the enterprise software opportunity is going to go. Okay, thank you for that.
So Mike, similar theme, you're both obviously very excited about AI, but pre-OpenAI, there hasn't actually been an AI company or development out there that's resulted in, you know, a company which has been able to float, generate a huge market cap, et cetera, et cetera. Why do you think that is? And is there a success story that you're looking at right now outside of the generative AI space that you're excited about from an investment point of view?
This is a good question, actually. You know, throughout my year of with Microsoft, that I always think, you know, software. I have a strong belief that software is going to define everything. Software defines the world. So with that sense in mind, I think, you know, AI has been there for quite a while, but just not in the, you know, general form that we are recognizing today, right? So AI has always been embedded, even in some you know, superficial way in software for a long time. Maybe sometimes we call it business intelligence, the BI. Sometimes we call it like analytical content generation. But today, I think AI, because of the incomparable power of computing infrastructure involvement, make it more generalized, make it more humanized. This is something that we never, you know, encountered in the decades of time. And I think, you know, nowadays, just AI, I think at the end of the day, will not be a standalone product, or will not be maybe just a standalone platform or company. It's just going to be coexist with the vertical industries, with the you know, the giant companies which leading in the era of internet and IT, you know, eras all along the way.
Would you agree with that?
I'm not sure if I have answered the question specifically.
No.
AI has been used for the last decade. If you look at all the advertising work that happens, the network at Google, they use very sophisticated AI. In fact, much more so than they even make available on their sort of Google Cloud today, because it's such a source of competitive advantage. I would say we invested in this company called Grammarly that started in 2012. It's a, you know, it's an enhanced communications app in some ways, used by tens of millions of people, and it's a very large business. They raised their last round at 13 billion. They had their own language model before ChatGPT came about. They obviously now augment their model with the public models as well. But it has been in use. I just think ChatGPT just hit the zeitgeist really fast. So that's why we talk a lot about it today. And it's only a certain form of AI, generative AI. But the fact that that became such a fast growing consumer app and all of us touched it is why there's all this chatter. But the progression around using AI to transform the applications has been going on for a bit.
So sticking with that theme, just this year alone, if you look at the VC investment in this field, it's up 5x for the reasons we've just discussed this year. But equally, when you see where that money's going into, it feels like there's a bit of a feeding frenzy, and it feels like another SPAC moment. And certainly the industry's talking about it that way too. How do you both feel as investors about whether the money pouring into this sector is actually genuine money and it will yield a lot of, you know, decent investment returns, or are we looking at a bit of a boom and bust?
I think there are two things happening. One is a big chunk of money is going into developing these models, right? If you look at how much capital OpenAI has raised, Anthropic, some of the other ones that are scaling, because compute needs are so high in building these models. That set of investments is very unclear to us what the yield will be from a return perspective on that. Why? Because ultimately those models, as they get big and big enough, they get commoditized in the context of applications that need them. And so over time, will it be possible to capture enough value for the billions of dollars of investment that's going on in that layer to be vibrant, viable businesses? So I think that's sort of a question, and we've been hesitant to invest aggressively in that area. Then there is there's a series of companies that started in the last year around the AI euphoria, where there were very thin layers on top of ChatGPT and GPT-3 and 4. Those companies will obsolesce very fast, and I think there's going to be a lot of money lost there. Then I think there's a third category where now serious founders are getting in, because bubbles are good. We lose a bunch of money early on, but we mobilize some of the smartest people into the sector, and then they figure stuff out, and over time it starts producing a lot of value. And there is this category of founders now that are systemically thinking about different business functions and different applications, and how do we fundamentally redesign them with this whole sort of AI is the pilot, humans the co-pilot kind of a notion. And those, I think, in the end, will be the most interesting companies that get built.
Yeah, actually, I'm aligned with Haman that, I think bubbles are actually sometimes necessary and even good for truly generational technology disruption and innovation. Just like how the internet bubble got, bursted in early 2000s, that, we need to even over-invest just to boost the maturity and the rapid evolvement of infrastructure. If you look at the NVIDIA's revenue and the sales volume spike in the past year, right? You would, clearly, understand that we are facing a totally different multitude of technology infrastructure rebuilding in the next decade, right? So the amount of money needed from the primary market, secondary market is just, is something that's unprecedented before. So I think we need more money to invest in the different stages of AI innovation, to sparkle and, spark and inspire the new startups to work with the market leaders, the giant players, to do what they cannot do, right? Just like in the IT world, you do what you do really good at, and leave the rest to the new startups, right, to innovate. So I think this, from investment perspective, we would need more, insights from the ecosystem perspective on where those market leaders, these giant players are going. And the new startups, it's just like, they need to know how to better exist in today's a new IT ecosystem, to coexist, to thrive, right? And to even maybe overtake, probably, over a long shot.
Hemant, when you invested in the previous cycle, interest rates were at 0. Now they are 5%, 6%. So now as you look at startups, how much higher is the hurdle in terms of deploying cash into these new industries?
Yeah, I think the early stage part of venture capital, it generally stays insulated from interest rate volatility. And the reason is because there's not enough great entrepreneurs, and no matter how you look at it, there's overcapitalization in this asset class. So it's always a supply-demand imbalance where early stages of great companies that eventually matter will always be expensive rounds. We've just sort of come to terms with that. That's the way it is. There's a supply-demand imbalance. I think the way these companies aggregate later stage capital gets harder, because the funds of sort of pure play venture capital firms shrink, and a lot of the outside capital that generally floods at the peak of the bubble then sort of dissipates in times like this. And so what ends up happening is the founders that are very good at aggregating capital are the ones that eventually get a shot to go all the way versus not. And so we do think a lot about, at our early stages, is this the kind of founder that's going to be able to raise lots and lots of capital if it's capital intense business? That becomes a more pronounced criteria in our mind versus when times are abundant.
How can you gauge that as they scale, they're going to be able to get access to that
I think that's where this business is a bit of a black art. It's an intuition around, are those the types of founders that'll scale and learn to be inspiring, to aggregate sort of large amounts of capital. And a lot of these ideas are very capital intense. I mean, think about it, especially in AI. So that does become a consideration for us on where to invest, where not to invest.
Yeah, I think today's entrepreneurial environment is totally different from the early internet age. Actually, the entrepreneurs are facing equally unprecedented challenges both in the capital market as well as in in their industry market, given the global impacts because of from the macro level, geopolitical level, as well as down to the vertical industry level. And today, the concentration level almost in all the in terms of competitive landscape, in all vertical industries are very, very different. In each, like a vertical industry, we will see a handful of obvious way leading like market leaders, and they are both capital like powerful as well as have a like a supply chain advantages just to swallow or just to restrict the development of some sort of disruptive startups. So from the investment perspective, I think we are obviously more selective today. Just like in Fosun Capital, we want to invest in those startups and the teams with obvious, number one, class one, and only one, like a tax in their respective, arena. That we want to truly like invest in those like top teams with serial entrepreneurship experience, and they know how to better coexist with the giants, and they are familiar with the market leaders, ecosystem. So, for VC investors or growth stage investors, we are aiming at the midterm and the longer term, like a more, I would say, through some concerted like efforts, not just with the startup entrepreneurs, but also with the strategic investors, right, from the industry leaders to cohort invest in those companies to make sure they will be, better secured ROE LPs, investment. Yeah.
So Hemant, conscious of the time, I want to talk about responsible investing, because clearly it's something you're very passionate about. I touched on the introduction about, ethical AI, lots of discussion, exercises, governments, regulators, human rights organizations all around the world. Your thoughts on a big topic?
Yeah, this is an area we've been working very actively with the White House, the Commerce Department in the US, in Brussels, as well as folks in India. Because one of my biggest concerns is we don't repeat the mindset of move fast and break things in this period with AI. And one of the reasons we need to have a heightened sense of urgency is, unlike the cloud, which took a decade to really spread across industries, AI is, for the first time, there's a technology topic where every CEO in every boardroom, in every industry, in every country is talking about how to use AI at the same time. So there's a chance that the applicability, it can be a lot faster than we think, which means we don't have a lot of time. We can't let unintended consequences manifest at scale and then have to go deal with that. So the question is, how can we be a lot more intentional in the way we build companies using AI? That comes down to explainability, accountability, transparency. Not all transparency. You don't have to highlight your core IP around weights and things, but you do need to talk about sort of the motivations with which these products are being built. And then are you actually building engineering practices that are multi-stakeholder to understand the effects of your AI across all stakeholders? So I think there's a evolution of mindset and mechanisms that needs to happen around how we use AI in our companies. And the answer is going to lie around how do we change our best practices in the entrepreneurial ecosystem, and how do we collaborate with policymakers so that we accelerate the positives that AI can bring, because this can actually be a great force for good in society in empowering human potential, but in a way that we minimize unintended consequences.
Okay, 1 minute left, rapid fire question for both of you, starting with you, Hemant. Sundar said that it was more transformative than electricity and fire. I won't ask you that question, but do you think AI is more transformative than the internet as we know it?
I think it will be. Internet brought a more efficient connectivity in society. I think AI will transform human potential. And so I do think if we use it properly, it's going to have the potential to solve problems at a much bigger scale than just what internet brought.
And I have a 5-year-old. So what career shall I pivot him to, given most of the jobs that we're all doing here today probably won't exist by the time he comes into the workforce?
You know, it's interesting. I think two of the biggest areas for us to focus on are the use of biology, where AI is going to play a role, and how we develop biological sciences and treatments and therapeutics. And the second is around energy transitions and climate change. Those are two massive industries that are going through transformation with AI.
Okay, I'll tell him that. Mike,
Same question.
AI is transformative as the internet as we know it?
Well, I think AI at the end of the day will go along with Web3. That's my firm, belief. Because in the real physical world, like people's properties are well respected and protected by the law and the mechanism and on how our society runs. But in the internet, it is still a non-trustworthy world yet. So at the end of the day, I believe there will be a new global landscape of what I call the digital or AI sovereignty. So we have to be, as AI investors, per se, we have to go global and be local and better understand the social and the human context of where the AI survives and thrives over times, and also at the end of the day work very closely together with our global partners, with the governments and the societies and NGOs, to define the cross-border standards and also maybe the alliances on how AI will run across the borders. But at the end of the day, digital assets is another topic that still, today many people care a lot about. This is why, Web3 and the cryptocurrency are so prosperous among the startups. Because people dreamed of not only protect our own physical goods and well-beings, but also protect our digital twin, properties, right? So that's how I think AI will take over a longer time, along with the next generation internet infrastructure to get truly boosted.
Okay.
Yeah.
And what career advice do you have for my 5-year-old? If you had to give him one subject to make sure he studies, what would it be?
Because obviously I'm from the WE and computer science background, so I still believe that software, now plus with the infusion of hardware, it's going to redefine the world. So no matter WE, computer science will be a very good overall trend because, and also with the co-pilot of a very powerful AGI, I think it's going to make the engineers' work much easier and favorable.
Great. Well, Mike, Hemant, thank you so much for being inspiring guests.
Thank you.
I wish you all the best in your AI investment journey, and please do think of us when you become billionaires.
Sure.
With that, thank you very much.
That's a wish for everyone. Thank you for wonderful moderation.
Thank you very much. That was such an insightful sharing, and I love the last question. Which career advice should we give our kids? I also have a baby girl, and that started the conversation in my head. What am I going to advise her to do? Well, our next session is the first keynote of today on this stage. Thank you very much. Thank you very much for your sharing. Spark Tang, he's the Chief Strategic Officer of Huawei Blockchain and Chief Technology Officer of Huawei Cloud, and he will be sharing his insights around blockchain, cloud, the internet, AI. This session will be conducted in Mandarin, so if you need translation, remember, you can get your translation copying the QR code. Please welcome Mr. Spark Tang.
OK， 应该叫下午好。然后抱歉，我这个没有准备出这个英文材料，然后就这次呢，我拿中文来给大家介绍一下现在目前 Web3。对。哎，哦 ，sorry。我今天介绍题目是 Web3 重塑金融服务的新模式。然后呢，我首先自我介绍一下，我来自华为，现在目前负责华为的 Web3，Blockchain and CBDC，主要负责这区块业务。主要今天我们想看一下 Web3 在金融上它到底能带来什么样的新模式的发展。 首先呢，我们看一下，其实最近大家都在谈 Web3，其实从今年的4月份开始，到现在，大家谈了很长时间 Web3以后呢 ，Web3里面到底什么是 Web3？其实大家一直在质疑。其中有一个我们从Forbes 这块得到的结论来看的话，我们认为 Web3是一个能够分布化的一系列的一个基于 Open 的，然后基于 Interconnect 的一个分布化的应用系统。这是从技术角度来讲。其实我们也知道，在国内的话也好，还是在香港也好，大家一直在谈的问题是，第3代互联网和 Web3到底是不是一系列的内容？其实这个争论很多，但是大家得到的结论其实并没有开来。那从我们这认为呢，第3代互联网 Web3应该属于第3代互联网的一部分，它是基于现在目前以虚拟经济为核心下的第3代互联网的应用。所以说呢，基于这个应用的话，我们看到。Web3 呢，它的核心在哪儿呢？它的核心其实有2个，一个是分布式的经济，第二个呢是基于价值互联网。何为分布式经济的话，我们认为第3代 Web3 呢，其实目标做了什么？目标做的就是分布化。我们不光是现在目前说的 GameFi 也好 ，DeFi 也好，还是说我们现在闭锁也好，其实讲究的什么？讲究的是分布化。如何把分布化价值能够更好的体现出来，这是现在目前 Web3第一个价值点。而第2个价值点在哪儿呢？第2个价值点叫做价值互联网，要的什么？要的是可信，要的是有激励，要的是能够安全。这是现在目前 Web3的一个核心。包括我们在4月份看到的这个 Web3的这个论坛里面，大家讲了很多的这个 Web3的应用，但是大家谈了很大的问题点，就是我们如何提升 Web3的这个性能，如何提升 Web3的安全，然后如何在 Web3里面我们实现真正的这种商业闭环。其实大家在讨论这个事情，所以 Web3将来的发展方向一定会围绕分布式经济和这个价值互联网的方向来进行演进。基于这样的情况下，那 Web3 到底是什么样的一个结构呢？其实我们看到 Web3 无非就是2类结构里面，它的底层会压入现在目前的区块链，所以它会分成2类架构，一类就是 Hybrid 架构，一类就是这种类似于全分布式架构。全分布架构情况下呢，未来我们认为 Web3 的架构里面呢，围绕这2类架构来构筑 Web3 的一个未来的价值的一个呈现主体。在这个分布架构里面呢，其实才呈现出来我们包括我们的钱包，包括我们未来的记账系统带入其中。不管是分布式也好，还是包括 Hybrid 也好，原则上来看，我们认为 Web3 将来会跟区块链进行紧密结合，围绕现在目前 To B、To G 乃至 To C 全业务的系统下，更好的进行结合，才是它现在目前的根本。所以我们认为未来架构应该往这2个方向架构上走。往这个2个架构上走呢，这里面就看到，就是 Web3 要进行重塑现在目前金融模式，一定会把香港的虚拟经济和现实经济进行结合。因为单纯的虚拟经济来看，我们看到了它只是一部分，不能代表整个香港的 Web3 的发展目标。它一定会把 Web3 的方式怎么能结合到现在目前的实业中，也是大家讨论的问题。我们看到汪洋校长其实香港科技大学汪洋校长也在讲，我们要做 RWA， 我们要做稳定币，目标是什么呢？我们目标就是为了实现我们在现有的这个虚拟经济下，能够跟实体经济进行有效结合，能拿现有经济跟实体经济的这种价值来进行互补。否则的话，现在目前的这个 Web3 跟2018年的那个虚拟货币有什么区别的？没有什么区别，无非就是又换了一个新的名词，又换了一个新的模式而已。没有任何新的改变。Web3 如果是按照那个模式来走，它本身的发展一定会受到很大的限制。所以说，我们认为 Web3 将来的发展一定会跟实体经济进行挂钩，有效的挂钩才能体现 Web3 的一个更好的价值点。那这样的情况下呢 ，Web3 将来要做一个什么呢？要做一个 Web3 的基础设施，要做一个 Web3 的产业云，来更好的帮助现在目前的 Web2 到 Web3 的转型。Web2 到 Web3 转型，它要做什么呢？它其实原则上是把原有的 Web2 的集中化模型转成 Web3 的这种分布化模型。转过去有什么给企业带来什么价值呢？无非就是希望企业未来的价值点从原有的这个由集中化控制点变成一个分布化以后呢，真正实现我的世界我做主的一个概念，让你的企业可以自主控制你的现在目前所有权，让你的企业在所有经营过程中能够自主的获得相应的这种分成收入。让这种分成收入成为未来商业这个很好的一个价值点，所以它底下会做一个底层。那在这个底层里面，单独的 Web3 它不仅仅是一个区块链，它需要全技术的支持，它需要5G 和6G，它需要现在目前的网络，它需要的 AI， 它需要现在目前的区块链乃至大技术和云计算。它是 Web3 是围绕未来这种技术上形成了一系列的技术组合拳，形成了一个技术融合体来构筑现在目前 Web2 到 Web3 的转型。所以说 Web3 和 Web2 的转型的情况下呢，它要一个平台，要一个基于基础的一个平台能力。基于这个平台能力里面呢，我们看到我们最近的香港搞的数码港币CBDC， 我们拿那个 CBDC 叫 Central Bank Digital Currency， 其实原则上它在做什么？它在为 Web3 未来的发展在做重点的这个支撑。在重点支撑里面呢，我们看到为什么要做 CBDC？ 其实全球大约有多少个国家在做？有全球有大约86%的央行都在做 CBDC。央行各个国家，包括我们说的巴西央行、香港、泰国、澳门，然后美国等等各个国家都在做相应的这种类似于的这个 CBDC。无非它讲了3个点：成本，还是要降成本。它的成本在哪儿呢？在于现在目前企业之间交易过程中，如何把成本降下来，用分布化的东西、分布化的技术能够实现它成本的降低，是它根本。所以它这里面有3个点：降成本。提升现在目前的一个金融的一个重塑现在金融的一个重新一个地位。第3个原因呢，就是让未来的世界真正的叫做一个什么呢？作为一个可以促进数字化的发展模型。就未来各个国家都希望有数字化的发展模型和数字化交易模型来带到里面。所以这是全球在发展 CBDC 的根本。那在左下角里面，我们看到，其实我从这个左边这块呢，从原有的支付系统到现在元宇宙支付系统等等，说的很玄乎，无非就是说将来的支付由集中化支付变成分布化支付能不能走成？现在是目前是从现在全球的发展来看，这一定是必经之道。那必经之道里面呢，可能从我们看到各个国家，包括这个美国的 DDP 项目，数字日元、数字欧元，包括卢布，包括电子克朗。然后呢，所有国家的货币里面基本上全部围绕这个分布化系统构筑的 CBDC 这个模式来看，已经成为一种主流了。大家都希望来做这个主流。那香港也在走我们现在目前的数码港币。当然，香港如果将来还有我们的 RWA， 还有我们的稳定币，可以跟数码港币做有效的补充，来实现这种多重货币下的支付的一个模型的一个相互之间的一个迭代。那在这个迭代里面呢，为什么要出一个 CBDC？ 为什么不能用稳定币？因为是为什么不能用相应的虚拟货币来做呢？因为本身数字 CBDC 这个模式是一种法定货币，它不存在，它跟稳定币是有点类似，但是它没有这种例价过程，它是一个法定货币关系。但是 CBDC 里面大约有7个字节的这个 CBDC， 它是可编辑的，它为了实现这种编辑的可编辑性，有可编辑性的情况下呢，它就需要现在目前的智能合约。由这个区块链的智能合约来构筑现在目前数字 CBDC 的这种法定的可监管性带到里面。所以有了这个智能合约以后呢，可以跟法定货币挂钩，让这个货币真正的可以指哪儿打哪儿，指哪儿用哪儿的问题，让这个货币真正的有所属性，而不像现在目前我们说的这个单纯的虚拟货币仅仅是一个交易关系，而真正未来的 CBDC 是一种支付关系。支付加监管形成它正常的一个流动，是未来 CBDC 在这个全球化发展过程中的一个主流。在这个主流里面呢，就是我们看到，其实原则上是交易智慧形成智能合约，加速现在数字货币的这种生态环境。其实当我们在现在目前我们在国内的话，数字人民币这块呢，其实围绕这一块，华为在做，我们围绕这个硬件生态和软件生态来构筑整体的这个数字货币的这种整体架构。在这个架构里面呢，我们有基础的一个能力，然后基础的这个硬件、软件、网络能力以外，我们在软件层单独把原有的智能单独把这个基于数字货币的这个金融级的智能合约把它做出来。做出来以后呢，为了解决什么呢？是为了解决在原有金融系统下能够高并发、高安全来做现在目前智能合约的一个开发，然后保障智能合约在原有的 CBDC 使用过程中能够提升它的并发量，能达到10000级以上。10000级以上的性能才能现在包括我们大家知道 Visa 的Visa 的 TPS 大约能做多少？2.5万。所以未来的 CBDC 在于真正的实验室应用中一定是10000级应用，所以说它的性能要求很高。应用进去以后呢 ，CBDC 用到智能合约加进去，它会用到什么场景呢？用到很多这种支付。大家可能在国内也好，不知道在香港有没有？在国内我们看到很多这种类似于这种卡式服务，然后比如说我们要做游泳卡，我们做美容卡。 其实我们当时为什么要充卡的过程中，不就是但是充卡是为了便宜，但是充卡带来了很大的风险，就是你的卡内的余额如果因为我们充完卡以后，这个卡的余额会放到哪儿？放在企业的账户里面。如果这个企业在经营不善的情况下，有可能这个卡的钱是退不了的。我们在国内其实遇到很多这种问题，带来很多的这种社会问题。其实未来用 CBDC 拿分布化的这种结构来做的情况下，钱是放在银行的，每笔消费都是通过这个里面划走现在目前的这个类似于数字货币 CBDC 来进行划取就用一次划一次。这样情况下，你的钱即使说某一天这个企业走了，然后你卡里面的充值仍然是你的，而且剩余多少仍然可以返回到你原有账户。其实原则上是什么呢？我们通过 CBDC 有效的保障了大家这个资金的安全。同时呢 ，CBDC 呢可以实现我们有些资金的定向使用。这里面我们看到资金的管理呀、支付啊，包括离线支付啊等等，很多方式都是可以用到 CBDC 这种模式来走。所以未来是依靠智能合约，可以更好的加速未来数字货币在生态上的一个发展目标。基于此呢，我们其实做了2个典型的案例，一个是跟中银香港，我们跟这次的这个金融周FinTech 周呢，其实我们跟金融香港也会发布一个这样的一个模拟数码港元的一个应用。这个应用呢，其实我们基于现在目前的这个消费券，这个消费这个类似于叫什么来着？应该叫补贴券。然后我们希望通过补贴，让这个数码港币可以换成一个新的一种发展目标。然后我们通过申请，然后把模拟的数码港币可以放到你的钱包里面。通过你模拟数码港币的话，可以跟你的原有的实体货币进行相应挂钩。通过智能合约，让你这个货币可以在支付模式上可以更灵活。而且它的支付端呢，可以依托于现在目前的 BOC Pay， 就是中银香港的这个配端。可以更好的支付，所以说我们发现用这种方式的话，可以更好的激活现在目前我们在端侧基于模式下的一种应用。它对企业来看呢，更多的是说呢，我简单明了，费用低，然后而且它很容易能够接纳。对于个人来看的话，它的安全性来看呢更高，基本上是达到这样的一个目标。这是我们跟中银香港的，然后这一块呢是我们跟深圳这边深圳农行做了一个。基于政府的这个公租房补贴的一个方式，然后公租房补贴呢，政府在有相应的这种资金管理，然后他们需要通过智能合约，需要通过数字人民币来构筑公租房在每月的补贴金下，每月的租房资金下实现定向的使用，而且这个资金使用的话，避免了由于现在有一些租房资金公司，它在这个资金的这个拿取以后呢，包括资金的挪用，解决它这个问题。所以说呢，在深圳这块呢，现在目前在大力推。我们除了这个深圳的这个公租房以外，我们将来会在深圳做这个类似于像我们做的这个医保，我们做的现在目前的这个养老保险金等等一系列的这种活动，我们都会拿数字人民币和智能合约来进行结合，来打造现在目前智能合约跟这种资金的有效监管联动。基于此的话，围绕这个供应链金融呢，其实我们也想做。我们知道，在香港也好，香港是一个金融社会，我们需要很多的这种金融的相互互动。我们在国内也在推。现在供应链金融呢，需要解决现在目前企业融资的问题。以前融资问题做的什么？做的是一个信用证的关系。但是我们未来希望能借助现在目前数字货币，乃至借用 RWA 的模式来解决现在整个在供应链金融过程中的融资问题，减少它的风险，构筑现在目前的信用凭证，来实现我们相互之间的一个金融的一种融资关系，降低现在金融企业的这种风险，同时增加企业的融资的容易度。这一块呢，其实我们基于 Web3 的模式在创新。国内的话以及香港，我们也希望我们这些香港的一些企业在相互之间合作，也欢迎我们的一些合作伙伴，包括我们会场的一些企业愿意合作，我们一块可以讨论。将来我们希望在香港打造成来一个基于 Web3 的供应链金融的一个未来下一代的使用模式。那最后呢，我们其实就想说一点在哪儿呢？就是香港的未来的区块链，未来的 Web3， 它将来是不分这个类似于什么公链和联盟链之分。公链呢，无非是它接入的一个币的一个模式而已。 联盟链呢，其实是它一种方式，不管是联盟链也好，还是公链也好，未来在香港应该打造成一个开放的区块链平台。基于开放的区块链平台之下，然后我可以实现这种虚拟货币的正式的、安全可靠的、可监管下的交易。我也可以实现稳定币跟虚拟货币有效对接，而且我还能实现什么呢？实现现在目前稳定币和 CBDC 的一个衔接。我们希望未来的在整个金融体系围绕分布化的 Web3 这种架构之下，让这个安全的交易更安全，交易更灵活。交易更便捷，让大家都能在这个交易中能够相互进行获利，而获得相应的价值点。我的演讲到此为止啊，谢谢大家。
Thank you very much to Mr. Tang. And now we're going to have a little break. We will be back at the AI Web3 New Frontier stage at 2. So make sure you are here. Have a good lunch. Bon appétit.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
We're not writers, but we help you shape your financial story. We're not an airline, but our network connects global businesses across nearly 160 markets. We're not a startup, but our innovation labs use new technologies to help keep your information secure. We're not architects, but we help build stronger communities. We're not just any bank, we are Citi.
Why should we trust these guys? Why do we continue to pay them to use what's ours? Why should we stick to the broken ways when we now control how to buy, sell, and trade what's ours? Even that. Why do we just accept that companies will do whatever they want with our data? Why don't we change everything? The system doesn't need an update. It needs a rewrite.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose. So we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
Well, we are back, and I hope that you had a good lunch. I also hope that you had great connections, that you keep connecting with the people on the floor. Look at the booths around, and obviously you can download your app and connect there if you don't know where people are. It's a very easy way to do so. Well, coming back to the AI Web3 New Frontier stage, why not keep talking about AI and generative AI, Gen AI, the talk of the town these days. Our speakers are going to tell us how AI could be applied to the financial services. To start the conversation, I would like to introduce our moderator, James Lee. He's partner at PwC, together with our speakers, Chak Wong. He's the head of MLCEO Time Series Reinforcement at JP Morgan & Co., together with Yusuf Demiral, Group Head of Data Analytics and CRM Wealth at HSBC. We have a quorum here. Perfect. We love to have a quorum to do. Daniel Lee, he's the Chief Digital Officer, Personal Digital Bank Product Department at Bank of China, Hong Kong. Another quorum, perfect. And Michael Demisi, he's the Managing Director of AI Hub, BNY Mellon. So now please welcome them all.
Good afternoon, everyone. How are you today? Welcome to the day one afternoon sessions of the Hong Kong FinTech Week 2023. I hope everyone enjoys the event so far today. At least I'm super excited. I heard about all the announcements from the keynote this morning. Super optimistic about our FinTech future in Hong Kong. So quick introduction about myself. My name is James Lee. I'm a partner at PwC, Mainland China and Hong Kong, overseeing our data and AI consulting business. But I guess the most important thing is, I am going to be your moderator for very exciting sessions, AI and Gen AI, latest trend in apply AI for the financial services. So such a hot topic these days, we definitely deserve a heavyweight panel of speakers. I know the MC introduced them by the name and by the title, but I think we would like to turn the spotlight to our panel speakers to briefly introduce themselves. Maybe I can start with you, Michael, first.
Sure thing, James. Great to be with all of you here from BNY Mellon. BNY Mellon is a global financial institution. Really touches about 20% of the global investable assets and the largest custodian. So we sit on remarkable data assets, and I work on driving initiatives, AI initiatives, to really help the firm and our clients and uncover insights so we can be more data-driven in our decision-making and increase our productivity.
Right. Yusuf?
Thank you. Yusuf Demiral. I head the data analytics and CRM team for our wealth and personal banking business in HSBC. And what we do, we use data, and we use all the data science technologies to really serve our customers better, and to predict risk better, and to automate and improve our cost efficiencies.
Right.
Hi,
Daniel?
I'm Daniel Lee, Bank of China, Hong Kong. I'm the Chief Digital Officer for Personal Banking and Wealth Management. At the Bank of China, we are starting, or we are on the way on the digital transformation journey. So I'm very excited to working with my colleagues, and definitely AI, Gen AI is one of the topics, and we discuss, we work on it, and we have quite a lot of projects on this. Yeah.
All right. Last but not the least, Chak.
So I work in JP Morgan, and we're mostly responsible for the more difficult end of the problems in AI ML for retail, the retail bank in US, and also internationally the investment bank and the private bank. So we specialize on rather specialized type of machine learning projects that are mostly for decision making. And as a part-time job, I moonlight as a professor, mathematics professor in HKUST as well. So.
Awesome, awesome. Just by listening to all the intro of the background about our speakers from all the top tier banks, I'm sure you will hear a lot of practical insights over the next 20 minutes. Maybe I will set the stage first by sharing two, I would say, executive insights our company, PwC, did recently to the global executives. Firstly, over 40% of the CEO in our survey, they said that within 10 years, if they don't transform, they don't think themselves or their organization will be economically viable. And AI is being called out as unanimously as the main key driver behind the transformation. So it's a real deal, everyone. And second is from the Gen AI perspective, which is a hot topic, right? So the top 3 industries this CEO told us in the surveys are which they think will capitalize on the immediate benefits are banking, pharmaceutical and life science, and media and technologies. So we have all the AI practitioners and leaders in the banking industry. So my first question, I would be more open up, more general questions. With what you have been doing every day, like what do you see are the key trends that for AI or Gen AI? Maybe I can start with Yusuf first.
Sure, thank you. I would answer this way, right? So what we do doesn't change, how we do changes.
Absolutely.
Right? AI is another technology, and we had many different technologies in the last 150 years. What we do is similar. We try to serve our customers with the financial products and services with the best customer experience. We manage our risk by predicting it better. And then we try to do this cost efficient, right? So this doesn't change. And AI, Gen AI gives lots of promises on this. I'll give you some trends that I see with some practical examples. So how we improve our customer experience. For example, in HSBC as of now, 2.2 million customers who use our mobile app, they have an access to our personal finance management tool, which helps them with loads of insights and recommendations for them to set their budgets, analyze their spending, and establish the positive spending behaviors for the future. Right? This is a great experience the customers can get. And secondly, second area, we talked about risk prediction. By using thousands of signals when our customers use our digital channels, we are able to predict fraudulent behavior better so that we can protect the customers, we can protect the bank and the financial industry as well. And number 3, a good example for the cost efficiency. So when you use any ATM, HSBC or Hang Seng ATM today in Hong Kong, the cash replenishment algorithms run, and they teach and they provide the servicing teams to do their routes. And by using predictive machine learning algorithms, we saved around 30% from these routes, and it's a great cost efficiency for us. So these were some practical examples that I see in these 3 different trends.
Okay, great. Daniel?
Yeah.
Anything you guys are doing at Bank of China?
I agree with Yusuf that we are still doing the thing, but we have better technology to enable. For example, I think most of the bank or organization maybe have a chatbot, right? And then the engine behind the chatbot, we are able to use Gen AI or AI to make it more maybe friendly, conversational, but we're still using a chatbot, right? So others, we are doing a lot of personalization. We have quite a big base of mobile banking customers as well. How do we use AI technology to know the customer better and understand the customer and push or personalize message to the customer. Also, we are building use a lot of this capability internally, like building a very powerful knowledge management kind of a platform, so that when employees or our contact centers use that to answer the customer questions. So more of those enabling co-piloting kind of a use case. Yeah.
Okay, great. Chad, I know you wear 2 hats, right?
Yeah.
You work in JP Morgan, and then you're also a professor in HKUST in these areas. Any particular insight on trends? See here?
I guess it's slightly different. I'm sure the audience have heard a lot about many applications on the media, but the most high impact applications are slightly sort of belong to the obscure end and require a lot more business knowledge. Let me give an example. You have thought that pricing is actually very easy. Suppose that our CEO wants to control our volume of products sold and use pricing to control the volume of products sold. But if you look at historically, price and volume are always positively correlated. Okay, so it's not that the higher the price, the lower the volume. It's actually the higher the price, the higher the volume historically. Now, why? Because that when people demand more products, then you can charge higher prices. Like when do you see higher airline ticket prices? During Christmas, that's when also the busiest time. So the more interesting application is actually in solving this kind of very classic problems, but using more deeper fundamental techniques like in AI, we call that counterfactual inference and causal inference. Last year, I think the year before, actually, the two economists got the Nobel Prize for this. So it is this kind of application that has huge impact on many of the mortgage, credit card, and many of these areas. So this may be slightly different from what people hear in the media, but that is actually very useful.
Great. Michael, you are based in US, I know. So you are at the leading edge of the AI world in financial services.
Look, I think it really touches on actually, our fellow panelists, touched on it, the different spectrum, and we take a very expansive view when we think of AI. So it is from the more conventional predictive analytics that actually really tackling the type of problems that Chuck talked about. For example, AI-assisted liquidity management is a big focus of ours.
Yep.
So you can imagine if you have a better line of sight what our cash position is going to be at the end of the day, the type of decisions that you make in terms of how you can deploy the excess liquidity would be different. Or if you have a better line of sight on the deposit levels, next month or the month after, the investment mix decisions that you're going to make are going to be different. So that's what we mean by data-driven decision making. And so some of that is actually internally how we manage our firm, and some of it is actually how we can enable our clients to be more data-driven in their decision as well. For example, we process more than 100 million trades any given year, and one of the industry challenges is a small fraction of that fails to settle on time. But clients typically find out that trade did not settle on time after the fact, and there's actually, depending on what market you're in, there are fines associated with that. But given the volume that we have and the unique position that we have in terms of how much of the market that we see, we can see that some predictive signals that we can extend to clients at the moment of that trade execution, so you can take action and prevent the failed settlement as well. So that's very consequential for clients. So that's a client angle. So that's the more conventional predictive analytics side. But Gen AI on the language side as well is something that we're quite excited about. And like we talked about, knowledge management, being able to really ask questions on your unstructured data and actually find insights and really help our employees be more productive as well. So we're quite excited, and it's a very applied lens is what we put on this capability.
Great, super interesting. I guess we have the topic of our session is apply AI, okay? And I know all of you day in, days out dealing with AI and data. So my next question would be more from a practical operational lens, okay? I guess many of you also would like to know more about these organizations, how they are doing the projects, right? So what are the key challenges, success factors? We heard a lot of use cases, right? Very, 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 very super interesting. But what are some of the challenges or key success factor you would share with the audience when they actually execute those projects? Maybe I will start with Jack first. Yeah.
Let me use an analogy. Suppose that I want to translate the dream of the red mansion, 红楼梦, right? From Chinese to English, or maybe to translate Tolstoy, War and Peace, into English. Now, if I can put Tolstoy and Shakespeare together and to do the translation, it's not going to work, because why? Tolstoy does not speak English, and Shakespeare does not speak Russian, right? Now, and many of the banks actually trying to basically follow this strategy. So they put a computer scientist, right, PhD computer science, and then they put another guy from the business and hope that they can work together and get something out. And the result is usually you get something very bizarre, and when you look at it, it doesn't even remotely resemble what you want. So, and most of the time, what the business dream up as a machine learning project usually is at best a speculation, and most likely a complete disaster. And what the machine learning scientists wanted to do as an application, at best, is going to happen in 30 years' time, and most likely never. So, so having a correct judgment and defining the problem correctly and finding what is doable is probably one of the most difficult tasks. And also that the modeling, the math is probably about, I wouldn't say, it's definitely not the significant part of the work. It's about small part. The most important part is understanding the problem. The second most important part is getting the system to be correct. The third most important part is delivering the thing so that day in, day out, it can actually run. So it requires significant cooperation across many different disciplines. And like all big organizations, we all know that it is entirely non-trivial task.
Yeah, so it doesn't matter AI or Gen AI, the human problem still exists. Like it's a communication and translation, right, of the requirements. Daniel, anything to share?
Okay, so we in the bank is actually in the business of trust, right? So when we first look at the AI, and then you see all the problem come out, like maybe they can answer you, but in some other way, right? So we look at AI, we say the important thing we need to consider is privacy, right? Because our customer, our money, the money the customer will ask, how do we deal with the privacy? Don't mix with maybe some sources that we don't want to mix, right? So that is a lot of time maybe we want to make it on premises rather than going to the big cloud. So that's one consideration that's very important to us. Secondly is that when we do anything, we need to really know where it comes from, what's the source, right? So even we do testing, we need to know, okay, when I put in this, the answer should be here, and then where this answer comes from. So that part is also very important for the consideration. And then third is also AI is a tool for us to solve business problems. So we need to understand what is the business problem we try to solve, rather than, okay, I have the technology, so where you want to put, it shouldn't be another way. Yeah. So that's some of the consideration that we have when we having these AI projects and applications. Yeah.
Okay, great. Yusuf? Very similar to what Chuck and Daniel mentioned, right? So it's very important to solve the right business problems and opportunities. And it is important to know how to execute, implement it as well, right? So while doing loads of experimentation is good, but at the same time finding the scalable commercial opportunities and the ability to connect it from the data to the or backend to the front end, where you can put it in front of staff members to assist them. These parts are more important than the algorithms themselves, right? Yeah. So that's very clear. I think just one third point I just want to add is, and we need to think from day -1, the safety, responsibility, the ethics, and we need to establish those muscles, because we are a highly regulated industry and we want to do the things right. And this is many of the, especially Gen AI related areas are the new territories, and we need to be establishing the muscles to test and learn and really taking the controls around the risk as well. I'm sure every day there's a business user calling you, right? Can you do this? Can you do that with Gen AI? And you have to tell them like, it's not that magical, right? So last but not the least, Michael.
Sure. I mean, it's for us, trust and innovation are really paramount as a firm, right? And for everything that we do. And so we have a very high bar in terms of risk management. So having a solid understanding of what are the risks, with this technology that may be new and not new, and how you're going to manage that is absolutely essential. But I can't emphasize enough that you want to start with the problem statement, not just be enamored about the technology, but really understand actually what problem statement are we trying to solve and what's the best way to solve it. In some cases, simple statistical model is the best way to solve it. That's perfectly fine. It doesn't necessarily need to be a Gen AI solution. But really starting with the problem statement, understanding what success metrics are going to be is critical. It's also critical knowing what our core competency. We don't need to build everything ourselves, right? Like, I mean, we're a financial institution. We have core competencies in certain areas. In other areas, we're better off to partner and actually work with, specialized capabilities to bring that in as well. And then the last part maybe I would mention is we should never underestimate in terms of the learning curve needed, and we need to invest in education across the company, right? Like, I mean, so talent is a key strategy, to get this right. And that is not just contained about the AI practitioners, but to the entire engineering organization, to the entire workforce actually, because we're going to be going to more of an AI augmented work environment. And so we really need to anticipate what that requires from our workforce and be able to prepare our firm, to do that as well.
Yeah, I do fully agree with that. The last point, especially before we call it data-driven culture. Now it's like AI-driven culture. Like, at the end of the day, it's like, everybody has to upskill yourself. And doesn't matter you're a business, you're executive, you are or just a fresh graduate from the university, right? So I believe, for my next questions, we're talking about the technology. The technology change every day, every month, every week. So my next question will be more forward-looking. So think about now we travel by a time machine, and now you're suddenly in a FinTech 2024, not 2023, okay, in 12 months' time. When you look back, do you think, when you look ahead, right, or when you look back, like in hindsight from 24, okay, or now, looking forward, do you think what would you have said differently? Or is there a particular thing that you would see like, oh, I really wish that, it could have happened, like, in 12 months' time, but it doesn't happen? Or what's on your wish list you really want it to happen? Like, doesn't matter, it's a technology breakthrough, can be a compliance, regulatory, like, provide a green light for a certain thing. What's top of mind for you guys? I mean, I'll start with you first, Michael, this time.
Sure. Look, I think even though we're talking about AI, predicting the future is not an easy thing. And I know there's a saying that, people tend to overestimate what's going to happen in the near future and underestimate what's going to happen in a much longer period. I think some of the exponential growth in the space may actually challenge some of that. What I would probably say is at this point, there's a lot of discussion about point solutions.
Point solution, yeah.
And when you're talking about Gen AI, particularly, one use case here, one use case there, I think it wouldn't be that much of a leap to really anticipate a near future where this capability is going to be embedded in practically everything that we do. And you would not be thinking of it that way. It just happens to be the engine underneath it. And how we search for information, how we can, retrieve, a summary, an insight, all that is going to be embedded. So we really need to focus on what's going to be available around us and what are our unique competencies, what are the unique things that we need to actually focus on as an enterprise and build that. So I think we're going to go from more of a point solution to really focus on systems that actually, and end-to-end solutions that are going to be more, hugely transformative.
That's an excellent point, yeah. Yusuf?
Yeah, so what I would say, I think, and I wish the hype and the reality will get more clear in the next 1 year. and we will be able to clean the noise and signals so that we can understand better what we are dealing with and what we will be building. And my really view, my prediction is with these technologies, we will have the chance to bring the best of humans and best of machines together. And we will invest in that, right? So because it has a huge opportunity to the supercharge human beings in what they do, in a more efficiently, easier, better, faster, in a more really precise way. I think the next 1 year we'll be seeing loads of developments towards that direction.
Yeah. That's also the exciting part of our career, right? Like, you know, in this space, like, you know, you never could like know what's coming in next. Yes. Daniel?
Yeah, I think looking forward, I believe the AI technology really will enable us a lot of things. So companies or banks, they are able to find the right business problems and leverage fully on the AI capability. That will definitely win. And maybe next year, this time, we will clearly see some winners in the space that they are able to leverage, or they are able to really use the technology well, rather than, you know, just trying different things. Yeah. So definitely, I hope that we will be one of the banks that, you know, like, among the winners. Yeah, to use the technology well. Yeah.
Okay. Great. Jack.
I guess with hindsight, I am less. I don't operate in the time frame of 12 months. So I was doing automatic driving research 30 years ago.
Okay.
And so far, I think
you're still driving by yourself, right?
Yeah, it will still take another 10 years probably. So and just to give an idea about how this thing progressed, 1982 was the year when Geoffrey Hinton, the Turing Prize laureate, actually published his paper that enabled neural network to be trained. And 1987, LeCun published a paper on convolutional neural network that forms the foundation of all the facial recognition and everything. 1998 comes up with the LSTM that basically deal with all the time series analysis and so on. Now, I mean, these are things that was done when I was looking a lot younger with a lot more hair, and now I'm retiring and I'm still seeing pretty much the same thing. And also that the main reason is because it requires a lot of understanding, and it requires a lot of infrastructure, a lot of things to get all things to work together to progress. And so I think we definitely will see a lot more application in 12 months' time, but it's not because of the improvement in technology or anything like that. I mean, most of the technology is here already. And I remember I used to teach a course called Computational Statistics about 10 years ago, which is the same thing as I'm teaching now, but no one wanted to take it. I changed the course title to Machine Learning. Now, and suddenly got a lot more students. Now, the course is called AI.
AI still in marketing.
It's called AI now, and I got a full room of students for the first lecture. The second lecture, as soon as they see the mathematics, they say, nah, not for me.
That's very, very interesting sharing. I see we still have 3 minutes left. Okay, I don't prepare these questions, but I will give 30 seconds to each of the speaker, right? Just to give one advice to the audience, you know, how they can like continue to evolve themselves, like, you know, in this world of AI, Gen AI, right? I'll probably start with myself first, okay? My biggest learning is try to network and mingle and talk to more people. This is the first time I met the 4th speaker backstage. I already learned 2, 3 things that, you know, bothered me, like, you know, from AI technical or business problems perspective. I learned quite a lot. So open up yourself, mingle, network with more, like, you know, like-minded people in this space. Michael?
I'll build on that. I think really all of us are learning in this space, and so take the time, invest to really just understand this capability that's going to be really around us and everything that we do. So it's a time worth spending, and actually, you know, discover that. I'm super encouraged. One thing about the Gen AI in terms of how much of accessible it is now for people,
Oh,
right?
yeah.
Like, I mean, and so
They call it democratizations. Yeah,
that's
yeah,
right.
yeah.
So experiment, learn. It's going to be an exciting future.
Right.
Exactly. Just to elaborate on that further, right? So it offers something to everyone, and no one should be scared about AI. Everyone should understand it better, and definitely it will improve lots of things that we do today. But still, the core things. I mean, humans are still having the control. Don't worry about it as well.
Great. Daniel?
Yeah, just now during our discussion, actually one thing I feel that is very true, that is that AI tool or the technology is so readily available. Sometimes we just use it and answer comes, right? So we will forget about asking some deeper questions, why this come up, and what is the theory behind it. So I'm saying that is a lot of time we need to know deep inside why this happened, rather than just use a tool and then say, okay. So it's a bit worry for our younger generation or the kids, that when they don't need to go deeper and find out the root cause or the root problem before they give an answer, and then that may lose it. So I think apart from use it quickly, but also we also need to understand the basic and the below into it. Yeah.
Okay. Yeah, and we got a full room today because we have Gen AI in our title of the sessions. Like, any advice to the audience?
I guess it's like learning swimming. It's great fun. It's actually not, it doesn't look very hard. All you have to is to move your arm and your leg in a particular manner. But it is actually a lot harder than you think. And it takes a lot longer to train, to understand, and to get it right than you think. But it's extremely rewarding and very great fun.
Great. That's wrap up our sessions. Let me give a big round of applause to our speakers. Thank you, everyone. Enjoy the events. Thank you.
Thank you very much, James, and all our panel of speakers. Great sharing. And indeed, as you say about Gen AI, it's very popular, so we should keep talking about it. Thank you for sharing. Well, now we want to know, how can we transform Hong Kong's digital economy? And our next speakers are experts on this topic. Leading the conversation, we have our moderator, Annalene. She is the CEO of GS1 Hong Kong. She will be having a conversation with Klaus Christensen. He's the CEO of Know Your Consumer. And also Herbert Chia, Board Director of Hong Kong Science and Technology Parks Corporations, alongside with Stephen Wolf, CEO of Global Legal Identity Identifier Foundation. Please welcome them on stage.
Hi, good afternoon, ladies and gentlemen. Welcome to this panel, which is talking about digital metaphors at scale, transforming Hong Kong's digital economy. First of all, I think thank you for the MC's quick introduction of our speakers. You can read the speakers' detailed profile in the program. I think first of all, we understand that this section is really talking about how to leverage on some of the key digital infrastructure for the digital transformation of Hong Kong. For example, commercial data interchange, for example, digital identity as building blocks for the digital economy development of Hong Kong, as well as to explore or discuss the power of data and digitization, especially how to help the SMEs access to financial services. And more importantly, Hong Kong is international trade. How would all this digitization and power of data helps Hong Kong in our digital trade, international trade? So this is really the gist of today's panel. And And I would also like to add that digital economy now is a very important contributor to the high value development of economy. According to World Bank, about 15% of the GDP is in digital economy is a big contributor and contributing to about 15% of the GDP. And it's 2.5 times much faster than the physical GDP. So, and to speed up or to further enhance Hong Kong's digital economy development, actually Hong Kong government is very committed. And last year, the Financial Secretary has set up a Digital Economy Development Committee. And Herbert, who is also on the panel, and myself, we are members on that committee. I think we are looking into 4 major areas, from digital infrastructure, cross-boundary data collaboration, digital transformation, particularly to SMEs, as well as talent development. So here, today we are very, very honored to have, to have lined up 3 distinguished speakers. We have heard, I'm not going to read the detailed biography, but Klaus specialized in KYC, Know Your Customer. Stefan, he's more on the digital identity, especially for global legal entity identifier foundation. And of course, Herbert, most of us know him as the pioneer or father of big data. So without further ado, what I would like to do is to start with, maybe each of the panelists could help to have briefly talk about what are your major initiatives in terms of digital economy in your area.
Well, let me start. My company, Know Your Customer, connects the HKMA's CDI system, the Commercial Data Interchange, to the company registries of the world. Now, why is that important? For Hong Kong trade to function and Hong Kong financial system to function, they need to be able to verify the identities of their corporate clients just as well as individual clients. And corporate clients are complex, and that's where we help. We connected the primary data source that really has the authoritative data about each company currently registered today in different jurisdictions of the world, 130 countries actually, to the CDI system, so that the Hong Kong banking system has immediate access to this live data. I think that's an important step to enable faster commerce and a better, more secure financial system.
Okay, and Stefan?
You all remember the financial crisis where there was big chaos, and part of the chaos was that the banks were not really sure who their customers were. And there were lots of regulations coming in, KYC is one of them. But there was the lack of a global business register that was very prominent in the discussion back then. Now, we are running a closest analogy to a global business register, but since there is no global government, it's not a government agency. I am the CEO of the Swiss Foundation, GLIVE, but we're overseen by 70 regulators from all around the world. HKMA is also part of our regulatory oversight committee. And we're making sure that identity for businesses, for what we call legal entities, and it could be a whole variety of things, not just corporates, that those identities are managed well and accessible as open data from everyone. And maybe later I have a chance to answer your question on what we're doing on the digital side, because this system was created and is in production now for 10 years. And now more and more people come to us and say, well, we would like to use identity real time. And we would like to have verifiable identity in real-time transactions. And that's where we're also offering a digital solution for identity.
I think most of the time I work on company or even government, that we see that there's a lot of data silo. And data silos looks like a very lateral form of, very lateral in most of the company. And then I think most of my work is also try to help breaking down the silo in between department of a company, or also department of the government as well as GBA, because GBA is composed of 9 cities and Hong Kong, and then Macau. There's a big silo there, and how can we make data flow within the GBA? And I think the past 1 year, actually, I'm working very hard on that, try to helping data flow more easily.
Thank you. Thank you for your brief overview. We have heard some of the very important digital infrastructure, like the commercial data interchange, which acts as a kind of consensus management. We also need the digital identity. It's not just for validation, but also to build the trust of the companies. So how do you think, of course, we're not limited to these digital infrastructure, but they are the key building blocks. So how I would just like to ask our panelists, how do you see these building blocks or others contribute to the digital economy in Hong Kong in particular? Or if possible, you can give us share some examples.
I certainly have a view of it. First of all, it seems a bit boring. Thanks, you guys are still here, but the generative AI was more popular. I get that. But digital infrastructure is actually extremely powerful. And I think, especially for Hong Kong as a big interconnector between cultures and countries, it's the right initiative to focus on and set a basis for a digital economy to work on. Without this infrastructure, we will wait for things to come up from the open economy, and that can sometimes take a while, and it's difficult to establish good competition and fast development there, because people get locked into vendors don't talk to each other. But by establishing here from the MA, which is an amazing precedent to go out there, this basis, we have 2 things in one go. We have a platform for vendors to compete, and we have trust by the MA, by the government, with central bank, injected into this system. And that enables commerce, that enables connections, and ultimately that enables human connections between cultures and across countries. And I think that is one of the basics of what Hong Kong always stood for, and what it can move into the future as well.
Yeah.
I think it's exciting.
I don't think it's boring. Hong Kong has a lot of SMEs, and we are in trade to us is very important. Stefan?
First of all, when we look at Hong Kong as a major trading hub, right? Hong Kong is very well connected with the rest of the world. 90% of all trade documents today are still on paper. It's a major initiative, of course, going around the world to digitalize all of that. But let's pause for a moment. What is paper good for? It is costly, it is error prone, it's timely, and everything else. We know all the negative aspects, but there's one positive aspect of paper that, in my opinion, is heavily overlooked, and that is it is interoperable. Everyone can trade with everyone else using paper as the interface. Digitalization means that you have now computer-to-computer transactions, and now all of a sudden we're talking about standards for APIs, standards for platforms, standards for this, for that, and so on and so forth, and I don't think that we have all the answers yet. We have standards in isolation, definitely, but not the integrated workflows that we need so that everybody can trade with everyone. Now, to your question on trust, when you have computer-to-computer transactions, right, trust becomes a new quality, if you like. It's not based on what we usually call trust in people that we earn when we establish a business relationship, On the computer side, and I would like to emphasize this, as a thought-provoking thought, we want to eliminate trust. Trust is a bad thing, because trust requires something that we don't want, and that is the belief that the other side is behaving correctly and the data is correct and everything else. So what we want to do is we want to replace trust with verifiability. And that's the new gold standard. It's called Zero Trust Architecture. A new gold standard, meaning that whoever is involved in the chain, you want to verify end to end that the origin is authentic and that the data that is exchanged has not been tampered with. And you want to verify this, cryptographically verify this. And then you don't need trust anymore. You still need trust in your customers and partners and everything else. But on the computational side, you can really go down the road of providing end-to-end verifiability.
Herbert.
Well, I want to look in that more on user experience side, right? Because it's, without the CDI, actually people trading data or sharing data everywhere. But then we needed to have a platform to facilitate the data flow, right? To make that easier, because that is experienced for company to company. If I want to share a data with one company and then I have to gain trust for that person, it may take a long time before I can do that. But if there's a platform there, if there's a way to vetting companies that are trustful, right? Then it's easier for me. I don't need to trust the party, but I can trust the platform, because the platform can help me having the data flow easier. I think that's the important thing. The reason why people are not using data that well, or people are not doing the data governance that well, is most of the times about it's really hard for a company to do that, and it's very costly to doing that. So on CDI itself, it's also the same, right? Because when you try to trade a data from one company to the others, if without a platform, it will take a long time. Without a platform, it will be very hard for them to do that, a high cost to doing this, and stopping people doing a data flow. So information is flowing everywhere 1,000 years ago. But now why we need that? And also answer that why, what's the relationship between the data and the generative AI, right? Because the data is the fuel of generative AI. Without that, you cannot have a, I would presume that when generative AI become much more, more people were using it, then we needed to have data. There's already people saying that they are run out of data for the generative AI to make it become more intelligence. So I would say that the data flow or exchange platform will be a very important utility for the modern digital economy.
Yes, I fully agree on that. We need this kind of very robust infrastructure to support, data sharing, including not just verification of, but also, the trust, in using the data. Klaus talked about, using KYC to help the bank to do better KYC so that the SMEs can, better enjoy, trade financing. And I would like to add that, even GS1 Hong Kong, we also offer, B2B, we are part of the CDI ecosystem as well, because we provide, a platform service called Easy Trade to enable, with CDI, the SME would be able to share their own data, the trusted data, to the bank to secure a better dynamic invoice financing. So all these, and of course, corporate, the LEI, being a trustworthy, international identity standard would help in international trade. So I think, this is a very, actually a dynamic and interesting development for Hong Kong as, to move forward for digital economy. But on this point, we talked early on that whilst Hong Kong focused on trade, 95% of the companies in Hong Kong are SMEs. So, I'd just like to hear maybe some of you who deal with a lot of the SMEs, for example, Klaus or Stefan, if you don't mind, talking about how SME can reap the benefits or the opportunities of digital economy, and how could they possibly overcome the hurdles?
I think SMEs and startups and young companies are the biggest winners of this digitization, because we work in the financial space. The financial system currently doesn't serve SMEs as well as large corporates. Large corporates have access to all sorts of payment systems, all sorts of bank credit lines, all sorts of financing options. But SMEs and small companies struggle with that. I've seen that myself. KYC, our company here in Hong Kong, is no longer a real startup. We're 8 years old now and profitable. That changes things. But it has been a rough journey to get there. Financing options were limited. And questions often end up where, well, how long are you with this bank? Less than 3 years? Well, call again then. And we'd like 5 years audited accounts, please. For a 4-year-old company, it's a bit of a challenge. We've had all these things. Now, digitization changes a lot of that. That removes barriers for everybody. But those barriers weren't actually there in the first place so much for established corporates.
Yeah.
They had access all the time.
Yeah.
But now SMEs have choice. There's different financial institutions. They can hop. They can access credit lines with automated credit decisions made through these new systems, with automated business verification made through systems like we provide. Much, much easier. The cost of onboarding goes down, and that's good for everybody. So they are the winners.
Yeah. Stefan, you have something to add on this?
Yeah, I think your last point, that the cost of onboarding is going down, is a very valid one through the digitalization. But on the other hand, we should also see two other effects that are probably two sides of the same coin. Asian Development Bank has released a study that we have a trade finance gap of $1.7 trillion annually. You can imagine how many deals have not come to fly because of financing issues. And that is often related to the inability to verify and validate the identity and the documents and everything else at the time and the speed that is necessary for that business. The other side of the coin is correspondent banking. So we see, especially in the development world, that entire countries are getting cut off from financial streams because, you know, there might be suspicious countries, suspicious activities, sanctions regimes, and all these kind of things. And large banks often withdraw from these countries and do not provide payment services or credit services anymore because it's too risky for them and the margin is too small, right? Digitalization can help both, in my opinion. It can help speed up the process to have easier access to capital. And it can also help, especially in the identity space where we come from, to support financial inclusion of small and medium-sized business, especially in developing countries.
I like to turn the question now from SMEs to data, because we just said that data is actually the new fuel of, the new oil of currency. And data is actually at the heart of digital economy. And of course, I'd like to ask Herbert, who is the father or pioneer of data. What's your opinion, or what's your insight that can share with the audience, how to leverage the data, how you look at the whole subject of data in terms of digital economy development?
I think we were talking about the international trade, right? Data can give us the visibility of what happened in that area. For example, if I want to trade a product, if I want to market a product from Hong Kong to China, of course I need to have a lot of data in order to know where is the market is and how can I deliver the product to the right consumer, to the right segment. On the other hand, it's the same when a China product want to ship to US, for example, in Europe, right? You also need to have this kind of data. So data, first of all, can help you enhance your visibility on, or understanding on what is the market and how big is the market, how can you pricing it. So it's quite easy to know that when you're doing the trading, without data, you'll be blind. So that's the,
And Herbert himself, is very active, facilitating, the data collaboration, data governance, et cetera, et cetera. But we probably don't have enough time to prop him into more details. But data, as I said, is very important. So from SMEs, the importance of data, or any of you would like to chip in a little bit on the data side? If not, I would also like to ask a very important question, and that is the role of government. Okay? In many economies, government is also playing a very key either enabling role or driver role. So what's your opinion of how do you see the role or suggestion of the role of government?
I think the answer is quite universal, that most of the government provide a lot of service to the citizen of a city, right? So if the government, for the digitalization of a government, can actually help raise up the bar, right? Raise up the digital, competency or the maturity of whole city. It's quite easy because, for example, like payment and also like a government service, for say. So that is very important point. Another one is that the government also own a lot of data, a lot of public data. In order to make the data, for example, like CDI, much more compatible, right?
Yeah.
Government data would be one of the way to push it up.
Yes.
So that's two different roles. One is that the government itself is a player on using a digital initiative. Another is the data source.
Very good.
And
Stefan, you want to say something?
If data is the new oil, right? What does it mean? It means if you don't pay the service with money, you pay with your data. That's what's usually meant, right? Now everybody, I assume every one of you as well, everybody is keen to learn all about the data from the others, but would like to keep the data that you own yourself for yourself. Data privacy and all these kind of issues. And to answer your question, I have a very simple view on that. Government platforms can raise the bar on data privacy and everything else. I'd rather put my data on a government platform with the assurance of the law than to go to, I don't know, a commercial platform where I don't know what the data is used for. So I think governments play an important role. The only caveat is, if each government does it differently, we get a huge interoperability issue around the world. And that needs to be addressed. I don't think we're there yet, but that needs to be addressed so that we can really, operate on a global scale.
Yeah, I agree there.
Klaus?
It's actually one of the points that I thought about when I thought about this question. I prefer a balanced approach in how much the government should be involved in these initiatives. So not too much, not too little. If we have too much overbearing management of these new systems by the government, we have a top-down approach, we usually end up with less innovation and less quick developments. Now, if we leave it all to the market, on the other hand, we don't get to interoperable standards or to a level playing fields between smaller vendors and larger vendors easier either. So concentrating on digital infrastructure, digital identity projects is actually the smart thing to do, and I think that's what Hong Kong did here, and it really shows the way for the future. You have a platform where the competition can work out, you have the trust injected on top of it, and we push that out to all the authorized institutions, as it's called here. That's AI for you as well, just saying, for MA. And it creates this new, faster track to digitization. I think that's just amazing.
Yes. Just to sum up, government is a data source. Government is also a facilitator, driver, enabler.
And giver of trust.
Yeah, enable trust. But we also need to be careful not to overdo, which may stifle, the business creativity. So we need to do a balance. So in view of time, actually it's a very interesting discussion. In a very short 30 minutes, we have discussed briefly about the data, how to leverage data and digitization, the SME impact on the SMEs, as well as the role of government. Now, we only have 1 or 2 minutes left. So if you don't mind, maybe for panelists to give us some keyword insight, maybe either one word or one phrase, just to say, looking ahead, what would be your tips to us to drive our digital economy forward? We need to be shorter. I'm watching at the clock, clicking.
So maybe Maybe I start. Everybody talks about artificial intelligence at the moment and generative AI with all the potential, but there's also a huge potential for fraud. Those tools lower the cost for the fraudsters to create fake material, fake invoices, fake data, fake documents, fake everything. While on the other hand, it raises the cost for those who want to verify that data. So we believe that the rise of the AI that we see everywhere, with all the positive effects, raises the question of authenticity and identity. Where does the content come from? Can I really rely on the content? And has anybody, tampered with it? So maybe that's a thought for the future, to think about how all of this will be integrated in the new world.
Actually, after Stefan, it will be easier because I was saying that the same thing. I think now we have already seen a trend that the synthetic data is coming. So that we need to learn about how to learn from synthetic data and how to make use of synthetic data. Where it's not, like 10 years ago, we never talk about when we have a photo, we say this is the data. But now, when we look into a synthetic data back 2 years later, we see that that's another data that is not real, but it's synthetic. Then we need to learn about how to handle it and how to make use of it. And that will be something that we're facing in very soon.
Well, from my viewpoint, I'm an entrepreneur, and I'm with Mark Andreessen on the issue. If anybody read the manifesto recent week, I think fully engaging with these new technologies is the way forward. Go for it. I use ChatGPT every day. It does 20% of my job. CEO jobs is not so hard. That's the way forward. And I think fully engaging with the technology is the first step. Yes, be critical, understand what it means, but at the same time, do fully engage. That would be my idea.
So, once we're talking about importance of data, the quality of the data, the trust that is behind this data, where is the data source, and this is Herbert mentioned about synthetic data. Excuse me, this is my first time. And of course, I think Klaus also gave a very good term. Once we are embracing the technology and being engaged.
Yeah.
So in conclusion, first of all, thank you very much for our panelists for sharing their insights to the audience. I must say that this topic is actually very timely today, because if we read the Hong Kong Chief Executive has recently released the policy address, and it gives a lot of emphasis on digital economy. We are very glad to know that he has actually laid the key foundation of Hong Kong's digital economy. There will be a setup of a digital policy office led by Commissioner. The emphasis put behind the e-government. And of course, the Financial Secretary has already approved, which will soon be put onto the market, and that is a 500 million digital transformation pilot funding scheme for the SMEs in targeted sectors. And I think all this, and of course, the overarching, the most important overarching, the DEDC report, Digital Economy Development Report, will be announced early next year. So a lot of the direction, a lot of the infrastructure are all prepared for Hong Kong to move ahead on this digital economy. So once and for all, thank you for the audience. Thank you to our speakers. Let's give us a big round of applause.
And for our moderator.
Oh, thank you, thank you.
Thank you very much indeed. Congratulations, Anna, and all our panelists. And now we want to know what's the future of credit assessments. And who best than our next speakers, who are going to be led by our moderator. Please, we'd like to have a photo. Jake Chen, he's the COO of Apple Idea, together with James Varga. He's the founder of Direct ID. We're still looking at the photos. We love that. I don't want to introduce you before we have a full attention from the audience. Thank you very, very much. Again, welcome, Jake. Welcome, James. David Finch, he's also with us here. He is the head of FinTech at TransUnion. And last but not least, Christina Ong, Managing Director, Head of the Business Banking Hong Kong at HSBC. Congratulations, welcome.
Our secret.
Yeah. Wow. I guess we'll take some time, let people get seated first.
Yeah, let the audience
settle.
Settle.
Right, I think we only have 20 minutes, so maybe I'll just rush through, right? So welcome, everybody, and thank you for attending our panel. You know, my fellow panelists, whom the MC have already introduced. If not, then please look them up. I'm sure you guys already are on your phone. So our topic, we're talking about credit assessments on open banking. Interesting topic. I already see a lot of eagerly awaited faces. Well, maybe we'll start with that, James. What do you think, like, in terms of Hong Kong and the jurisdiction that we operate in, where we are, et cetera, comparing to, you know, in your line of business, you obviously see this particular form of open banking and credit assessment across the globe. Where do you think Hong Kong is in terms of, in comparison to some of these places?
Yeah, no, it's a really good question, and I think it's in a very emerging space. I think we were talking about it earlier in that regard. Open banking, which has very much become a global trend. I think we're up to almost 70 countries around the world that have launched open banking programs. Provides an opportunity to use that data for use cases like credit risk and credit scoring. How do we as an industry onboard customers quickly and easily with some assurance that they're going to pay back the loan, they're appropriate for the loan, either consumers or businesses, and seeing those things converge together in places like Hong Kong is really, really interesting. I think we're still really early on that journey from what I've understood so far. You know, like we still have a bit of work to do. I think part of that is up to the industry, people like us, working with open banking and bank data to help out with credit scoring, to show use cases, to show the value, to show the impact that it has around financial inclusion or access. But it is a real opportunity for someone like Hong Kong, especially with that need to drive more inward investment, to attract more businesses, to be that gateway that I've heard a lot of people talk about, and to leverage that as an opportunity to open up more of the market.
Okay, well, very, very correct there. But I guess let's switch to maybe David. In terms of your line of work, where do you think Hong Kong is versus some of the other places? Let's be slightly more critical of the whole thing. Should we?
I was being too nice, is what you're saying.
You were being way too nice. Maybe we should, let's be a little bit more pointy here.
So I'm very lucky. I get to travel around the world and talk to investors, regulators, banks, fintechs, and what I see is a lot of the world is talking about open banking. I am from the UK, so apologies for the bias, but they've actually activated open banking to drive consumer empowerment and financial inclusion. And the key difference I'm seeing in Hong Kong is I think you're showing intent, but there's a big piece of the jigsaw puzzle missing for me, which is the regulator and or a government body stepping in to mandate this. So for me, it feels like there is an attempt to activate open banking, but to fully empower the consumer to support financial inclusion, to help those thin file folk, to help people get better mortgages. I fully believe the governments need to mandate this, and then everybody will participate, and that will ultimately benefit the banks, the financial institutions, but also the end consumer.
Okay, well, that brings into a good lead up, because our lovely Christina is obviously representing HSBC, as you can see on her badge. So, Christina, how about from the end user perspective, right? And then also as one of the largest intermediaries around the region, right? From HSBC's eyes, what do you think? What do you think about?
Yeah, I think James and David has correctly pointed out the journey in other parts of the world. But in Hong Kong, maybe I supplement a little bit. We start these open banking API day back in 2018. There are altogether 4 phases. And we had passed through phase 1 and phase 2, where we can put the product and services and application of those product and services through API. That's more largely for the personal banking side, but for the consumer side, the SME, the corporate side, we are still just at the account opening part. So like at HSBC, for our business accounts, we can use, our client can use API to submit documents to us such that they can open accounts. But going into the more critical part, which is the scoring bit, we do need more sort of efforts to make it happen. As of now, a sizable part of the corporate or commercial types of lending are still using the judgmental ways of credit assessment. In terms of credit scoring, we started that many years back, but we actually very support these open banking suggestions because it really helps to collate the data, the transaction data, the financial histories of the credit profile of the client in a more holistic manner. In the past, we need to get the client's information individually. It requires a lot of the effort from the client, also a lot of effort from the bank. But with these open open banking solution, we have very high hopes. It can help the SMEs or help the bank and help all the ecosystem partners that collectively we can make the entire sort of financial inclusion part more inclusive for the SMEs. But again, we, as David has mentioned, the government and different parties need to step up a little bit, in particular in educating the SME on the awareness, in setting some industry standards, such that we are aware what should be shared and what are the sensitive data and which part they should share longer, and the scope. There's a lot of things that clients needs to understand before they consider this sharing. And also for the bank's perspective, we have to work with many different partners. We have to make sure the data we share, because we are the custody for all the clients' data. We have the absolute responsibility to make sure those data when shared, they are secure and all the regulatory compliance should be met. If we don't do that carefully, that would create a big issues to the entire industry. So from that, we also need a lot of confidence when we're sharing the data. Likewise, when we get data from the third parties, we also need some industry standard to guide those data can be shared properly. I just cannot stop. I need to stop here. Otherwise, I'll keep talking about consent, about a lot of things.
I think that's fine.
They are more they are the experts in this area. So before this part, we've been chatting around how we can change the world.
That's great. Okay. So maybe we should take a step back, because I didn't realize that when we talked about jurisdictional differences and how Hong Kong can do better in order to support these great initiatives, I think let's take a step back and really, talk about what are the benefits of open banking and using open banking data for enhancing your credit assessment analysis, right? So maybe, I don't know, David, maybe at TransUnion, you guys, I'm sure you have the best sales pitch when you talk to people as to why you should adopt the solution. What's the angle here?
I think it's really a win-win. So if I think about the financial providers, you can have a full 360 view of the individual consumer or SME. So you can be making better credit decisions on your risk profiles for those individuals. If I'm thinking about FinTech world today, there's a race towards profitability. So that drive to making better credit decisions instantaneously, because you've got a better view of the consumer, means you're making better credit policy calls. You're also enabling automation of back office processes. So for the financial institutions, they're able to drive productivity. For the end consumer, you're getting real-time decisions. And then for the end consumer, you're getting those real-time decisions. But if you're slightly thinner file, if it's an off-view application, you get that view of, the financial institutions get that view of you and may well be offering you better credit, better mortgage rates, or enabling you to actually be financially included for the first time. So for me, it's a real win-win.
Okay. So, I mean, James, that also brings a good point, right? Which is traditional credit assessment is very static, meaning, Christina kind of highlighted that as well. Even if you get an API, or back in the heyday, it email or even post that you submit your financial statements, or you submit your accountant's reports, or your income statement if you're doing your personal loans. So in terms of open banking and using that for credit assessment, we said a more holistic view. Take that on the flip side, more real time, but I'll flip that on the flip side. But if I'm applying, how is it that I know some of my information is actually accurate, like, or real time? Like, I get to control what I submit, but once I, consent to an open platform, that takes away my control. So how do you see that?
I think typically open banking frameworks work as a consumer consented process, right? So I consent to share my data with you, but the data is coming directly from my bank. So it does have a high level of attestation or trust in it. Or you can rely on it because you know that it's not manipulated by me. Some of the challenge that you have with asking someone for a PDF of their bank statement is you can edit the PDF really, really easily, right? So the assurance or the confidence, the trust that we have in that data is a lot higher than some of those traditional methods. With credit scores, I think they're historical performance-based data sets, right? It's what I did a year or two ago sometimes. Open banking allows us to bring that up to speed now with, I think is highlighted, with a convenience from a consumer or an applicant of getting access to something quickly, right? Nobody wants the car loan, everyone wants the car. So how do we support them getting the car as quickly as possible while having that level of detail as a lender that we need to make a proper, accurate decision?
All right, that's a very good point. So, I mean, I realize we're actually we're on the AI stage, right? So everybody across, all of the different stages, everybody's talking about AI and new tech and all that. I mean, maybe I would jump to Christina. Like, at HSBC, how do you guys adopt to these new technology plus sort of so-called open banking and your credit decisions? Like, are you guys currently using any of these new techs, or are you guys implementing them, or have intention to use them? What's the story there?
First of all, we embrace all these technology, but from bank's perspective, these like blockchain, AI, they are important because they help us in the processing part. They help us with the scale. Very often the traditional banking ways of doing things is quite manual, and we need to have different rounds of checking. Just for example, when clients submit information with us, if the whole thing is operate on blockchain, that means we can have every step clearly mapped. So in terms of the identification of the source, the chances for those documents to get manipulated in the middle way, it's less likely. It's not absolutely impossible, but just chances are less likely. So from bank's perspective, we welcome this type of new technology in terms to help us to manage those types of concerns. But on the other hand, we also need to step up our own systems and technology such that we can embrace these new technologies. And at times, it's not a sort of one-stop or a sort of ways of doing things. It requires a lot of complicated and complex process in order to ensure the whole end-to-end are properly arranged. But even with all those challenges, the bank is very committed to invest in digital parts because we think this is important for the futures of banking. In future, all these information is becoming more and more transparent. If we have these open banking solutions, if it can really help a lot of SME to enhance their financial inclusion on them. This is important for the entire world. In the past, they are the one who always find it very, very difficult to seek assistance, in particular, not just from bank, from many other sort of service providers because of their lack of resources, their inability to provide a lot of information they need. They need help. So we should be there to use technology to help them. But on the other hand, we also need to educate them the importance when they share those data. It's their data. They need to be very careful when they share. So this is also involve the education bits from the SME.
Okay. So, I mean, David, again, drawing on your experience, because we keep talking about this sort of education process, additional support from the government, there needs to be a champion out there to push for open banking. Share with us in terms of your experience, not just from the UK, but where you see around the world, like what can people actually do out here? Like what are the practical steps that people can do to push for this?
So I think where we've seen this really grab high levels of engagement is it's a co-creation environment. So you would have the government mandating, you would have the regulator helping build an environment of contributors, you would have then the financial sector, perhaps the big banks, helping to build the rails. You have some of that already here with the APIs that are set up, but it's building things like data dictionaries, permissible use of data, how we're going to transfer data, those types of protocols, and then heavily regulating that to protect the integrity of the data. A consumer isn't going to give you the permission to go and look at all of their financial history if there is concern around the integrity of how you use that data. So I think building those foundations, but co-creating those foundations is critical. And I think with that, then you have a platform to build upon, but those foundations need to be absolutely rock solid to start with.
And there's lots of models to learn from. I mean, the UK, I've been involved in open banking for about 15 years and was involved in open banking being created in the UK. There is a blueprint there to use, right? There's lots of examples. Most of the world's taken a regulatory-driven approach to driving open banking. Some countries, like the US, have taken a commercial or market-driven approach, so they've tried to flip it on its end to say, well, as industry, let's build those use cases, let's show and illustrate where the value is and take advantage of that as a community, right? So there is the two sides, but there is easy ways to get started, right? And then the rest of it is how do we use the data? I think is where the AI comes in, is how do we leverage that data to answer questions like what is someone's income and affordability? Are they going to default on the loan? What is the risk of me giving this product to that person? And from our experience, open banking performs better than traditional credit scores. So to say, I think
it enhances it.
Yeah, definitely. There's a huge opportunity there, especially in countries where traditional credit scores aren't as developed, right? It gives us a chance to level up the world, to be more financially inclusive.
Well, I can't let you go, James, since you opened this topic, because we're all advocating for this thing as if it's the second coming. So what can go wrong? Right? If we really push for this as a community, as a city, go to the government, go to the CE and say, we really need this. Give us regulatory support and really push for it. What are some of the things from your experience? What can go wrong?
I've not seen a lot go wrong. I think the challenge sometimes is the amount of effort it takes as an industry to adopt these things.
Right.
Financial services banks are designed to protect value and wealth and data, right? And what we're trying to get them to do in this case is do something different. And nobody gets fired for doing the same thing. We get fired for doing something different. That's where the risk comes in.
Right.
Is if I don't understand what I'm working with, if I don't iterate through that process and learn what open banking can and can't do, then there is a risk that I might do something wrong. And that's the fear. In my experience, that's the fear that limits the adoption of it.
Okay. David, same question to you. What do you think can go wrong?
What could possibly go wrong? I think for me, I'd spin that on its head, right? If Hong Kong wants to be seen the leader in Web3, the leader in AI, the financial center for Southeast Asia or a broader geographic footprint, you're handicapping yourselves by not taking this first step. So to me, if you want to get towards open finance, decentralized finance, Web3, there's a start to that journey that you can't actually miss, and open banking is that. So for me, I think if Hong Kong has the true appetite to be that world leader, you need to start in this particular foundational step, in my view.
Okay, well, Christina, in terms of HSBC, you mentioned there are many steps. I'm sure there are many hoops to jump in at HSBC if you want to push something. So what do you think about this? Like, what are some of the messages you would have for colleagues and friends and everybody else in the industry who wants a piece of this?
No, because all the key challenges have mentioned by the gentleman. I would say if we want to be successful, we need all the participants or the stakeholders to achieve a win-win-win situation. It can't be some win, some lose. Some of the issue we see in the industry now is some of the peers, our peers, may consider that why do I need to share the data? Data, it's important. If I share to other competitors, that means sort of it denies my power. So that's something we see in the sector that cannot sort of fully promote this open banking part. So in order on the value extraction part, so we think we should be, for those who are willing to share the data, also have a piece of winning piece. And for those who are receiving the data, have a winning piece. And for those who are benefit from the data, should have a winning piece. But this is not an easy topic. But again, I think the fundamental concept is all the parties need to achieve win-win-win. Otherwise, this is not going to be sustainable.
And just to quickly comment on that, of all the use cases that open banking opens up, in the UK we started with 4 key use cases. Credit scoring, for me, answers that question. It's the win-win-win. It benefits both the consumer and the lender in a way that no other use case on open banking, I'm being slightly provocative there, but very few other use cases on open banking provides that benefit. So this is where there is that opportunity.
Right. Maybe allow me to challenge you a little bit. You mean benefit the lender. It could might not benefit the lender who contribute most of the data. It might benefit the lender who never have a chance to bank that client, but get all the data about the client and offer the most cutting edge types of facility.
Absolutely.
But that's just a scenario. We need to live with it.
Yeah. No, if you provide the data but don't take it, there's a risk. Yep. If you do take the data, then you can still take advantage of it. So it's how you position, I think.
But still, we think there is a way for even the lender who contribute the data can have a chance to win as well.
Completely, yeah, by taking the data, absolutely. Yep. Yeah, we agree.
All right, I guess that's, well, we kind of got there in the end, but we can take that debate off the floor. We've had, a great 20 minutes on this. I'm sure we'll have to pass the stage to everybody else, but thank you very much for your attention, and thank you to our panelists.
Thank you.
Thank you very much, Jake. And it's always great to have conversations and going back and forth. If you want to learn more about what our speakers think or their ideas, take out your swap card and connect with them. And another topic, how we are revolutionizing payment, the way that technology is changing how we transact. And I was just having a short conversation with our moderator, Sandeep Patel, about the fact that we are already revolutionizing those payments, but there's many things that are going to be coming. So please stay for this session because it's going to be very insightful. Please welcome once again our moderator, Sandeep Patel. He is Asia Liquidity Management Head and Digital Assets Lead at CT. Yvonne Yu, Regional Head of Global Payment Solutions at HSBC. Ivy Tang, Chief Revenue Officer at BBMSL. Stuart Smith, Global Product Head of Tokenized Deposits at Visa. And Stella Lim, COO of Part Hire. Please welcome them. I want those claps again. Welcome them on stage.
Good afternoon, everyone. Today we are discussing a very interesting topic. And if you look at one word that summarizes a lot of things that are being discussed since morning, that word is digitization. And I personally believe Asia is at the forefront of digitization. You see any statistics. You see statistics like, e-commerce and digital commerce, almost 55% of global e-commerce is happening here in Asia. You look at the digital native companies, you look at the unicorns that are born here in Asia, you look at any and every form of digitization, Asia is clearly at the leading edge. And one more aspect there is the payments industry. The amount of payment digitization we have seen in Asia, practically you can go to any country in Asia, and the country is leading in instant payment, faster payment schemes, 24/7 payment schemes, and that lead is something that's enabling commerce, I feel. Not just that, I think payment was always seen as a utility in the past, but I think recently the industry has changed its views, and payment is considered as a true enabler of business. Now, what we are going to discuss today, and I am really privileged to have the panel, which is so experienced and so rich in ethics, but the idea is to really look at what new technologies we are going to see, what new changes we are going to see, and there is a lot at stake given blockchain, programmability, some of the tokenized cash, tokenized deposit kind of concepts. So there's lots to discuss today, and with that, maybe I'll just turn to my panel and just if you can provide a brief introduction of yourself and what your company is focused on.
Hello everyone, I'm Yvonne Yu, so good to be here. I'm the regional co-head for Global Payment Solutions for Asia Pacific region. So we have just embarked a 5-year digital transformation strategy. So I am so pleased to be here to be able to share some of the development that we've done and to share some of the observations of the trend. Thanks.
Thank you, Yuan.
Hi everyone, I'm Stella Lim, COO at Patio. Our company is a global unified ledger market infrastructure where we provide the solutions for clearing and settlements for cross-border payments. On top of that, it is programmable, money, composables, and also interoperable. We're able to do FX PVP solutions and swap solutions as well, plus liquidity management for the community.
Hi everyone, this is Ivy from BBMSL. I look after the regional revenue. I just joined the company about 3 weeks ago, and then it's in a very exciting place. And I'm amazed with the products and solutions that we are able to support not just the conglomerates or the enterprises merchants, we also support micro merchants, SMEs, and from payments to SaaS, and also, we also do a lot of interesting and innovative solutions to support the merchants to grow in the region. Over to you, Stuart.
Hello, I'm Stuart Smith. I'm the product head for tokenized deposits and related digital currency solutions at Visa. We're currently focused on pilots in the digital currency space to realize benefits for modern money movement. Thank you.
Thank you, and I'm Sandeep. I'm representing Citi here. Citibank, again, as you know, is a leading payment provider. And we have made a lot of recent forays into new technologies, including tokenized deposits. And I'm very happy to bring that kind of thought process to the forum. So just to start, Yuan, maybe I can start with you, HSBC, very leading provider out here in the room. And there are a lot of new payment trends we are seeing. What are the brand new payment trends and how is it disrupting the businesses in Asia?
Well, there are quite a lot of that. So that's why I put a lot of script over here to share with you. So actually, we've seen a lot of development in the digital payment landscape in recent years. And I think the most progressive one that I would say is the instant payment. Now, RTP is one of the major developments in our industry. And across the 19 countries in Asia, 15 of them have already got RTP live today. Now, this development has propelled a lot of exciting innovations. Now, it is one of the key enablers for the always-on new economies and has supported many industries to transform the business model to enhance the competitiveness and customer experience with the 7x24 capabilities. So I just used a few examples to illustrate. Now, for the online food delivery company nowadays, they will pay the rider instantly for each complete order at any time of the day. Now, the reason is this is one of the incentives for the rider to keep up the quality of the delivery. Broker and dealer firms are no longer restricted to the banking working hours to trade, as the investor can top up their account anytime through the real-time direct debit capabilities so that they can fund their account and invest digitally around the clock. Now, in Hong Kong, we have also seen a lot of innovations propelled by the interoperabilities between FPS and the major e-wallets, which has enabled seamless fund transfers between the bank accounts and e-wallets to drive digital payment adoptions for the consumers and retailers. Now, there are some very interesting development in the e-commerce sector as well. Now, for example, solutions to enable sellers to receive payments from the overseas buyer through the overseas local RTP clearing. And that they can actually get the instant credit ledger update in the domestic account before the good funds arrives. Now, this actually has removed a lot of the frictions for the cross-border payments and improved cost efficiency and transparency. Now, the merchant box solutions that we rolled out earlier this year is curated based on this concept. Now, besides the domestic RTP, the development has also been expanded in the cross-border space. Now, for instance, Hong Kong MA announced today on the bilateral connectivities between FPS and the Thailand PromptPay. So travelers will soon be able to use a common QR code to pay the merchants in Hong Kong and Thailand through debiting from the bank accounts directly. This is a very good news for our Hong Kong retailers. Now, we have also seen similar bilateral and multilateral PMI connections across ASEAN markets and Japan to enable instant cross-border payments. Now, at this stage, most of the cross-border RTP use cases are retail-centric. But once this starts expanding to the wholesale side, it will for sure bring a paradigm shift to the entire supply chain landscape across multiple business domains. Besides IT and operations, I think that one of the key areas for preparations for all of us is for the treasurer to think through how they can manage the funding and liquidity to support on-demand payments and settlements around the world in different currencies, 360 days throughout the year. Now, other than RTP, the hot topic these days in the digital payment worlds are definitely CBDC, tokenizations, and DLT. I'm sure that you have heard a lot of speakers talk about these topics these days. And my fellow panelists will be concentrating to share with you their experience as well. Now, and in Hong Kong, we have just completed the e-Hong Kong dollar pilot to test the benefits of programmable money. On tokenized deposits, we have done the Hong Kong MA pilot together with Visa and Hang Seng, and also tested the concept with Ant Group for an intra-HSBC Treasury Fund movement use case. Now, while we are still at early stage, but we see these kind of developments has started to pick up the momentum, so it's very exciting time ahead indeed.
A lot of new trends in terms of instant, faster, value-added services being offered. But I think one concept I would like to pick is that programmability of money, which is a very hot concept. And it does require a lot of ecosystem players to be brought together to deliver value. And I believe Partier is at the forefront of it, bringing multiple banks and counterparties together, trying programmability and building practical use cases. What's your take in terms of how is that disrupting the industry in Asia?
Yeah, thanks, Sandeep. Yvonne have given us a very good intro into the new way of money movements, whether it's on the wholesale side or on the retail side. I think Partier, we were incepted or registered in business just 2 years ago. So we were born from Project Ubin, where MAS, Monetary Authority of Singapore, has actually led the industry to explore into cross-border payments on the wholesale side. So we are actually an independent company invested by Temasek, DBS, JP Morgan, and Standard Chartered. The use case is really looking into how to make cross-border wholesale payment more efficient, remove away all the fragmentation and the frictions. Yvonne talked about the bilateral arrangement between the Hong Kong government and also the Thailand government. So what we are looking into is really interoperable between all the different various systems, whether it is a digital or non-digital cash and asset, whether we are looking into the CBDC platform, whether we are looking into the traditional fiat currency, stable coins. So you need a platform that's able to be 24/7. Instead of real time, it's always on. You must be able to do round-the-clock transactions, allowing transactions and trade to be happened even after the RTGS and cutoff time, the window itself. And so atomic settlements. So atomic settlements is critical in this programmable money because it assures finality of settling both sides of the accounts. That means a transaction would have already pre-validated, pre-checked before it goes into the clearing and the settlements itself. And then followed by interoperable, because let us face this, no matter how much we're talking about the new technology, how fast we move ahead, there will still be a challenge in terms of adoptions, how fast the market will be ready. You will need to coexist with the traditional infrastructure and also with the new infrastructure. So the coexistence will require interoperable technology to bring the two together. For those who can run faster will go ahead first. For those who are getting ready, the new entrants will take some time to get up to pace. And then followed by programmable money. We spoke about that because it's a rule-based where you can then set when the transactions will happen, time-based, instead of waiting until the next day going into the intraday swaps policy. And then followed by composable, where you can then now marry both cash and asset happen at the same time, because in the current traditional world, cash is running on this leg and then asset is running on this leg. The settlements actually create a lot of risk. So if one of the leg fail, it failed the whole trade. So with the programmable money and clearing and settlements, they actually ensure that you can see all the liquidity management, everything happen at the same time. So in Patio, we actually enabling all these solutions to the market, and it allows the banks, the financial services institutions, to then create new products to be able to serve their markets better.
Absolutely. So I think it's a very concept. Faster payments are quote unquote catalyzing digital commerce. Programmable money is bringing different asset classes together and creating efficiency and a brand new market for that. But none of this is easy, full of challenges. There are a lot of risks involved in this area. So Ivy, what has been your experience in terms of all the new payment landscape, in terms of what risks are we exposing the ecosystem to? And can technology really help us cover some of these newly emerging risks?
I think there are two parts of it, right? Stella stepped on a very good points on no matter what kind of payments, be it on cash or programmable monies or on card rails or any kind of digital payments, that it imposes certain kind of risk. So looking at the first half of 2023 figures, basically the global digital assets fraud rate went up by 5.3%. And then it's actually 18% up versus year on year of 2022. And then interestingly, Hong Kong, if the consumer is actually based in Hong Kong, the fraud rate attempt went up by 18.3%. And then the source is actually from TransUnion. And what do we see out of these figures, and what does it imply? Is the merchants or the business, be it is SME or be it is whatever business that they're growing, is they have legislance of risk checking. So in fact, these are not new technologies, but the technologies is evolving. For example, back to 1 year ago, we were still using 3DS, which probably you know very well about the 3DS 2.0 has already been launched, and then the 1.0 version has to go down. So as long as the payment landscape is moving on, and then the payment technologies also need to be upgraded and enhanced. And I talked to a merchant just recently, and then they are actually working on expanding their soy sauce business. They're a manufacturer of the soy sauce company, locally based in Hong Kong. The way of how they deliver their products to their customers is basically to have the delivery man to collect the cash, and which is, to them is a very risky kind of exposures on those. And we develop solutions to help these kind of SME to grow their markets, to collect their payments in a digital way, and then also to upscale their business to basically reduce the cash flow problems that they can immediately collect in a safe way.
Absolutely, and thanks for that. Stuart, if I may kind of connect the dots, and we are all here to kind of learn as to what new technologies, what new forms of payments, right? And programmable money, tokenized cash, whichever words you use, is emerging pretty rapidly. Now, you come from US, you're based in US, and you have seen the world outside of Asia as well. The question to you is, what kind of new ecosystem, new promises, new hypothesis of value creation is it promising? And what can Asia learn from the experiments outside of?
Sure. Yeah, I'll start with our experiences in Hong Kong, as we recently completed our pilot as part of the EHKD pilot program, as Yvonne mentioned, along with our banking partners, HSBC and Hang Seng. This pilot explored the concept of a tokenized bank deposit for interbank B2B payments, along with a hypothetical EHKD for interbank settlement. Tokenized bank deposits are kind of a burgeoning area, right? It's a blockchain-based representation of commercial bank money. And they're gaining some traction in the payment space due to their speed and low settlement risk and overall programmability, right? Coming back to programmable money. And what we're finding with tokenized deposits is that they can actually serve as existing liquidity that users, such as businesses and consumers, already have in their banking accounts that they can bring into the Web3 ecosystem, right? So that enables a lot of very interesting use cases. The two that we tested as part of our Hong Kong pilot, the first was around a property purchase use case. Right, property purchase includes a number of different payments that are often time sensitive and high value. Tokenized deposits in conjunction with a hypothetical EHKD could potentially improve on some of these payments as they can settle 24/7 using always-on infrastructure, something that Stella alluded to as well, possibilities with DLT. The other use case that we tested was around acquirer merchant settlement, and we also found that tokenized deposits could potentially benefit there, due to the 24/7 infrastructure and nearly instant settlement as well to get money into the hands of the merchants faster. So any payment where we currently have a bit of a delay from authorization of payment to settlement of underlying funds, we could see that potentially being improved upon with this tokenized deposit and CBDC combo, right? Looking outside of our Hong Kong pilot, we're seeing a lot of kind of activity in the tokenization space, right? If you walk around the conference, you'll see many booths focused on tokenization, a lot in the news as well around assets being brought into the blockchain world. So that could include real world assets, physical goods, digital goods, as well as traditional financial assets like bonds and equities. And what we see with that tokenization of assets, they all need a form of liquidity to settle, right? To enable smooth transfer of these tokenized assets back and forth through the Web3 ecosystem, we feel that tokenized deposits could potentially fulfill that role for the retail and consumer level purchase of assets, while a CBDC could potentially be that for the wholesale settlement between financial institutions. So yeah, I think looking at some of the use cases that are popular now in various pilots that we're doing around the world, delivery versus payment is one that certainly stands out, relying on CBDC as the wholesale settlement asset. And the way that works is that you can potentially co-locate a digital currency, such as a CBDC, in the same ecosystem as the tokenized asset, right? And now you can do a delivery versus payment process where you swap the digital asset one way, payment goes the other way, and that's all in one atomic transaction, right? So that's, again, coming back to this atomicity of digital currencies and the ability to lower settlement risk in that way. So with that said, I know you also have some activity going on in this space, if you'd like to highlight that.
Oh, yeah, absolutely. I mean, from Citi perspective, again, we are an international bank and we are primary settlers for many ecosystems across the world, from clearing, trade, commerce to securities, etc. I think a couple of things we are kind of, basically focused on is creating an ecosystem for our clients which is blockchain based, which is based on programmability of money or tokenization of cash, and then allow that to commingle with the existing ecosystems, be it trade financing, be it liquidity management, be it payments, be it securities settlement. And in that context, I think a couple of experiments quickly mentioning. One is we are working with Federal Reserve to bring almost 12 commercial players together and establishing some kind of clearing and settlement so that we can exchange digital assets and digital currencies together. Because unless we expand this beyond our internal rails, we are not going to capture momentum. Second is an experiment we are doing a proof of concept as we speak with few clients on Citi tokenized deposits. So there are quite a few experiments going on, but I think the belief that you mentioned is something that we fundamentally believe, which is tokenized cash has its own existence and has its own value. It's not just, if you get a PS and if you can clear faster, it doesn't mean you do not need tokenized cash. You need tokenized cash, you need tokenized payments, because there is a lot of new value creation that is going to be unlocked using tools like that. Virtual asset is just one landscape, whether you are converting physical assets into virtual, or there are digitally native assets or securities for that matter. So I think the belief we all share is that common belief. But with that belief, let me kind of be a little provocative. Many people, and I'm sure many people in the room as well, believe that tokenization of cash is good, but are we going to see economics at the end of it? Or, for example, okay, we have seen CBDCs in this market, that market. What problems are these CBDCs really solving? Or is there really a solution? Because if I have faster payment, if I have wallets, do I really need CBDC? Or is CBDC a solution looking for a problem in the retail landscape? So I would be really keen to get your views on that. I don't know who wants to volunteer.
I don't mind going first.
Please.
Yeah, so I think with CBDC, through our pilots around the world, we are seeing some recurring use cases, such as delivery versus payment, as I was mentioning. The other area that we think is ripe for disruption and improvement would be cross-border payments, right? CBDCs could certainly potentially enable that if they're built to be interoperable with other CBDCs or other digital currencies, as well as with traditional fiat rails, right? So some of those use cases are standing out. In general, I think for digital assets to achieve adoption, there's a few things that they need, and this could be CBDC or tokenized deposit. The first is you need trust from the user that the technology is secure. The second is that the digital currency needs to be interoperable, right? It needs to be extensible beyond just the one ledger. And then third, there has to be a very clear user value proposition, right? Yeah. Why would a user actually adopt this versus using their traditional means of payment?
Absolutely. Maybe you on your views?
Yeah, maybe
Sure,
I can
Stella.
chip in. So what we have seen is that 18 countries out of the G20 countries are already at the very advanced stage of trialing or POC on a CBDC concept. So CBDCs, many of the countries are getting ready, whether it's in the domestic scheme or cross-border, but the only cross-border multi-CBDC or wholesale CBDC that is successful in trialing or POC is really the mBridge. So mBridge is the only one that has successfully combined 4 countries, China, Hong Kong, Thailand, and also UAE. So it's a multilateral. I think the challenge is looking into how to scale the solution itself and also to be able to meet the ongoing innovations and policy, and also how to connect a multi-CBDC outside of the core currencies in order to have a unified pool of liquidity.
Thank you.
Or maybe I can quickly supplement that.
Yeah.
I really think that CBDC is not looking for a problem, and actually is the key to resolve some of the problems. Because like for instance in Singapore, right, we have just fresh from the press that we have launched a pilot called Project Epsilon, which is to use the blockchain-based solution to support the real estate ecosystems to digitalize the documentation and workflows to remove frictions. Now, programmable digital payments is the key component to complete the entire journey. And given that CBDC is not ready, so HSBC has put together our own HDSU is a proprietary solution to enable this to take place. However, I suppose that if CBDC is able to operate in an interoperable environment, then it's definitely going to be very transformational in this kind of journey.
Absolutely. So just to kind of summarize, when it goes wholesale and when it goes cross-border will be the true value unlocking. So that's a great thought, and I think we are running a little out of time, but just if I may ask you to summarize one message for the audience, what will that be, Stuart?
Collaboration across the industry will be key for driving the next wave of payment innovations.
Lovely collaboration. Okay, Ivy?
I think this is a very important point because you see different values from different industry and also from different players, for example, like banks or even merchant services or issuer. I think we have to work closer together to kind of complement what you can do better or what I can do better.
Perfect. So that also sounds like collaboration. Okay, Stella?
I think adoption of the technologies for those who are fast, advanced entrants that have done it. So look into how you can scale it. For those who are new entrants into the DLT technology, hop on it immediately.
Thank you.
I just copy a phrase I've learned, right? If you want to go fast, you go alone, but if you want to go far, you go together. And to me, I think like collaboration is echoing what Stuart said. And I think that interoperability in this digital payment journey is very key. So we should strive for this.
Absolutely. We are in it together, and I think for me as well, I think it's not about lift and shift. It's not about efficiency only. We got to find that green space that is going to create economics out of all these innovation and new technologies. So with that, big thank you, and we all will travel that road together to Johan's point.
Thank you.
Thank you.
Thank you.
Thank you. Thank you very much, Sandeep, for leading the conversation and obviously for sharing that wonderful final insight, collaboration. We all love that word. And collaboration takes us to trust. Building trust obviously gets us better consumers in our transactions. But now we want to know, how can we make the blockchain technology a commonplace? Our next moderator is going to lead the conversation with our wonderful speakers. Let me introduce Dr. King Ao. He's Executive Director at Financial Services Development Council, who will be speaking with Shirley Kwong, Managing Director, Head of GTRF Sales at HSBC, Plata Yip, Vice Chairman, Alliance International Investments Limited, and Jennifer Tang, FSDC Policy Research Committee Member, Chief Executive Officer at Alipay Financial Services Hong Kong Limited. Please welcome them.
Hi, good afternoon, ladies and gentlemen. I'm sure you've heard a lot about blockchain all day, but what I would like to share with you today with our distinguished panelists is how blockchain technology can be applied to real-life situations, and right. So maybe I'll start with Shelley first. Right, you specialize in trade finance, is cross-border activities. So how have you been using blockchain in your business?
Okay, we actually do see an uptake of blockchain technology application in different industry, and banking is the same. So HSBC has proactively participated in a number of blockchain application, proof of concept and use cases. One of the very recent use case that we've done is actually a trade finance using Enbridge, and which is CBDC. So I think some of you have already heard in the previous panel talking about central bank digital currency. It's a pilot done by the 4 central banks, and we finance trade finance. We provide trade finance to our customer, which is a Hong Kong listed construction company who went to pay its counterparty in China using CBDC. Now, participants actually have very positive feedback on this technology, citing transparency and speed. So we do think that using blockchain technology together with central bank involvement, there will be another wave of financial innovation, especially for cross-border trade settlement. Okay, we also have other use cases. We've used blockchain technology to help with documentary trade transactions. By this, I mean letter of credit. So blockchain technology is actually really good. It gives track and trace as information go from one counterparty to another. It provides end-to-end real-time transparency, therefore reduce the need for reconciliation. Plus it increase the speed because we do not need to process paper documentations anymore, which can take up to 48 hours for us to process normally. Now we see a lot of success in blockchain technology in trade finance, but we have yet to see it scale to the extent that we would like it to be. And that's partly because of blockchain technology not being the lack of interoperability of blockchain technology. So I think, like what the previous panel have said, collaboration is very important. We need to put in collaborative efforts to make sure that we can enjoy the full benefit of blockchain.
Thanks, Shelley. Yeah, you mentioned about cross-border payment, right? So I have to ask Jennifer, right? So with Alipay, you process quite a lot of cross-border transactions globally. So can you share your experience with us?
Yeah, thank you, King. Blockchain actually attract a lot of attention recently. And Alipay actually is quite an early adopter. Talking about Alipay Hong Kong, back to 2018, we already roll out our blockchain services, and exactly that is the cross-border payment. And at the time, we try to combine the beauty of blockchain and also a mobile app to provide a very convenient, user-friendly service, focusing on helping those foreign workers who need to very frequently remit money to their hometown. And so at the time we actually launched what we name it as the first in the world, actually the first from a wallet to wallet using blockchain technology payment. From Hong Kong Alipay, you use Alipay Hong Kong, and then the counterparty actually is the Gcash in the Philippines. So by using the blockchain technology, our user in Hong Kong, they can just write on their app, which we provide them a 7 days, 24-hour service. No need for them to queue, and no need for them to compare the rate, because actually our exchange rate is pretty attractive. Reason is because with blockchain technology, we also reduce the layer of intermediaries. Okay, so we can reduce the transaction fee, and so it's very convenient to them. And has been since 2018 June, already been almost more than 5 years. And I will say that this is the first of the kind of this kind of service in Hong Kong. And so even we always talk about blockchain, personally, because blockchain is a very complex technology. So it always, for technical people, maybe they will think, it's simple, but for non-tech people, we always think it is very complicated. But from I would say a service provider, we are not looking at that. We actually just provide what kind of service to our user. Say, for example, our user, those foreign workers, they use for that. For them, it's just a few clicks, then they can enjoy the service. So they will not say, oh, this is blockchain or not blockchain. It is transparent to them.
Yeah. Actually, both of you mentioned efficiency, right? I would like to highlight that. It can be actually a green technology. On that, I want to invite Plato to share your experience.
Yes, thank you, King. Well, our company has been working on a technology to utilize blockchain networks and also associated technologies such as identifier systems, DID, distributed identifier, to actually help, if you like, mark the carbon credits or carbon sink and put them on chain so that this system allows people or stakeholders to monitor and validate the data on chain by themselves, among themselves, so that for example, this carbon credit generated in an industrial park in China, for example, we captured it, preferably through IoT, then put it on chain, migrate on chain, and then we ask the certification body to certify that particular carbon credit, and then all the way migrate to carbon exchanges. It can be in Beijing, can be in Hong Kong, can be in Singapore, can be in Saudi in the Middle East. And regulators, producers, buyers, certifiers, all stakeholders can come in as a node to actually, as I said, monitor and validate these data, make it transparent, and make it easy to use, so that compare with the original way of doing things, whereby if you are trying to certify carbon credits, you have to find auditing firms, for example. You do it over the counter.
Yeah.
You spend a lot of money, time, and a long process to make it happen. But utilizing blockchain system, utilizing this consensus computing framework, and on a real-time multi-party oversight environment, we can really make the registration, certification, and migration and trading a lot more easier than the traditional way. I think this is the beauty of blockchain system.
Yeah, we all know that the application is very broad, but also, Shirley, you mentioned there's some challenges, especially when it comes to cross-border in terms of standardization and all that. So, what are the other pain points that you have in mind, and what challenges you see ahead of the more broader blockchain adoption?
Thank you, King. Yeah. Trade finance is not rocket science, but it is quite complex. When we talk about a single trade transaction, it's not just about good, but it's also about the contract conditions, documentation, and money, right? And when you talk about counterparty that's involved, right, it's not just the buyer and the seller, but you're talking about the banks, insurance company, you're talking about freight forwarder, shipping companies, port. If it's cross-border, then you're talking about maybe customs, and the list goes on, right? And to make it even more complex, with the recent drive of increasing the resilience of supply chain, we see a lot of buyers actually increasing the suppliers list. And by that, each of the category will be multiplied by the number of suppliers that you're dealing with. Yeah. It is precisely because of this that technology is actually very important for us to simplify and to increase transparency. But it's also because of this complexity that makes it very difficult. The bar is very high because we need everybody to be on a single platform or at least a connecting platform before we can share data efficiently. And at the moment, blockchain is still quite fragmented. We call them blockchain island, and we are looking, to have that connection be in place. Now, if we look at digitizing trade, right, we think that there are 4 criteria that we need to fit in. The first one that needs to happen is a common data standard. Say, for example, if we can have a universally accepted e-bill of lading, that would be a big step forward. The second point would be a common or comprehensive legal jurisdiction that will underpin this standard. Now, on this point, right, we have some inroad. With UK's ETDA, so the Electronic Trade Documentation Act, it actually gives e-trade documentation the same legal standard as paper documentation, provided that it meets certain criteria and is in the UK. But because most of the trade are still cross-border, right? So we need cross-jurisdictional collaboration in order for us to be able to roll it out across the world. So this is the second one. The third one is about platform. We need to have a single platform or at least a connecting platforms that allow us to share data across the world. And the fourth one would be whether the participants in the ecosystem is willing to act upon these data. Say, for example, providing trade finance or movement of goods, right? So on this point, HSBC has been proactively working with market participants to try to be ready, participate, and try to drive adoption. One of the case in point would be our involvement with International Chamber of Commerce to talk about innovation and digitization.
Yeah, thanks. You mentioned data quite a few times. So, Jennifer, you're an expert, definitely, on that, because you handle a lot of data every day. So, what's your take on that?
I think we all understand for data, it's a very sensitive topic. If we just look at locally for data, it's already talking about how to protect your customers' data because it involves the data privacy, how much information you should get from your user or your merchant, and how to utilize that, how to store that, how to maintain that. It's already an issue. And then you just think about, we talk about cross-border data and cross-border data transfer, and you involve more than one jurisdiction. So you can imagine, it creates lots of issues. But of course, we heard this morning that we understand, talking about Hong Kong and mainland China, they are working on very hard on that, and probably in the GBA, they will have some more, I would say, a clear guidelines on how to use it. And so I just want to talk about, another thing is that, we need to encourage more, I would say, growth of this adoption of blockchain. We need a clear regulatory framework. Not only just talking about data, but a lot of things, a lot of guidelines, because blockchain is still a very new technology. And so you involve about, say, like compliance, how to protect your users' information or asset, how to transfer those data, all these things. If we can have a very clear framework, it will actually, I think first, as a service provider, we know how we need to do, okay? Because we know, we actually, for service, we like rules and regulation because we know how to play with that. And second thing is that we also, I think from a user side, they also happy, they will get the peace of mind. They understand that it is under, well regulation. So I think this is very important. Other than, I think, Share talked about this interoperability is also another issue. This non-standardization is also a big issue. Yeah.
Yes. On that one, actually, I want to do a bit of marketing. We actually published a paper on data connectivity early in the year. And also, I understand a couple of companies in Hong Kong that have come up with these interoperability solutions. But when we go back to blockchain, China is really leading the rest of the world. And Plato, can you share your experience on that front? Because you have been operating in that environment for quite a while.
Yes, thank you. Yeah, so our company is working with the CAICT, China Academy of Information Communication Technology, under the Ministry of Industry, Information and Technology. They have come up with the Xinghuo Lianwang, and what outside China they call Astron. Now the idea is not just one single blockchain; it's a network of blockchain. It's an infrastructure it's an industrial infrastructure that allows cross-chain, different layer by layer, different blockchains work together. It's a massive investment by the central government. But the idea or the architecture is similar to what the Europeans are doing, the European blockchain service infrastructure, whereby the EU government created this infrastructure to service member states. In China, the Chinese government using similar structure to serve provinces in China. So under this architecture, we also work with the CICT to utilize a technology called DID, the Distributed Identifier System, which is basically under the concept of self-sovereign identity. Now, we talk about data. Now, the idea is Web3. And the Web3 condition, we don't want to share data. Okay, people want to avoid sharing data, even not to mention about cross-border. Okay, that's a lot of headache. But how can you mark the data, give the data a digital ID, and then making it trustworthy, and then stay the data locally? For example, you're dealing with a bank. the bank will ask you a question using encrypted format, and you are replying that question using an encrypted format under a smart contract format. And you would naturally know this answer is accurate. And then saving the data transfer issue. And we try to avoid centralized cloud, that kind of thing, but we use blockchain system. So, but in order to do that, you have to have this, as I said, a very big blockchain network that allows this kind of atomic swap or data communication, that kind of thing. So starting from the ID to give data and identity, and then migrate on chain, and then to a specific blockchain, to a network of blockchain. All these kinds of things are happening in China and in Europe. And I think China and Europe is leading in this direction.
Right, so sort of a federated approach.
Yes.
Yes, right. No, I don't, I know we have limited time, so I want to look forward. So what are the opportunities for blockchain adoption in your line of business? I'll start with Shirley.
Okay, thank you. We actually see that international trade finance and supply chain finance are undergoing transformation. There are a few factors that are fueling it, including very challenging economic and geopolitical situations, evolving commercial models, sustainability, digitization, and innovative approach in terms of financing. Now, trade finance at the moment is still, you can call them very clunky. We're still very paper-based, right? We are talking about 28.5 billion pieces of paper floating around on a daily basis supporting global trade. That's how bad we are. But we have made inroads. Say, HSBC has recently rolled out a new proposition called Trade Pay, whereby we allow our customers to draw trade finance using data, saving them the hassle of printing out pieces of paper and submitting to bank for us to process. So this is one of the main things that we've done. The other thing is also digitization also help with increasing security. If you look at paper documentation, there are two problems, right? One, it can get lost during transit, right? The other thing is it can be fraudulent. And if you look at International Chamber of Commerce data, they actually estimate that about 1% of global trade, which is about $50 billion on an annual basis, that are fraudulent. So digitization can help increase security and gain trust between market participants. Now, the technology is already here, right? So we need to push for adoption. Say, for example, in Hong Kong, guarantees are still very paper-based. A lot of the people will still only accept paper guarantee submission. But we can actually leverage on blockchain, use smart contract, and issue e-guarantees. There are a lot of use cases outside of Hong Kong already. Say, for example, in Thailand, BCI, the Thailand Blockchain Commercial Initiative, or in Singapore, NPC, the Network Trade Platform, that will also allow participants in those countries to issue e-guarantees. So from our perspective, we need to continue to press on, try to ensure that we will use technology to help us grow. There's no U-turn about that.
Yeah, absolutely. And Jennifer, what about you? What's your view on that? Yeah.
Okay, I just want to highlight something which is just very new. Just 2 days ago, Ant Group, together with HSBC, we have an announcement, talking about, we successfully, the two successfully together test, this tokenized deposit. This is, although this is run under the sandbox, this is not the real, the productive, but we just try to explore. The objective is, this is to aim to explore the potentials of the deposit tokenizations in enabling the always-on and also real-time treasury fund movement for corporate, within the bank. And for this, we got the support of HSBC, and if we prove it successful. But I just want to highlight this is only the beginning, because we believe by using a tokenized deposit, actually that will help, for the global, especially for big corporations, for the global treasury fund management. And for this test, this initial test, it encompasses from issuance, transfer, and also redemption of the tokens. And according to my colleagues, they actually expect that in the coming year, almost every quarter we will have a one upgrade in this. We will continue to work closely with HSBC to explore other usage or deeper understanding how can this tokenized deposit use in other areas. So hopefully we can have more news to show, to share. But I just want to highlight that you can find that blockchain is already a very mature technology. But it's just how can we apply that in real life. And from the industry, it is not only one company. We are starting to work with partners, with different, or even, with different countries to work together to see how can we adopt or apply this technology to a much more, to give a much more impactful way. Yeah.
Thanks. Plato, you mentioned about the national blockchain system on the mainland, and also I believe China has the largest voluntary carbon market in the world. So what's your prediction on that front, how Hong Kong can play a role in that?
I think Hong Kong is the market. Hong Kong is the international financial center. Now we mentioned about we can actually capture the carbon credit and migrate to Hong Kong or to any other countries with this DID technology. People would trust. But we need a more trustworthy environment so that people, banks for example, they would trust, oh, this is a good financial product because it's backed by data, real data. It's not just about data, by the way. It's also the algorithm has to be transparent. On a blockchain, you can publish your algorithm, and also how do you do internal auditing? So these three parts, data, algorithm, and internal auditing, it's all transparent on the blockchain system. That can facilitate not just the carbon, but also on ESG data. When we talk about ESG, greenwashing, all this kind of thing, we can talk about, we can facilitate green insurance or climate insurance, for example. These are new topics. And Hong Kong as an international financial market, we are positioned to function like this, and we're positioned to make new products, new financial derivatives even, based on the real, as I said, the real data. And in China, they're promoting this, they call it 数据要素, okay, the data element. If you have the data element, then you can transform it into any other assets, digital assets that you want to structure, you want to finance, and you want to really sell to people. I think the opportunity is huge. What we need is really a federated system with a high level of trust. I'm not talking about a government or a centralized system. It could be a DLT, it could be a blockchain network that automatically provide that kind of trust in it. So that is something I think really new, and it needs the whole community to work together. Banks and or our infrastructure provider, government, policymakers to work together to make it happen.
Yeah. On that note, another piece of marketing for me, because we will be publishing a paper on blockchain adoption very soon. And actually, in that paper, we'll try and lay out what sort of government policies will need to be implemented to encourage the development of blockchain adoption. And actually, you mentioned about some of our legal framework that is not up to date in Hong Kong. That definitely will need to be addressed, and hopefully, we'll get some incentive from the government as well, to encourage the adoption of blockchain in the financial market. So on that note, I would like to thank our distinguished panelists for their insightful sharing. Thank you.
Thank you. Thank you.
Thank you very much to Dr. Au, and as he said, to all of our distinguished speakers. And we were talking about the blockchain. We all want to know what is the fresh new perspective between the private blockchain and the public blockchain. This is an opportunity to create the network of networks. And to lead the conversation, I would like to introduce our moderator, Tristan Miner-Jones. He's the head of digital assets at Angel Hub. Together with Juval Roos, he is the co-founder and CEO of Digital Assets. Also, we have Amy Chang. She's VP Sales at Fireblocks. And we have Adi Ben Adi, founder and CEO of Applied Blockchain. So please welcome them on stage.
mic issue. Ladies and gentlemen, welcome to Hong Kong FinTech Week. This panel discussion concerns the ever-evolving landscape of blockchain technology and its impacts onto the world of finance and innovation. I'm thrilled to have three distinguished experts with us today, each offering a unique perspective on the B2B intricate web of blockchain connectivity and its vast implications for business and beyond. So much has been written recently that focuses on the sort of B2C angles of crypto and blockchain. However, on this panel, we're going to look at the B2B use cases and characteristics. A lot of this has been happening out of the limelight. It certainly isn't making the front cover of the New York Times. But real change is happening, we're going to dive deeper into. So, without initial ado, I'll ask each of the judges to briefly introduce themselves.
All right. Good afternoon, everyone. My name is Amy Zhang. I look after sales for Fireblocks here in APAC. Fireblocks provides secure digital asset infrastructure for over 1,800 customers, starting from your two men and women in a garage trading crypto, all the way to some of the largest financial institutions in the world. So on our journey in supporting clients as they get into digital assets, the question always asks, private blockchain, what do I need? What do I need to do? So hopefully today I get to share some of those use cases with you guys.
Thank you. Adi?
Adi Benawi, I'm the founder and CEO of a company called Applied Blockchain. We spent the first 7 years of our existence developing blockchain solutions for clients, initially on private blockchains, then moving to public, and really grappling with some of the issues that our clients found on private blockchains. And finally, we've now developed a solution called Silent Data, which we think solves the private versus public issue.
And Yuval?
Yeah, I'm Yuval. I'm the co-founder and CEO of Digital Asset. We've been in business for 9 years, primarily helping institutional clients digitize and tokenize real-world assets, and recently introduced a new layer one called Canton, which I'll share a lot of information in terms of what is the potential of this technology.
Thank you. Now, the title of this panel is Public versus Private Blockchain, so I'll ask each of you a short question to sort of introduce the topic to the audience. So, Adi, in a nutshell, what is the difference between a public and private chain?
Yeah. So, first of all, I'll say that from my perspective, the value of blockchain technology comes through decentralization, right? So having many parties, multiple parties contributing to the security of a ledger. That's really the ground level. Everything else that we hear about and talk about is built on top of that. In a public network, we have an open distributed ledger where in many public networks, anybody can host an environment that supports this and plays a role in it. In the private networks, we have a closed environment where we might have one or a number of institutions, enterprises, who might host a node and they'll be connected to each other, but usually not to the outside world.
Thank you. And Yuval, is it as binary as private or public?
I think till today it was pretty binary in the sense that if you take what was just said, at the end of the day, a blockchain is a network. And when you started talking about private versus public, it's just that private blockchain was a network that you were required to be invited to participate in, where a public blockchain was something that everybody could connect to. I think that the challenge between and why they got created is really privacy and ability to control access, especially when you think about regulated applications. I think, and especially when we introduced Canton, we really think that from a user experience, the public network is really where the world is going, but you had to solve for the privacy and access. So we don't believe that it has to be binary. As long as you can satisfy privacy and control, you should be able to have a fully public network that allows private applications to run on top of it.
Thank you. And Amy, can you explain why some projects might require different solutions in terms of their blockchain implementation?
Sure. So I can give a couple examples. On one hand, we've got regulated institutions who typically will look at private blockchain as their preference model. So an example of that would be we work with Tel Aviv Stock Exchange. They want it on a private blockchain, but interesting story here is they actually started building initially on VMware's blockchain platform, but as we know, VMware shut down that blockchain division, and then overnight, they actually had to go and find a different blockchain to build out their project. So now they end up building a Hyperledger Basin, right? So that was an example of a regular institution that would do something on private, because in their view, the data storage needs to be fully managed, they need to be in control of those data, and these were the requirements from their system that they needed. On the other hand, we've also worked with other financial institutions before where they're happy with public blockchain. So the couple of the stablecoin project we did in Australia were all done on a public blockchain basis. Now, I think where those two worlds really converges from a use case perspective is what the hot topic today, which is permissioned public blockchain, where folks can take advantage of the public blockchain network, but at the same time control the privacy issues that the two folks I mentioned earlier. And I think those use cases, if you think about money-related CBDCs or tokenized deposits, these type of assets probably will live in some shape or form on a permissioned blockchain in that sense.
Okay, and now to sort of open a question up to the three of you. What trade-offs do these institutions have to make when faced with this dilemma?
One of the big issues we saw with private blockchains is a company would come along and set up and create a solution, and then try to get other industry players on board. Now, this idea that anybody who wants to participate has to host a node is a massive issue. It was a massive commercial blocker for most of the projects that we worked on. And in addition to that, the idea that in order to retain data privacy, you have to host a node, that goes together. So a lot of these projects that we worked on ground to a halt commercially for that reason, and so they failed to deliver value of the blockchain technology. The solution that we've come up with actually separates decentralization from privacy. So we're using a technology called zero-knowledge rollups, and we also use a technology called hardware enclaves. The rollups allow us to roll up to a public blockchain like Ethereum. So the decentralized network and all the good stuff, the composability, the integration with decentralized finance, and some of these other things, you get from the public network. But you don't have to reveal any of your transactions or data. Everything is anchored in the public network as validated through proofs, but we don't have to share the data. Conversely, in the private environment, you only need one node. So you no longer need to go to counterparts and say, you now have to install this in order to have privacy or to participate in this. Everybody can share a node because there's a hardware secured environment that ensures that nobody sees the data, not even the host. So that's how we think we've created a solution where you no longer need a private network in order to do these types of transactions.
Yeah, I think for us, the type of organizations that we work with want to put everything on chain. Because at the end of the day, I think that what we've seen to date is that a lot of the tokenization initiatives are really not tokenizing the asset. They're actually doing everything off-chain in the traditional way, and then everything that they put on chain is really just a very simple claim against an asset that sits off-chain. And by doing that, to be honest, it's really good marketing. It's really good experiment, but it's really not solving the problems and the inefficiencies that exist within assets. Now, if you want to put everything on chain, a lot of people talk about encryption and all kinds of other ways to obscure data, but the reality is that the fact that you replicate the data to participants that have nothing to do with a transaction is a risk that you're exposing your clients to. So for us, when clients talk about tokenization of real-world assets, one of the most important requirements is I don't want my data to exist at anyone's node unless they are required to have that data. So first of all, this notion of public chains today, of full replication of data, whether it's encrypted or not, is a big no-no for most regulated entities. So for us, one of the first thing that we wanted to solve is the ability to look at a transaction, be able to compute who are the relevant stakeholders to that transaction, and make sure that Canton, our layer one, only replicates that data to the relevant stakeholders. That's one thing. And then the other one, with the type of use case, and I'm happy to explore them, is really scalability. And scalability without being exposed to really expensive gas prices, which was another thing that was very interesting for people with private chains. But again, when you go to a private chain, as Adi said, you're giving up a user experience that almost kills the go-to-market of that product. So it's really how do you balance those things together to have like this user experience where all of the browsers can be connected to you, but you could still have privacy and scalability without having to have really high gas prices.
For sure. I think one other thing I'll add on is you also, when you choose a private blockchain, the company that decided to build whatever application on top, whatever asset they want to issue, you're almost like saying, I know exactly what the future state will look like, and I will design these sets of solution based on, and I will be the only person who is able to build onto it, right? Versus when you go and choose a public blockchain as a base layer to build your product on top, you're also giving yourself the option to say, hey, maybe other folks have really great ideas. They want to build on application on top of the asset they've issued. And this is really relevant in the corporate Web3 world. A lot of these corporates, as they come out and decide, let's say, I want to do a loyalty program. And in day one, they understand what that loyalty program could look like. But actually, if you look at the future state, you want to give yourself the option to maybe collaborate with other brands and other corporates. And if you strictly do a very closed loop ecosystem, then it's very difficult. And I think it really tells you, because financial institutions, I would say, like private blockchain, because they actually know who the counterparties are. In general, banks know who the other banks are. They can know who the known player. Very unlikely that the other banks will, either a new bank comes out or decide to do something really different. In the corporate world, that is quite different, right? You can have tens of thousands of people doing the same business as you that you probably could collaborate with, and knowing on day one what that future state will look like is really difficult.
Absolutely. So all of you have been in this space for quite some time. What changes have you seen over that time of your career in the blockchain space on the institutional standpoint?
I think, first of all, the architecture of the private blockchain as we know it was designed around 2016. And there's been a lot of technology evolution since then. We've got these zero-knowledge proofs, we've got these enclaves, we've got these roll-ups now. Now, by putting those together, you can have a new model. Right? You don't need to have this model where you go to your counterparts and they have to host a node. Because going to your competitor, we saw so many projects fail in aviation, in automotive, in banking, in supply chains, where a company builds this solution, they go to their competitor or to their partner, now host our system. They have to go to the IT department, you have to get a budget, you have to, I mean, good luck with that. If that's how you're going to roll out your system, that's going to take a long time. What we can do now is we can offer a SaaS type engagement. You can go to an enterprise with a blockchain solution that has full data privacy and controls, so all the regulatory controls that you want, rolling up to a public blockchain, and have a SaaS type deployment. It's here, and you want to use it, just use it like a SaaS, and you don't need gas fees or any of that.
So I would say the really interesting development that's happened in the institution is when they first started experimenting with blockchain, they had a lot of requirements. These are like hard requirements that they must be met, and whatever system that they choose must meet those requirements. But actually today, most institutions are figuring out a way of trying to deliver value, right? And in their world, and I see this change happening to a lot of clients, those requirements, if they recognize those requirements are so stringent and the value is not really there, they either just wouldn't do the project outright to begin with, or they will actually more likely to go back to those requirements and adjust them because they know that a project that they get somewhat of POC funding for, if it doesn't really take off, deliver real world value, by next year, budget cycle is going to get cut pretty easily. Yep. And you see that happen this year where the real world economy is struggling in a sense where a lot of places are cutting fundings in general in technology. Yeah.
The other thing is that when they hear blockchain, they think about a lot of things that they see on the public chain. Think, oh, we can create assets, then we can have decentralized finance, we can integrate it with stable coins, so we can do payments. They assume that they can do all of these things, but if you create that in a closed environment, that's very, very difficult to move to that next step.
Yeah, I was going to say what Amy said, slightly different in the sense that we don't talk to our clients about blockchain anymore.
Yeah.
And I think that to me is the biggest sign that we're now moving to a point, first of all, that clients, first of all, have an appreciation for the technology. They understand the technology, they understand the differentiation, what the technology can do for them, and most of the focus right now is around what is the value that you create. So we actually, in most of our materials, the word blockchain doesn't even show up because, again, at the end of the day is, are you going to create a business that is either going to save money, reduce risk, or increase revenue opportunity, right? Like, at the end of the day, that's how every business should look at their projects. And to me, that was the most important sign over the last few years that we're starting to talk about what are the positive changes that we're doing to our clients, where 4 or 5 years ago it was like, okay, let me explain to you how a smart contract works. Let me explain to you what is consensus. And that is pretty much completely gone.
Is that a move towards mass adoption, do you think? I mean, certainly mass adoption is normally used for the sort of consumer side, when a lot of those statistics are actually sort of pointing down at the moment in terms of like wallet interactions, obviously prices too, and even developer activity.
So listen, at Digital Asset, we primarily focus on B2B and in some cases B2B2C. So those type of statistics don't really drive us on a day-to-day basis. But I think you know, a lot of people, when they look at this technology, and I think that the industry as a whole has a lot of fault here. There have been so much hype in the early days that now people are saying, and generally speaking, people are becoming less and less patient, generally speaking. So it's like, where is it? Where is it? Where is everything that you said is going to happen? But I always like to remind people that when you look at a lot of large institutions, when you look at what are the top agenda items for them, it's still moving to cloud, right? So people still even haven't moved to public cloud, let alone in this technology. So the way I think about it is these large institutions inherently are slow. They have all of the processes in place to make them move slow because they have a lot to lose. And that's just a reality. But if I kind of take a step back, I mean, we have one client that is close to digitizing $1 trillion of bank loans. We have another client that is processing $100 billion of repo a day. We have 20% of the US physical nat gas market running on blockchain. And these are not small projects. And you're just going to see over time, these things get bigger and bigger. So from my perspective, is there mass adoption? I don't know how even to define it. Is there mass adoption to cloud? I guess people will say yes, but you still see big institutions that are moving very critical systems to cloud. So I think that there's enough substance to prove that the technology has value. There's enough examples out there of organizations that are driving value from the technology, and it will take another 20 years of institutions moving more and more processes to this technology.
I think on my side, I'll give you guys a really easy example, right? So when I looked at 2 years ago, the #1 customers on the Fireblocks platform that had the most amount of wallets was a retail lending platform, okay, crypto lending, right? That was, today, it's a corporate. It's a large corporate that is running a loyalty program on top of Fireblocks, and they have the most amount of number of wallets in a single tenant, right? And that could show you where we see the opportunities growing when it comes to mass adoption. I think in the last 2 years, we talked a lot about financial institutions, and they're important. They're, you know, critical infrastructure. They're banks day-to-day that we deal with. But then you look at now with corporates coming to this space and really building on top of this technology, that to me is where a lot of the mass adoption will happen, where they are delivering real-day applications that you and I are using on an everyday basis and improving that user experience in our daily world. And that gambit of customer, it really expands away from, you know, 100 banks in the world to now 100,000 corporates doing everything under the moon, right? And that to me is really the sign of where we think mass adoption could happen, not at an individual level, but expanding upon the corporates that could be doing something.
So my background, I'm a technologist. And before I started the company, I was working for a bank. And the reason I got into blockchain and started the company was because I could see technical efficiency in the technology. So I think if it's used correctly, which it isn't in many cases, right? I think in private blockchains it's limited, for example. If it's used correctly, it can bring about some tremendous technical efficiencies. And for me, that's what it's all about. So we do talk to our clients about blockchain. We're called Applied Blockchain. And you know, the space has gone up and down, and we've had crypto and come and go and so on. But I think at the end of the day, the technology works. And it does deliver efficiency if it's deployed correctly. And I think we're still very early. There's still a long way to go for many institutions to actually use it in a way that it really delivers value and the industries are transformed. But I think it's there. The tech does what it says on the tin. So, you know, I'm happy to promote it and to talk about it because I think that's what it is. I think that's where the value is.
Fantastic. I guess I'm very conscious of time, but as a sort of final question to sort of each of you, what role does regulation play with these decisions too?
So I think on my side, we can see immediately the change when regulators come out with clear guidance and the level of movement that institutions will be willing to take, right? I think the difference between, let's say, a retail mentality is, well, if regulation is not there yet, I'm happy to do and operate. Institutions don't think like that. Institutions will not operate unless there's clear guidelines to this extent of how I should store these assets, what does it mean on my balance sheet, what does it mean from a reporting perspective, is there going to be tax implications? There's a lot of nuance to that. So to me, it's absolutely critical for these institutions to come in, because ultimately they need clear rules for them to operate, and then therefore they can actually push these products into more of a production setting, right? And I think that's where things are going. Another element I would say is the regulator is engaging with the industry. We're engaged with them in terms of updating on the technology. They themselves are also learning and being proactive in that learning journey as well, which those two things combined together I think is really, really important.
Yeah, it's the same. We took part in the FCA sandbox in the UK with the technology that we're using for silent data. So it's about showing the regulator, taking them through it, and seeing what's possible with the technology now.
Yeah, I'll be a bit contrarian here and say that if you put crypto aside, which is bearer instruments, which is why you need companies like Fireblocks to really protect them, the regulation is very clear. Mm-hmm. If you are a broker-dealer, the rules of how you manage your assets are very clear. The rules of who you allow access to these assets are very clear. So where we actually work with regulators is make sure that they understand the nuanced difference between just using the technology underneath the hood to run traditional assets versus bearer instruments. And therefore, we have right now about 45 clients that are building these type of applications. 10 of them are already in productions with a few $1 trillion of assets have been digitized. None of them had to go to a regulator and say, I need new regulation to take this application into production. They did have to go to regulators, no different than how if they use MongoDB or a Postgres database and wanted to bring a new service, they need to make sure the regulator is up to speed. They understand what they are doing. They need to show that they have the rule book. They can follow all of the rules. So from that perspective, they did exactly the same. And 10 of them are running for multiple years now, applications in production, and it's all going well.
Yeah, I would say data privacy also is really I think a lot of people think financial regulation, but actually as we go into a lot of real world examples, more of the conversation now is had around data privacy and how do these corporate comply to the local requirement. And if you think about GDPR and those type of regulations already exist in place, and how does blockchain help them to achieve those, or are they going to get them to situations where they're not compliant?
I think the regulation at the moment in some jurisdictions also forces you down certain technology routes.
Yeah.
Which mean that you compromise maybe some of the, let's say, good stuff that you have on the public blockchains. Mm-hmm. So I think there is room for regulation to become smarter, let's say, so it still offers the protections that are needed, while getting the benefits, the actual efficiencies of the technology that I was talking about earlier.
Right.
Awesome. Guys, thank you very much for our 3 wonderful panelists.
Yeah, absolutely.
Thank you.
Thank you, Tristan. Thank you to our panelists. Wonderful insights. We are in the finish line. 3 more sessions. Very interesting sessions, because our next session is going to tell us how to avoid algorithm bias. This is the talk of the town too, because without all the AI, blockchain, and how can we not fall into that biases? Leading the conversation, I would like to introduce our moderator, Winston Chang. He's the global co-head of technology, media, and telecom at Global Banking, HSBC. He will be conversing together with our speakers. We have Connie Lang, she's a senior director at Microsoft. And we also have Terry Cho, partner at Alpha Intelligence Capital, and Kwantai Ye, he's partner of Kiming Venture Partners. Please welcome them on stage.
Well, thank you everyone for joining us this afternoon. For the next 25 minutes, we're thrilled to have these three experienced operator and investors to share with us their AI experience. Obviously, in 2023, with the advent of generative AI led by ChatGPT and OpenAI, clearly Microsoft is a big investor in OpenAI. There's been a lot of dialogue around the use of AI, but also the opportunities, but also the challenges and the dangers of AI. Maybe, Connie, if you could start with you to share with us how Microsoft thinks about it from an operator perspective in terms of how you deal with customers and innovation and working with OpenAI on this initiative.
Thank you for having me, and happy to share. I think since we launched OpenAI in February, it's nothing less than AI, OpenAI every day. I think at the very senior level, the opportunities is quite obvious. We have been hearing a lot from the CEO, from the board, from the CXO that we've been talking to, from customers and also from partners, that this generative AI is going to be a game changer, it's going to transform their business. And as Microsoft, I also think that we believe AI is a defining technology. It's something that is going to really change, reinvent our industry. So I think the opportunity is really great. It is thinking about whether you're thinking about front office, middle office, or back office is going to be having an impact. But at the same time, I would say the challenges is also come through because it's all about change. And the reality is we are in a very highly regulated industry, and change is not necessarily something we're very good at. And being innovative is also not something we're very good at because of the risk-averse appetite of our industry. So I would say the challenges is really about how do you manage that change? How do you manage the people, the process, and also the skills that we need in terms of adopting? So I would say the execution and adoption is our challenges in the market today. And I think the earlier panel also touched on the regulations. How do regulators look at Gen AI and, in terms of approving some of the scenarios, the usages that we put forward? I think that is really going to be a game changing, and the change management culture is also very important. So I would say from our perspective, we'll continue to invest as we have been. And the launch of our M365 yesterday on the Copilot is a hit. And I'm sure some of you have experienced that, which is awesome in helping our productivity. I would say we will have to continue to embrace, and we'll chat a little bit more later on, how we can help the whole ecosystem to embrace this technology to help us accelerate the adoption and drive the business impact.
And Quantai, you've been investing in AI in China for over 10 years, and of course, investing in China generally for well more than that. What do you see in terms of the AI companies in China that are operating there, in terms of, what are some of the clear guidelines in terms of what this disruptive technology may be something that you wouldn't want to touch as an investor?
I think being in China for now over 19 years and investing in AI for over 10 years, my experience in China is that in terms of regulation, China actually has some of the more strictest regulations in the world, actually, especially lately when it comes to data security and also access to consumer data, especially. So as far as I know, China is the only place that I'm aware of that actually, in terms of releasing large language models to consumer users, actually needs to be going through regulations. So currently, for example, OpenAI is not accessible to China, not only because it is not accessible anyway, but China does not allow it to be accessible to its nationals. And more recently, Beijing has a regulation that released only 7 models to be tested by consumers through a form of an app. So the consumer can easily access to it. And out of the 7, I believe 5 of them are coming from very large companies, such as BAT's, Baidu, that kind of companies. And 2 of them are sort of venture-backed. One of them is backed by us, but it's also a Tsinghua University funded research lab. It's called Zhiyuan. And then so all the leading academics of China and working with the government very closely and working with the data sets that's to be sanctioned. So all in all, I think China, in a way, helps us avoid some of the danger, perhaps, in dealing with them because the government decides first. And then at the same time, we've been also evaluating AI technologies even prior to Gen AI in areas that could harm humans. For example, we've been investing in autonomous driving for 7, 8 years now. One of our companies called WeRide is a leading player in China. And so far, we have been very careful in terms of making sure actually what we do is safe. And we are basically, when it comes to autonomous driving, any human-related casualties simply cannot be allowed. So we do a lot of work to make sure that all the learnings is taking place.
And Terry, Alpha Intelligence Capital invests effectively, exclusively in AI. You have offices in the US, in Paris, and I think more recently in Singapore. So you, unlike Quantai, you're exclusively focused outside of China. What are the differences that you see in terms of what Quantai just described in terms of the operating environment? And in terms of the companies that you invest in, what are some of the guidelines that you follow of what you want to see or what you don't want to see?
Yeah, so as a global investor in AI and machine learning, we have, so to your question, we've both been a benefactor and also challenged by the current scene. So generative AI has really phased into the world in 2020, at the end of 2022 and now 2023. We have been a benefactor in ways that, since we invested in deep tech AI since 2018, our portfolios has also been acquired by some of these tech giants. For example, we have sold a music generation company to the largest company on the planet, and we have also sold a company using transformer in drug discovery to BioNTech. So our portfolios, which has adopted generative AI techniques early on, has clearly been exited, acquired by the tech giants like Connie's company, Microsoft, that are buying AI to stay relevant. At the same time, the challenge with the plethora of AI in this year, we see a lot of capitals are being poured into AI companies, whether it's from the more conventional, for the lack of a better word, AI technologies, to the most hyped up area, which is generative AI. So in a lot of ways, the current capital deployment, maybe Quantai has seen it before, quite similar to what happened to Web 1.0. Lots of hot capital, making valuation extremely high and uninvestable. At the same time, a lot of these companies might not survive in the longer term. So as an early stage investor like our VC, our job is to differentiate the survivors from the rest of the pack.
And so where are you seeing the opportunities in AI in terms of investing, particularly as it relates to maybe FinTech as well? Where are you seeing in terms of that combination of AI with FinTech in terms of opportunities? Which areas do you like?
So in terms of, in big sectors and industries like FinTech or in healthcare, my view is the biggest inefficiency is in information misalignment. So, and this is an area where AI can really help. It ranges from, LLMs, understanding contextually the information to just leveling information flow within organizations in a more automated manner. So I think one that is most obvious to me in FinTech is certainly data security. I just had lunch with the chairman of a very large bank today, and all they talked about is cybersecurity and data security. Because for banks, for institutions who handles a lot of private data and information, the security of your information and data is your first and only fortress. So within our fund, we also invest quite heavily into cybersecurity companies. So more than a quarter of our capital is deployed into cybersecurity. And thankfully, they've all done really well as we're very deep into the AI differentiation and product. So IBM has also acquired one of our portfolio named Reactor. We exited pretty much 7 months after investing. And for companies, tech giants, whether it's IBM or companies that are acquiring these cybersecurity portfolios, it's because of the automation that they bring or the operating leverage that AI technology enables within a very traditional sector like cybersecurity. So for banks, I think, or any type of security in the future, in the AI world, you must or you can only rely on AI products to remain relevant.
So Kwantai, you mentioned that you have also invested in mobility, obviously a big driver of AI for autonomous driving. What other sectors do you think AI is really relevant for the stuff that you've been investing? What are the drivers of AI to advance other sectors besides the mobility sector?
Actually, I equate the AI to be even bigger opportunity than the internet, actually. Because the internet, essentially, although it has made tremendous progress for the world, but it only touches the online world. But actually, I believe at this moment, from now on, that is, the whole world is going to be digitized, and then the real world and also the online world basically merges. And then so it's essentially, I do see AI applying to every facet of our lives going forward, whether it's in driving, whether it's in eating, whether it's in education, whether it's online or offline. And whether it's in the operating room of a hospital, right? The AI can tell the doctor, maybe you shouldn't be cutting right here, and maybe the procedure should be doing something else. So AI, to me, helps everything. And actually, at Qiming, we are investing in AI, primarily in the areas of healthcare. And healthcare is actually in terms of both in terms of treatments, as well in the discovery of new chemicals and also new drugs. And even nowadays, with the treatment psychologically, with AI type of programs, app-like programs to help with the mental issues. Nowadays, there's a lot of unhappiness, mental hatreds, or simply issues that young people cannot deal with in this world. And I do believe such treatments, digital treatments, can be very helpful to the mindset of the young generation. So all in all, and we also have robotics for the automation. And nowadays, I think with AI, the robots can be much more seamlessly programmed. Unlike the traditional, very hardcore programming where it's actually done by codes, but nowadays I think AI can form the codes and can visualize the movements of the robotic arms through the four-dimensional space. And so all in all, I do think that the embodiment of AI can be in everything, and we are actually investing in everything.
Clearly, you mentioned healthcare just now, and one of the biggest areas of beneficiaries for AI. But at the same time, when you are making investments into these type of companies, what would you advise the entrepreneurs in terms of what areas not to cross, particularly in the healthcare space with the data?
Okay, I think we are, when it comes to ethics, healthcare ethics, for example, the mixing of genes, human genes, for example, that's actually an area that we do not cross. We tell our entrepreneurs not to cross. I think that's a very, very dangerous space. In terms of healthcare, we fully believe in the benefits of the science itself, but we want to be very careful that there should be a higher cost in terms of making a drug that saves life more than just the money itself. And we very much wanted to make sure that our entrepreneurs know that there is a better cause in terms of putting people's benefit first, then the treatments second.
Connie, you're focusing on the financial services sector as part of the OpenAI product for Microsoft. What specifically in this space are you providing in terms of capabilities to benefit the consumers or your enterprise customers?
I think it's, as you said, mentioned, right, AI is really for everyone, is for everywhere. And just to give you some examples, we have been working together with our partners, and some of them are FinTechs. In really, like in less than 32 days, we were able to transform the contact center agents. So typically, when you onboard a contact center agent, it's about 3 months of training. We were able to reduce it to a month. And then we also were able to do real-time assist. So when we are having a conversation like a contact center, the Gen AI actually will be able to analyze the prompt and tell you what you should be talking, how you should be answering from the database or from the documents, and also what product you should be pitching in real time. And this is something that we have been able to save them 30% of their call handling time, 25% of performance increase, and also, you know, some of the, I would say, complaint also is reduced. So I think it's quite impactful. You look at in our history, trying to do something in 32 days is impossible, right? But we were able to actually do it in the last 2 months. So I think this is just an example of how we think that Gen AI is going to help every industry, particularly in financial services. So be it this is customer service, or we are helping you summarizing, making the content for your pitch book to your sales, your RMs, or relationship managers, all the way to the middle office where you're talking about automation, you know, the workflow, and also summarizing in terms of your risk and your compliance documents and all of that. So I think the application is really about how you can really use a human language, because we're not developers, but how can you really use our own language to try and actually have a machine to work for us and bring the intelligence so that an average person become an expert. I think that's really the speed and how we're helping. So I think by and large is really every element that can actually embed AI. One of the things that we've done at Microsoft is we try to democratize AI as well. To your point, right, some of them need to be really how I can empower everyone. So democratizing AI means that I can actually help you with your PowerPoint. How can you become a PowerPoint expert? How can I analyze your Excel? How can I ask a question and you bring me all the intelligence on the data that you've created? And also how can I automate, like in a Teams meeting, if I'm not attending the Teams meeting, I can summarize the call for you without you wasting 90 minutes or 1 hour to listen back to the call. I think a lot of those tools is now available, and those tools is also available for our FinTech partners who can now bring solutions and applications to the market. So I think that the opportunity is really huge, and I think every small to big complex problem or innovation, you can really start with that.
I'm going to put you a little bit spot here. It was very interesting that you mentioned your product would enhance the training speed of the data center person rather than replace the data center person completely, which is a big worry today, right, in terms of the AI development going forward. How does Microsoft think about the balance between enhancing versus replacing?
That's a good question. So I think one of the reasons why we call it Copilot and not autopilot, because autopilot means you're basically automatic straight through. There is always a human behind it. So our Copilot is basically giving you the idea, like for example, I can draft an email for you, I can create a PowerPoint based on a Word document, and it's for you to really cut time, and you can analyze it, and you can, you know, have a final view, and then you send it out. That's one way of looking at it. The other thing is there is a balance between how much you can automate and how much of the complexity that you need a human for. So what we are trying to do is let's move all of those, I would say, repetitive tasks, and then you can really have the human to do more complex problem where it's out of the system, something that you really have to navigate, and something that you need to bring your experience and insight. So the automation part, I think we can actually streamline. So to give you another example, right? Some of the analysts who spend a lot of time, like 70% of the time doing market research, 30% of time dealing with them and actually meeting customers. We now reverse it. We actually can help you with 70% of the time meeting customers, and 30% of the time is what you use to spend 70%. So it's really doing more with less. I think that's the concept of how I can help make the human more effective, and also doing something that you like to do that actually is bringing your intelligence and your intellectual property, but really something that a machine can replace, you can actually automate. So I think that's the way we should be really helping our organization to be more productive and effective, but not replacing the human.
Switching gears a little bit, AI clearly, as Quantai said, it's a massive opportunity, maybe even larger than the internet itself. Where do you see the other tangential opportunities that AI might benefit? For example, there's a lot of saying that data centers will be explosive growth because of the need for AI and their processing. Where do you see it? Maybe start with Quantai.
Yes, we do see a lot of opportunities, both in terms of data centers and also in terms of the infrastructure softwares that's being used by the AI data centers, and also, of course, the semiconductor, the GPUs itself. Currently, as the GPU power keeps going up, the training cost also comes down. One example is, I think about 2 years ago, when OpenAI released GPT-3. At the time, we believed that one training costs about $13 million. However, when it comes to GPT 3.5, and we believe that cost actually went down to about $1.5 million. And that's because through the efficiency of the model, but also primarily through the power of the GPU itself. Simply the additional power of the H100 of the NVIDIA, over A100 is that times of the efficiencies. And also in terms of the infrastructure software, right now training a very large model actually is very computational intensive, and as I mentioned, very, very expensive also. However, we also believe that one thing is about the large language model companies, foundation model companies, that having billions of dollars. Everybody hears about Anthropic raised billions of dollars, and Microsoft invests in billions of dollars into these companies. But most users of these AI models in the future, we believe, are not going to be such huge companies. But even for them to use them well, and for them to use inference, and the inference cost needs to go down as well. So recently, we invested in a company which is making software that allows for, when using inference, it allows for model compression and also model acceleration. And compression basically it reduces the complexity of the model from like the billions of parameters down maybe a 10x, and then reducing the time. And then the acceleration, meaning using the GPUs more effectively, so the GPU computing power will be faster. So all in all, we believe there's a lot of things that we're doing that's tangential, but still very beneficial to the world.
Terry, what about you? What are you seeing?
Yeah, so exactly right. Like the clear benefactors of capturing the first wave would be data centers, the infrastructure layer as well. And when you hear about, essentially the LLM is creating a new ecosystem, there will be new winners, and also there will be new losers of that wall. So there are new type of infrastructure being created. You might have heard of companies like Pinecone, which is a vector database that is only a product of LLM. And we are also looking into currently a lot of companies that do not have enough cloud assets or are paying extreme prices given the supply chain bottleneck on chips. So we are actively looking into these newly created area that's coined by the LLM era. For example, we have recently invested in a company called Extostellar in the US. So that company essentially helps companies reduce their cloud cost by up to 75%, predicting workloads and moving them around. So a company like that in this era has grown more than 10x in a few months into multi-million-dollar revenues. At the same time, there will be new losers, like I said, just in the case of Copilot. They has destroyed so many code generation companies that are not Gen AI proofs. So it is indeed a pivotal time, and the tables are moving. So I find it very excitable, and I think I'm very lucky to be at the forefront to see the future through AI investments.
Well, we've got a little bit less than a minute left, maybe a quick lightning round of summary. Where do you see AI where do you wish AI to solve in the future?
I think it should be hidden. It should be everything that we do will have bundled AI in it, and we don't even see it.
Okay. Guantai?
I really do wish AI can reduce the disparity of access to knowledge, and I believe that it can do that if it's done well.
Terry?
Maybe AI will save us before they kill us. Whether in drug discovery, in healthcare, the companies that were acquired by BioNTech, our portfolio is now solving oncology and other problems. And I think we just have to come together as an industry, whether on regulation and other parts, to solve for the future.
There you go. AI will save us before it kills us. So thank you so much for your time today, and I think that finishes our session today. Thank you.
Thank you very much. And I also really like that pointer of let's see AI, feel it, touch it, everywhere. Thank you very much for our speakers and our wonderful moderator. What is the future of stablecoins? And our moderator, Wang Xu, he is the president of ZA Bank International, is going to be talking with our speakers, Matt Zhang, founder and managing partner of HiveMind Capital Partners, Lawrence Chu, chairman of VSFG, Ralph Ng, vice senior analyst, project and infrastructure finance at Moody's Investor Service, and Andrew Wong, executive director at UBS. So please welcome them on stage.
Well, can everybody hear me? Great. It's good afternoon, first of all, and it's always a difficult thing to do a panel after AI discussion, but we're going to try to make this as exciting as possible. Thankfully, we have a very topical things to chat about here, which is stablecoin. Before we go into that, my name is now Wang Xu. I'm actually Matt, and I'm the managing partner and founder of HiveMind. We are a Web3 technology and digital asset investment firm headquartered in New York with offices in Boston, London, and we just announced yesterday that we are coming to Hong Kong, setting up our Asia headquarters over here. So super excited about this. And I guess today we have a great discussion with a very interesting topic about non-US dollar stablecoin. And with that, I would love to introduce you to fellow panelists. So maybe starting from Andrew, you want to introduce yourself and you can quickly do the round.
Great. Hi, everyone. I'm Andrew from UBS, and I've been looking at the tokenization topic for us of real-world assets for the last couple of years.
Oh, yeah. Hello, everyone. My name is Wang Xu. I'm the president of Zhongan International. So we are a relatively new institute in Hong Kong, and our mother company is China's first online insurance company, and also the leading FinTech company in China mainland. We came here, and right now we are operating a virtual bank named ZA Bank, a virtual insurer named ZA Life, and also we have a technology exporting company running SaaS business for insurance companies called ZA Tech. We are believers that technology can finally reform the financial world, and we have been practicing on that direction.
Hi, everyone. I'm Lawrence Chu. I chair VSFG. VSFG is Hong Kong SFC's first digital asset management licensed company. We got the license in 2020, working very closely with the SFC to get that. We have launched a BTC tracker product, as well as a crypto hedge fund, amongst other things that we do. So really glad to be here, and thanks the organizers for inviting us.
My name is Ralph Ng. I'm a vice president from Moody's Investor Service. So part of my role is to cover a portfolio of credit ratings of the China and Hong Kong credits. At the same time, I also covered some of the initiatives from Moody's, especially the decentralized finance and digital assets.
Well, welcome everyone. I guess, look, I mean, everybody knows Web3 is exciting. It's up and downs, obviously, but I think very encouraged to see a lot of the latest development from, the region, from the regulators in Hong Kong and the government. And from there, I think on-ramp, off-ramp is obviously one of the first things that people need to figure out, hence the stablecoin. In the last few years, in the US, in Europe, and also in this part of the world, a lot of people trying to try different ways to approach this. So I think that's the reason why this is such a topical, exciting, but also very complex thing. I mean, from all your, our panelists' perspective, I guess you must have done a lot of thinking and also done a lot of work from your own organizations. So maybe we're starting, with Andrew, talk about, what's that has been with UBS, and we can also ask
Sure.
Wayne from ZA and go from there.
Yeah, definitely. I think from our perspective, we kind of look at it as an observer, but a very intent observer, and I'll get into why that is in a second. So for us, our main focus, at least in the digital asset space, is looking at tokenization of assets, so bringing assets on-chain and having them transact in that kind of ecosystem. But that means that for every dollar of asset, notional, we bring on-chain, there's a flip side to that transaction, which is a payment. And so for the full benefit in the new business models, cost efficiency of kind of tokenized assets, you have to have an on-chain cash solution. So from an issuer perspective, when we look at kind of creating these products, we need to also equally think, how is it going to be transacted on the cash leg, because it's the other half of the transaction. And so in this sense, I would say we look at it more in context of other types of on-chain cash instruments. So you have, CBDC, you have potentially tokenized deposits, deposit tokens, stablecoins, and it's really trying to understand from the market perspective, the clients, the customers, which of these form factors for the payment are they going to be adopting? Because ultimately, it's going to sit on the other side of the transactions that we do. Maybe just the last point I'll mention is, the way to think about it is, most money today is a liability on a balance sheet somewhere. And with stablecoins, you're kind of testing the design choices of a lot of different types of money. So you're testing kind of which issuer, which balance sheet it sits on, what type of assets that can back it, even the maturity mismatch with some of the stablecoin consultations around redemption windows of stablecoin different than deposits, which are on demand, as well as the technical wrapper that you're putting around it in the ecosystem you're introducing it into. So it's a very interesting topic from the perspective of you're giving kind of new levers for people to potentially try to design what could be a very different type of money. And we need to be, at least from our perspective, on top of those types of developments.
Right. What do you think, Wayne?
Well, actually, that's interesting to share. So we are the holder of both virtual bank and virtual insurance license. And we get asked about a lot of customers, even before our business is up and running, what kind of virtual currency we can trade on your platform. Actually, that's a wrong interpretation of the virtual in virtual bank, virtual insure license. It's not the original intention. But starting from last year, when Hong Kong government announcement on the crypto hub position, we position ourselves as the enabler for that movement. And right now we are cooperating with OSL, Hashkey, OKX, and all the others to help them to fit into Hong Kong regulation schema. And also we are helping the other Web3 startups. So what they heard all this news come to Hong Kong and they want to be served by Hong Kong banks. But well, frankly speaking, it's still a not so easy experience for all these startups. So we support them. We want to really contribute back to the community. And also together with SFGS, we have been piloting with Hong Kong MA for the Hong Kong dollar tryout. And we have been pioneering in that direction within regulation. One reason is because we are true believer of technology can finally change the financial world. Another reason is we had been in the startup mode in the past couple of years. We know how difficult, how harsh the environment is for innovative companies in such a market like Hong Kong. It's very crowded and very developer. And we do want to provide them with a very basic support so that the facility is there so that they can up and running. So we will keep our commitment to the community and try to be their enabler in the Web3 ecosystem.
As an entrepreneur and investor yourself, Lawrence, how much can you share about the work you have done in the space?
That's right. So along with ZA Bank, VSFG, we've been very honored to work with the HKMA on that hypothetical Hong Kong dollar CDBC project, which I think has given us insights as to the difference between deposit tokens, stable coins, and CDBCs. So I think there's going to be interesting announcements happening over the next couple of months. And kind of rewind back to maybe chronologically my experience, even prior to VS, we've been very active in the digital currency crypto space, starting with Kinetic back in the old days. And remember, I mean, this is kind of why the technology is used. I looked at some of my old ledgers, and we funded investments in ETH. We funded a lot of ETH. And I was like, oh man, if we had a stable coin back then, we would have a lot more ETH today.
Right.
But fast forward to now, with the CDBC projects and central banks, traditional financial institutions getting involved, it's kind of right to say that stablecoin can be that crypto killer app, right? In not so much of a crypto sense. I think what we mean by that is mass adoption is around the corner. And stablecoins as a technology has that ability to help bring the consumer into sort of a digital asset world without a lot of complexities around it.
I think that's a good segue to my next question. I want to starting with Ralph on this one because so important, so exciting. But what's the challenges? Like, you must have done a lot of work within Moody's and on this topic, like from a design perspective,
Sure.
then from an implementation perspective. What's the challenges the industry is facing today, both locally and globally, I guess?
Sure. I think just before I talk to that, I think we covered a bunch of companies from corporates, financial institutions, and we are seeing more interactions and interlinkage between the traditional finance and the digital assets. And as we are seeing, say for example, the collapse of SVB, we are seeing the impact of the bank collapse will also affect the cryptocurrency market and vice versa. So we are thinking about, number one, the key risk that we are looking at a stablecoin as the DPEG situation. And in theory, we say stablecoin is stable, right? But it's not always stable as we see in different kind of market incidences. And to give some example, I mean, Luna, we always see that, and then SVB is another example, FTX is another one. So we are thinking that for the stablecoin, the implications of these kind of DPEG market incidents will affect the effectiveness of stablecoins being, as you mentioned, being a kind of a media to transform some of the wealth or money from the retail to the crypto market. And I think it has happened and also affect the investor confidence. And the second thing that we think about is the DPEG situation that we saw will also affect the stable coin, whether it is a security or investment, which is for speculation, or really a future of money. So these are the questions that we always think about and whether it will also affect our rated issuer. And then the second point that I want to highlight is as we see a lot of these kind of incidences, we are thinking that for the regulations, which is quite critical, but not yet there yet. To think about the regulations, we are seeing that a lot of the disclosure is not that transparent to the investors, and whether investors are really understanding about the stable coin. So think about stable coin, we think is always pegged US dollar 1 to 1, but in reality, is it really the case? And is it backed by reserves, collateral, and does the market or investor understand or have the transparency about the reserve? I think these are the questions that we always think about that could become the challenges for the sector. But at the same time, we also call for regulations and also opportunities for us to review the challenges that we are seeing.
I'm going to put you on the spot a little here. Do you think there is going to be a timeline framework that Moody going to go and rate every single stable coin out there at some point? I mean, you guys obviously is very credentialed financial service, player, and a lot of the credibility of the industry is relying on that rating system. Do you think it's going to be a possibility?
I think it's possible. So far, we haven't seen really a stable coin issuer come up. We do rate Coinbase, the exchange, but I think number one is whether there's an investor needs for that rating. Second thing is in terms of the stable coin, I think a lot of the companies are still private, and whether or not they have appetite, I think we still need some time to observe.
Right, but Lawrence, you talked a little earlier, but when you're trying to think about doing this stablecoin project at some point, what's the challenges you think we'll be facing, I guess?
I think some of the challenges are around legal status, and particularly in Hong Kong, there's a discussion about licensing regime. So there's pros and cons of that. And of course, running a regulated firm, we would be under that kind of regime operations. I think that's more from a legal side, status side, rating side. And then I think obviously the clear challenge is commercial viability. Like how do you compete against USDT, USDC? How do you compete against other currencies? And to some of the questions that you may be alluding to later on, that non-USD stablecoin versus USD stablecoin. So there's, I think, a lot of market considerations as well. So those are some of the challenges that we will see that will come up.
Actually, let's just jump into that question right away. Like, I'm gonna, ask this one for Wayne. Dollar stablecoin, non-dollar stablecoin, are they complements, substitutes? Are they parallel systems? How does ZA thinking about servicing these two? Are they going to be different ways of treatment? What do you guys think?
It's a very good question, and the simple answer is probably competition, cooperation, both. But if we narrow down the question to Hong Kong market itself, actually the question might be changed to whether a regulated stablecoin will be formed in the right time, in the right format, and supporting the growth of a Hong Kong ecosystem, and whether that ecosystem has the capability to finally grow into the global and try to build a new type of animal, so in the existing world. So to explain a little bit more about that, if you look back to the exchange licensing in Hong Kong, we know clearly that's going to be a different approach in Hong Kong's regulation on crypto world. So it's a preset world, and in that world, stablecoin is no longer part of the question we need to answer to build the crypto world. It's actually the foundation to build the crypto world. So, and right now we already have an exchange here running by regulation. And without the answer to the stablecoin, that's not going to take off. So that's a challenge Hong Kong is facing right now. And also the stablecoin is not just to answer the question, a lot of concerns right now about USDC-DT's accountability. I'm pretty sure regulation will put a lot of emphasis on that. And on the other hand, I would say how to make this regulated native stablecoin has a wide accessibility is another part of the challenge. So we don't have the answer, but we need to move on and try to figure it out.
So are you saying that the one way to think about competitions is dollar versus non-dollar, but the other way to think about it is almost regulated versus non-regulated? Right. And as long as you regulate in the right way, in the right jurisdiction, then a bank like ZA would want to work with them to figure out on-ramp, off-ramp solution?
We are in the front line of that.
Right. What do you think, Andrew?
Yeah, so I think on the currency question, right? At the end of the day, Hong Kong is a global financing hub. So products you issue and you transact will be in many different currencies. Right. So I think in that sense, not only dollar, Hong Kong dollar, other currencies, like it all, the financial market here covers all of these cases. So I think at the end of the day, practically speaking, you probably need to think about in more of a collaboration, different approaches that could exist here. But yeah, I think that being said, I think the challenges to the points earlier, it does raise a lot of other questions though, because at the end of the day, you're creating a new balance sheet to hold the money. And so it's important to set kind of the standards around how that will work. And I think that's where the regulation comes in to set kind of some of the minimum bars. So around disclosure, around kind of practices to kind of lift everything up to a minimum. But I think the question after that is, so what happens if it's very successful? Because you have a lot of then flows that could potentially move from other types of balance sheets that hold money today into this type of product. And if that happens very quickly, that's kind of a financial stability consideration. So I think there's a lot of factors here to kind of think through. And the answer is probably you need a little bit of everything for it to really take off in this market.
Let me ask this question in a slightly different way. It's obviously public knowledge that UBS recently announced these tokenized money market funds and other initiatives. Like in the local market that UBS is going to serve globally, is it more likely one day you guys will be using a local currency-based stablecoin? Like for example, you have in Hong Kong, or you think there's more likely to be used a dollar-based stablecoin for products like this going forward?
I think my answer would be probably closer to what I think Wayne was saying, which is, and I think Lawrence as well, which is as a regulated institution, it almost is a prerequisite that kind of what you're working with has some kind of licensing status. So I think that kind of clarity, whether it's, again, the dollar, not dollar, it's actually more, regulated, not regulated, that's probably the key distinction. Once you have kind of clarity from that, from kind of who you're working with, it then becomes a more practical discussion as to the kind of universe that you could potentially start to consider.
Okay, then I guess if that's the answer, like it's actually a natural way to lead to my next question is what gave Hong Kong or one day a Hong Kong dollar denominated stablecoin any advantage, right? Like, we talk about regulated and non-regulated. If that's sort of where you guys seeing the line being drawn, not exactly dollar versus non-dollar, how would any stablecoin project that coming out of Hong Kong with a very constructive, transparent legislation one day be able to take on the stablecoins out there, which already having 50, 60 billion under management? And maybe we start with Rolf on this one.
Sure. I think in terms of the currency, US dollar is still 90% or 98% of the market capitalization. Legal status probably is one of the reasons, the clarification of the stable coin and also the use of the currency. I think the next question is about the demand, whether there is a requirement for that kind of currency. And I think we are actually going to that direction. The SC Venture and also Deutsche Bank, they announced their universal digital payment network. I think it's one way that kind of the market is actually having the proof of concept that this is actually growing. But I think the questions still fall under whether, there will be a requirement, say for example, FX exchange going forward, whether we'll be using a lot of cryptocurrencies or stablecoin as the medium of exchange rather than the traditional market. And I think this kind of transition will require a lot of clarifications from the regulations. And if it is not a must, I think there is a journey for companies or the financial institutions to make changes to switch to using the cryptocurrencies or stablecoin. And the second thing is whether using stablecoin is stable, as we mentioned, the risk and also the challenges of the market.
Right, Lawrence, what do you think? What is Hong Kong's role and advantage in this?
It's a good question. I think echoing what Wayne was saying, the government probably has a strategy to think about Hong Kong's position as a financial center of the future. And not just financial center of the future on traditional assets, but financial future in a digital world. So a lot more other asset types like tokenization or IP or whatnot, and how it's priced. That's probably a greater goal and larger future. And if it could be priced in a Hong Kong dollar stable coin, which right now, of course, is essentially pegged to US dollar, right. It gives that legal status, on-ramp, off-ramp, and stability. But I think more so than that, again, just to throw something out there, just because we're in Hong Kong doesn't mean we just have to issue a Hong Kong dollar stablecoin.
Right. Of course.
And back to your question about why something other than US dollar, well, global trade is not just US dollar, right? So the global trade in the world is significant percentage in non-US dollar and growing. So there's probably a role for other currencies from a direct perspective on a payments side. And then going a little bit more minutia in Hong Kong by itself, the local payments is like a $25 billion amount already.
Right.
So obviously you can argue the competition between a stable, a CDBC, FPS, and whatnot. But there's definitely a market, right? It's not a few $100 million, let's not waste our time. Yet there are these kind of markets that allow for this technology to exist.
Right. I'm going to actually finish. We have about 1 minute left. I'm going to keep the most complicated question to the end for Wayne and Andrew, like regulators' role in this. Can they do more? What else should they do to help this stablecoin thing moving forward in Hong Kong?
I would suggest mainly on how. So as we just discussed, we can see there are challenges in global. That could be opportunity for local. So, but moving forward is not a easy piece of work. So it takes a lot of wisdom and also a lot of adjustment. So I would say Hong Kong's advantage is not just the late movement in crypto world, but also the condensity of the city. So we have people from private sector, public sector, we have tech people, financial people, we have auditing team, we have a different perspective of expertise. So we need to build a really close-knitted community and keep moving together with the government, the regulator. It's not going to be a 1 month, 2 months job. It's not going to be some quick money to make. So everyone need to commit to that and keep pushing. And no need to try to come up with a well-defined regulation schema from day one, but we get started first and try to build a really positive feedback, and we can keep moving forward. That's the most important of all.
Andrew, what do you think, real quick?
Generally would agree. I think probably the thing I would say to think about from a regulatory perspective ultimately is, you either set the rules around the creation of it, right? That could be a role, or you set the rules around its classification and how it's transacted if it's issued somewhere else. I think maybe understanding or looking at one, both, or the other, or both actually would probably help to get the discussion going in Hong Kong.
So closing remark, by end of 2024, I just want a yes or no answer. Do you think Hong Kong will have a very clear, detailed stablecoin legislation out there? Looks like it's not that quick.
I think yes. I mean, it has the consultation paper and has kind of giving a timeline 2023 and 2024. I mean, we've only got 2 more months to end 2024, probably next year, and we see some more clarity.
Yes, a draft legislation.
Yeah. Wayne?
Yeah, definitely looking forward to that, but hopefully not too detailed for version 1.
Andrew?
Yeah, I would say the same. I think something definitely.
Well, on that optimistic note, I guess we can thank you for everybody joining us today. It's a very exciting discussion. And awesome. Thank you, everyone, to join us today. Thank you.
Thank you very much. You wanted to close it with a very controversial question, but it's good that our speakers are so knowledgeable they can give us some answers. Well, next session is the last session of today, day 1 of Hong Kong FinTech Week 2023. And we are going to be unblocking the opportunities for an innovation, end-to-end life cycle of innovation. And I want to ask again on stage our moderator, Shane Ackroyd. He is the president of Digital Assets. He will be talking with Kurt Eldridge, Regional Sales Director of Broadbridge, together with Georgina Locke, Head of Market Development at Hong Kong Monetary Authority, and also again, John O'Neill. He's the Managing Director, Head of Digital Assets, Global Banking and Markets at HSBC. Welcome them on stage.
Great. Our panel actually wanted to take that last question of the previous panel, so that'd be a good place to start. But welcome everybody, and thank you for joining us this afternoon. My name is Shane Ackroyd. I'm president of Digital Asset. We're a technology company. We help our customers build applications on blockchains. And earlier this year, we launched our own chain, Canton, which I know we've heard a lot about today, and I'm sure we will tomorrow. So this afternoon's topic is DLT unlocking opportunities in capital markets, end-to-end life cycle innovation. And what we're going to do, I think, is have a brief linear journey, starting with capital markets origination and new issuance, going through to financing and looking at post-trade services. And so before we get going, let them introduce our panelists. So Georgina.
Hi everyone, I'm Georgina from the Market Development Division of Hong Kong Monetary Authority.
Hi everyone, John O'Neill. I'm Head of Digital Asset Strategy at HSBC.
Good afternoon, Kurt Eldridge. I am Regional Sales Director for Broadridge.
Okay, thank you, panelists. So HKMA is our regulator and a globally significant and regional leader when it comes to the issuance of traditional bonds. From a DLT perspective, the HKMA has been leading the way largely through Project Enbridge, a multi-CBDC cross-border payments platform alongside the BIS, the Central Bank of UAE, PBOC, and the Bank of Thailand. And of course, we have our Green Bond New Issuance Initiative. And so what I want to do is start with Georgina. Georgina, if you don't mind, let's dig a little bit deeper into what's been done to date from a new issuance perspective by the HKMA as far as DLT is concerned. How does that fit within the HKMA's overall new issuance platform, and why start with green bonds?
Okay, thank you. So the HKMA has been working with the government in various different market initiatives, and green bond is one of them. And when we are thinking about, when we were thinking about doing green bonds issuances, we really wanted to do two things. First is create demonstration effect and raise awareness, and at the same time, we also want to help establish benchmarks for the market. So in terms of the tokenized issuance, which we did last year, how it fits into the whole green bond land program that we're doing, I think for us, when we were thinking about it, it kind of was a natural fit for us being, FinTech and green, both being important policy initiatives in terms of our work in market development. And so we wanted to leverage on the work that we've been doing in green and also green bond issuance to really test out this using this new technology in terms of issuance method. So when we were doing the tokenized bond, what we wanted to do was demonstrate the application of DLT in an actual real capital market transaction, and also through this exercise try to explore the efficiency gains that and also the transparency, enhanced transparency that this technology can bring. So when we're doing this, we started off with 2 years ago with a concept testing together with BIS Innovation Hub. And building on this study, we started preparing the tokenized government green bond that in the same year, and which we successfully completed it this year. And this was the world's first tokenized government green bond. And by leveraging DLT, we managed to shorten the settlement cycle from the typical T+5 to T+1. And also we managed to test the full suite of lifecycle events on-chain, from primary issuance to settlement of secondary trading and also coupon distribution.
Great. And what's next?
So in terms of what's next, I'm sure some of you might have heard this morning, we announced that we are looking into a second issuance, which through this issuance, again, we're trying to explore some new features that would be useful for market reference. So this time we want to try a fully digitally native issuance. And also at the same time, besides the work that HKMA is doing, we also look forward to seeing more use cases in the market and the market participants trying out new features, such as how to use using technology to help track impact reporting and their issuances, and also repo transactions and things like that. And so in August, we also issued a report based on our first experience, and really to share some of our experiences in the first tokenized issuance, and to raise awareness and also serve as a reference for market participants to look at when they want to, when they're thinking about issuing tokenized bonds in Hong Kong.
Right, and we all had dinner last night. Actually, John, you weren't at dinner last night, but the rest of us had dinner last night, and we were talking about repo, very early stage. You're going to hear a little bit more about that in a second. But watch this space as far as Hong Kong's concerned. So, John, over to you now. HSBC, obviously another global leader when it comes to DLT. What I think would be good to do is to actually start very broadly about HSBC's digital strategy. How does tokenized new issuance fit in? And then tell us all a little bit more about, or a little bit about Orion and initiatives that you've done to date.
Yeah, thanks, Shane. And I think those questions very much linked to what Georgina has said already. I think big picture at HSBC, the way we think about this is it's both about transforming existing markets, but also we believe the opportunity to add new products and services into a market environment. And if we think of our overall business footprint, the way we view that, very high level terms, is we deal on our trading floor all the time with a whole set of dematerialized assets, as people might think of them, bonds, equities. And we've built a platform, the one you referred to, Shane, HSBC Orion, which issues and makes available for trading primary, secondary digital assets. And we've started with fixed income. And we think, and the market seems to think, that's the right place to start. But we don't think that's the end of the story. We think lots of other assets in dematerialized form can be created on a platform like Orion, and we're looking into that. But we also see real demand from our customers for tokenizing physical assets, because it's certainly advantageous for some assets to entirely put them on a blockchain, but for some assets like gold or energy, of course, people want the real world physical asset. So we've actually, as one of our announcements in the last couple of days, we've tokenized gold. HSBC is a very big gold custodian. And we've put London Loco Gold, which is the global standard, in a tokenized format on a chain. But that refers back to physical bars in a HSBC warehouse. So that's another example of the kind of developments that we're seeing, and we think there's more to do there. I think it's also obvious that there's a lot to do in custody and other parts of the business. So for us, it's a very broad set of solutions. It's about transforming existing markets, as Georgina said, making them more efficient, principally around settlement cycles. I also think if we make markets more efficient, we're going to see not just the processing advantages, that's important, but not just that. I think what we'll start to see is the way some of those markets work today. We might see significant market structure change, which will be, I think, predominantly for the better. So there's a lot of exciting things to do there. And I think also, Shane, I'm not going to take too much time to say this now, but we might come back to it. I think when we're creating those kind of platforms, as you said on the panel earlier, we observe a number of things that are really important, a number of really important ingredients. The first is law and regulation. And I think many different financial centers are improving and clarifying their law and regulation. I think Hong Kong is in a fantastic position. It starts off with an excellent set of laws. But Hong Kong, as in everywhere, those need to be improved or clarified even further, and there's a lot of work happening on that already, and HSBC is very involved with that. So that's the first theme. I think then it's different forms of digital money. So the last panel was on stablecoins. We could talk about those kind of forms of digital money and whether they're ready for these kind of assets at the moment. But certainly CBDCs are part of the mix. We're very involved with that, and there's all sorts of monetary types. And then the final one, which I think is a real differentiator, is public and private networks. So there's lots of conversations on the panel today about whether you should be using public or private networks. And as I said earlier, if anyone was in the session earlier, we think there's a role for both. We think transactions are predominantly financial market transactions on private networks at the moment, and we've built our system around that approach. But we also have public network connectivity, and that's pretty interesting if we want to bring new products into a market environment. So for me, Shane, those would be the kind of big picture way we see it, and there's loads of lessons in that we could drill down to.
Yeah, and we've touched on one thing. We talked about the HKMA obviously being a global leader when it comes to issuing traditional debt securities, and now a leader when it comes to digital securities. The flip side of that, from a new issuance perspective, is of course the DCM desks at firms including HSBC. So HSBC has a significant business issuing traditional bonds for borrowers including HKMA, but also now is a market leader via the Orion platform for digital bonds. So when you're speaking to your DCM team and your new issue desk, how are you prioritizing which issue comes next?
Yeah, so I think it's, it's a classic answer, Shane, but I think it's the case very much around customer demand. So the digital issuance that Georgina talked about earlier this year is the perfect example. We issue debt with HKMA all the time. Of course, we're always delighted to do that in traditional format. But with that debt, us and a group of other banks working as a syndicate, we're involved in that digital issuance. As you said, Georgina, there's another one on the way, which we're all working on. And it's very much to do with whether the issuer wants to go in a digital format or stick with the traditional format. I'd also say, Shane, just to be really candid, is so far we've seen significant digital issuances, but they're not at huge size. They're not at benchmark size. And that's natural because I think issuers want to see the same level of liquidity in digital issuances as in conventional issuances. And you already referred to it, market developments like repo. We need markets, digital markets, which are as liquid and sophisticated as current markets. And that's where I think it's about working across financial institutions, connecting banks, because no single bank will succeed on this alone and no single issuer will succeed alone.
Yeah, and it's interesting because as a technology vendor, we're having to navigate that. We are speaking to traditional financial markets groups, whether they be borrowers or whether they be DCM desks, and we're also speaking to the digital transformation teams, folks such as yourselves. So it's kind of an interesting dynamic there, and some firms actually, both at a borrower level and both at a bank level, actually marry the two pretty nicely, and it's a happy coincidence on the stage. We've got a borrower and we've got a bank that actually do a pretty good job of connecting those dots. As you know, not all the firms do. So
yeah, it's a challenge.
That's another good job done in Hong Kong. So with that, I think what we'll do is move downstream a little bit and talk about repo, DLT repo and Broadridge. Broadridge's DLT repo solution is a market-leading initiative and probably one of the best, if not the best, example of DLT in wholesale capital markets operating at scale. So, Kurt, it would be great if you could describe this initiative and let everybody know what is it all about. Maybe talk about some of the successes and progress to date, and then hone in on some of the challenges of bringing that to Asia.
Thank you, and it's great to be here with the panel today. It's interesting you're talking about a physical world and gold, and when people ask where are we getting our success from, we haven't gone directly down the entire digital issuance. Do we think digital is the future? 100%. Give it 5-8 years. If you're not on the train, you're going to be under that train as it goes over the top of you, for a number of great reasons behind that as well. But where we're trying to work through now is how do you take the digitization of assets, and whilst they're not physical as in the gold, they are still stock, and people refer to them as physical. But it's, no one's running up and down East Queens Road anymore with certificates anymore. So, I think there's an understanding of how do we get from point A to point B. And really where Broadridge has found its success is helping that transition model across from what used to be a traditional process of 2 individual workflows, 2 traders trading, flowing through front office, middle office, back office, custody. It is how do you rewire that process and how do you rewire that plumbing across the financial industry. So that's where we're really finding success in it. We haven't gone, as I say to people, to Web 3.0, we've taken the step to 2.0. And really that's given us an ability to try to navigate both the current processes and the new processes. And we see it really in 2 sides. So we're seeing a really good growth right now in what I call the internal DLT use cases, efficiency plays. And that's really how do we help a bank such as a HSBC immobilize some assets inside their particular legal entity structure, but be able to move that representation around their organization. So, we just spoke with stablecoins before, similarly to a stablecoin, but we're using a representation of an underlying stock certificate. Where it gets more interesting is where you go out into the street. Where is that trading and settlement? And that's really where the DLR platform is starting to accelerate. And I think, as John just said, there's definitely a lot more interest now of banks supporting a more market neutral platform that can have more connectivity, even playing field for people. And the DLT does require a network, and that network grows. Just to give you a numbers breakdown of where we were, we started the DLR about 2.5 years ago. For the first 2 years, it took us 2 years to hit $1 trillion of notional in a day. By the end of this year, we'll hit 2. So we've gone from $1 trillion in the first 2 years. I expect us to double that in 6 months. And with the number of banks we having coming on board, I think we'll see that start to accelerate further and further. From what are we bringing onto the platform? So right now, we've got sort of 5 different trade types that we're focused on, because there are lots of different repo trade types. The first one is the intra-company, a New York against London office. We've now done our inter-company, so we've done inter-company intraday between Singapore and New York, and we're live with that. We've done it between the US and Europe, and we're live with that as well. And then a sponsored repo that we made an announcement about, I think, 2 weeks ago with UBS. We have another bank that's going live on that. Now, why are people doing these things? And I think that's sort of where your question is. And there's really 3 reasons. The first one is a cost play. How do we take cost out of the current transactions that we're looking at? How do you mobilize your assets in one area and not have to pay the clearing and settlement fees? So, we see a lot of those original solutions we were bringing to market were very much around that cost efficiency. The second leg people are looking at is new revenue. How does a bank in Singapore or Hong Kong be able to put its money market out overnight internationally, get a better yield? And we actually have now some buy-side clients talking to bring that on. The third one, which I find probably the most interesting, is more around collateral optimization and risk. So we have a number of banks now, by adopting the practice and having an understanding with the regulator of where their asset is, being able to move their asset faster, having a joint workflow that's being driven by a smart contract between them and their counterparty, and also moving into a faster ability to swap your collateral in and out, actually gives the treasury teams greater control and a more robust process to be able to go back to regulators and have conversations with them as well. So one of our banks actually wants to go back to their regulator and essentially have a conversation once this is in place. Can we get some 10, 15 bips off our LCR, for example? Doesn't seem like a lot, but when you're a $300 or $400 billion bank, those little slivers really do help that bottom line. So we've seen great growth, good value for the customers, and we're really looking forward to expanding it again over the next sort of 12 to 18 months.
Great. Okay, fantastic. Thanks, Kurt. So this morning we were on a panel and we were talking about these broader financial markets initiatives, most of them being single sponsored by a network owner. And we were on this morning with the Hong Kong Exchange as an example. And then the customers or their customers connecting to those initiatives via API, using traditional rails, and sometimes existing UIs, right? So the customers hardly notice a difference. We've touched on a number of initiatives that are currently out there in the market. We've got debt new issuance, we've got equity secondary trading, and Hong Kong Exchange Synapse is an example of that. DLT repo for financing we've heard about, and we're working with Equilend on putting securities lending also on a blockchain. So there's plenty going on. These are all single sponsored projects, all on a chain. Now, we've got many stakeholders that we're dealing with here, but to actually have true vertical integration, all of those solutions are going to need to talk to each other. We're going to need to work across chains, and then facilitate a conversation, obviously, between what's on chain and what remains off chain. And that's going to be particularly evident when we have cash on ledger and we can actually see a path to settling atomically. So my final question to the panelists is, what else is missing for that true vertical integration?
Well, I think we touched on some of the areas, like how I think time is needed for having like traditional practices and processes. It would take time for them to adapt to the new technology. And in the meantime, I think what's important is to have interoperability across, new and existing, on-chain, off-chain, to really facilitate the sort of like adapting process. And also, for this to become of scale, I think like eventually when there are more platforms coming up, more new technologies, the interconnectivity between the two, which you touch on a bit just now, that it's one area that we definitely have to work on going forward.
Yeah, John? Absolutely. And I think it's a really pertinent point at the moment, because I feel like 2023 is the year where A small number of banks, certainly including HSBC, have created digital asset platforms. But if you look at the size of those markets, the size of the debt market compared to the size of the digital debt market, obviously the vast majority is not digital. And people can look at the various platforms and think of them almost as digital islands. They're small platforms which are doing interesting things, but markets are all about liquidity. So the question is, as you said, Shane, is how do they link up? And as you said, Georgina, how do you drive that liquidity and that market development? So your Canton network is an excellent start for that. So we're part of that, as are many other banks and many other institutions. And that's driving technical interoperability. There's lots of other aspects which we need to sort out as an industry. There's risk interoperability. There's connecting different systems in different ways. And I think, Kurt, in your comments there, the way I've heard people summarize from your firm, summarize what you've said is mobility, right? It's about collateral mobility and moving assets. And as you said, I think illustrated very well, we can take existing assets and existing electronic forms, and we can move them better using techniques and products like yours. But what we can also do is create, as I said, natively digital assets which just work in fundamentally different ways. And I think it's all about adoption pathways, because it's not the case that there's going to be some moment where the entire market moves to these approaches. What we need to make sure is we've got the on-ramps and the off-ramps. We've got the connectivity I've described. But then also, and you were touching on it, Shane, the facilitator, I think, to a large degree is money, is digital money, because every transaction has a payment leg. Everything's DVP, everything's delivery versus payment. And you can't transfer assets with legal certainty rapidly if you're not sure that you can pay for them rapidly with payment finality. And I think the CBDC conversation, some of the other digital money types, stablecoins and others were discussed, as that matures, as that gets real, we'll start to see those being used to support digital transactions. And certainly the way we've built our platforms is that our payment rails are ready for those when the central banks or the market in general is ready to use them as monetary types. So I think that's also an important missing piece which is coming into the picture.
Right, good.
Look, I'd agree with that. It also, you've got to look at the standards. For banks to work and operate globally, locally, there needs to be a common understanding of standards. And you were just talking about the stable coins and CBDCs. So we still use SWIFT. We're only digitizing the collateral side on the DLR. And we use SWIFT for a couple of reasons. The bank knows how to consume SWIFT. The bank knows where it will go within its own platform, and there's a guarantee of delivery. All those things that you were touching on. We would do a stable coin tomorrow. In fact, we've got a trial coming up with Digital Asset and a couple of partners on a stable coin. But there's no point getting too far in front of the market. And I think we've got to let the technology catch up, and we've got to get the other stakeholders within the organization of a bank, which I spend a lot of my time talking to ops risk, finance risk. I've got a call tomorrow with the head of legal trying to understand what the legality of a digital asset is. And the real question is what happens. It's okay when things are going well. When you need to break glass, what actually happens? And it's getting some of those other stakeholders in some fairly significant institutions to understand that process of what is the legality of it, which documents are we keeping, which legal processes are we retaining, and how do we justify and guarantee provenance and ownership through that end state if you hit that break glass moment. Yeah. And I think that's the challenge.
And I think that's a great point to finish on. It is all about stakeholders and adoption, and not all of us. It's not flicking a switch. As stakeholders are going to get to that at different times, right? There are some that are more sophisticated than others. There are some that have a better understanding than others. There's some that have got the bandwidth for these projects more than others, right? And I think the solutions that are the ones that work the best are the ones that are incremental. We're showing incremental benefits, all understanding that this is going to take time. So I think with that, we'll finish. Thank you, panelists. Thank you all. And see you here tomorrow, I think.
Thank you.
Okay, thank you.
Cheers.
Thank you, Shane and John, for being on stage with us twice today, and obviously Georgina and Kurt for your insights. And as our panelists said, that's the end of today, Day 1 Hong Kong FinTech Week, Redefining FinTech. We'll see you tomorrow at 9:30. We start with our content, and it's amazing. You want to see what's happening tomorrow. Remember, if you take photos, hashtag download your app with the swap card to continue your connections and conversations. See you tomorrow.